Hello and welcome to CoinDesk Live. We are coming at you from the CoinDesk studio at Consensus 2025 in Toronto, sponsored by MoonPay, the global leader in crypto payments. This is the most influential event in crypto and the #1 event for deal flow. I'm Christine Lee. Joining me to kick things off this morning are my CoinDesk colleagues. We've got Sam Hewitt, Jennifer Sanasi, and Nick Day. Hello, good morning,
Hello,
folks.
hello,
Morning.
hello.
You made it to the desk.
Happy
no
Friday.
hangovers, I hope.
No?
All right, we're very good folks here at CoinDesk, being here bright and early in the morning. We had a jam-packed day yesterday, full of highlights. Sam, what were some of your favorite moments?
You know, the moment that sticks in my head was the closing session with Dave Portnoy yesterday. And especially the story he told about talking about the jail stool token, which he had bought a lot of. And then he basically talks to his audience and says, hey, I'm going to create a coin that I want you to buy, so it makes me more money to buy more jail stool. He tells them, and he says, I'm going to sell it at the high. The coin comes out, it goes high, he sells it, he uses the money to buy the jail stool, the coin plummets, and then he says, I'm going to do it again. And he does it again, and the same thing happens. And then he gets called a rug puller for the fact that he did exactly what he was telling people he was going to do for something he said had no value. And I thought this is such a perfect moment in internet that we are even having this discussion. But also, here's a guy who's got a ton of followers.
Yeah.
He's being really transparent and honest. And Jen and I interviewed him. He's a gambler at heart. We know this. And he just he gamed the system in public, and they still went along with him. And I just thought that was such an amazing story to hear.
You might not like what he's doing, but he is transparent. He is honest about it. Buyer beware. What were some of your favorite moments, Jen?
I mean, Sam just brought up the Dave Portnoy interview we did at the desk here, and we were asking him about his conviction in Bitcoin, and he said he had bought $2 million worth of Bitcoin and stayed in a hotel room next door to the Winklevoss twins, or maybe they were next to him in a hotel restaurant. And he asked them to explain Bitcoin to him. He said when they tried to explain it, he didn't understand it, and he sold it all. And at that time, I forget how much he said
He
it
said
was
it was
worth.
$10,000 a coin.
$10,000 a coin. He sold it all. He said if the Winklevoss twins could have explained it better to him, he probably would have still had all of that Bitcoin and been even more rich than he already is. And I thought that was funny. I like getting those, personal, anecdotal stories from the folks that, we like to follow, we like to hear from, but we don't get to talk to every day.
And I noticed a lot of folks from the audience got to speak with him afterward. Again, folks, this is the place to be if you want to get some deal flow going on and you want to talk to leading players in the crypto industry. Some of my favorite moments, I would say Eric Trump was a highlight. He's a polarizing figure, but at least in the crypto industry, he's all in. He was saying that there was a lot of criticism on crypto, and that aligned, and he could sympathize with that because of the political climate against his family. And he is all in Bitcoin. He wanted to call his company something with American, something with Bitcoin, American Bitcoin. And he talked about how sovereign wealth funds, family offices, corporations, they all want to add Bitcoin into their treasuries. And there's no denying that there is a demand for Bitcoin and the upcoming future of the digital asset industry.
Bitcoin treasuries, I feel like that's going to be a huge, it already is a huge narrative, but
Yeah.
Rumble was at the desk yesterday, and they just bought, I stand to be corrected, about $20 million worth of Bitcoin for their treasury, their video streaming platform. And so it's going to be interesting to see what companies start looking at these influential figures, creating Bitcoin treasuries, and start, gobbling up Bitcoin.
And Nick, quick comment on the latest news that you're hearing on the regulatory front.
Yeah, so I was here yesterday, but somehow spent most of my time talking about or looking at the Senate. We do have a new bill text for the stablecoin bill. The Senate's going to vote on it on Monday evening. This is a kind of a procedural vote. It's just to advance to debate, but this is the same vote that failed, just over a week ago. So the fact that they've brought it back so quickly suggests that senators are optimistic they'll get, past the 60 vote threshold. They need 60 lawmakers, so it has to be bipartisan. But if they get that and they seem confident, then we're going to be on to one step closer to having the Senate pass this legislation entirely.
And of course, folks who missed the stream yesterday, most of the people who joined us at the desk are optimistic about stablecoin legislation passing in the United States. A lot of people who are engaging with policymakers and legislators say that we're going to get it before August recess.
Yeah.
Yeah. stablecoin bill, I think everyone's pretty confident about. The market structure bill, which is the other part of it, we'll see. We were talking about this yesterday with, Marta and Catherine when I was here, and I think that is the one where there are a few more question marks, but so far, I think if they do get the stablecoin bill done, it'll boost optimism for the market structure bill, because it's kind of like, you got past this one hurdle, onto the next. It's not as steep a climb.
Well, folks, we've got one last day here at Consensus. More news to be made. More after the break. Consensus by CoinDesk is the world's leading crypto and blockchain conference, fostering collaboration among industry leaders, policymakers, and innovators. This year, Consensus assembled its largest ever lineup of Canadian Web3 founders, highlighting Canada's outsized role in the crypto ecosystem. At the center of it all is our next guest, Michael Lau. He's the chair of Consensus. Michael, you are Canadian, I'm Canadian, Jen is Canadian, Nick is not Canadian.
I am the lone Yankee here.
But tell us why we brought Consensus to Toronto in Canada this year.
Yeah, so I think what's quite exciting is that when we're thinking about different locations, we're often looking for two particular sets of things. One is that it's got to be a great conference location. So it's actually turned out that Toronto's been a great place to host these kind of large-scale conferences for a while, having a great, kind of airport where you've got a lot of direct international flights, to the fact that there's just a really multicultural city that's got a lot of, character and a lot of interesting things to do, and also a great venue like the Metro Toronto Convention Centre. But the second part of it is that there's some level of relevance, and the idea is that there should be a high level of relevance to the industry as well. And I think what most people don't realize is that there's actually a lot of history when it comes to Toronto specifically, to the whole crypto industry, right? Like, Ethereum was birthed here. We had Anthony Djuric talk about it, yesterday on stage about how he started a Bitcoin meetup, and then Vitalik rolled up. And so there's just a lot of really interesting things that have happened here in the city. But also, to your point earlier, it just turns out that Canadians actually played an outsized role in the history and development of blockchain and crypto, and still do today. And so that's why I was quite excited to say, hey, if we're going to do it here this year, why don't we also go and find all these globally recognized leaders that people may or may not know are Canadian, and also have that kind of coupled together with the fact that we are this big tent event, right? That we can bring together all parts of the industry and leaders from across the borders to have this conversation. So Toronto happened to be a great place for us to host it this year, and we've been really, really, happy about the turnout.
Excellent. You mentioned Ethereum. If you believe that Peter Todd is Satoshi Nakamoto, we could claim potentially that Bitcoin was born here too.
Christine won't give it up. She won't give up the Peter Todd thing.
Just throwing it out there. Another Satoshi conspiracy. I love it. All right, so in terms of designing the programming for Consensus, what can we expect, and what were some of the decision-making processes going in there?
Yeah, no, of course. Well, earlier in the conference, I kind of highlighted there were a lot of different themes, and I think what we're always trying to do is work with our various different groups, from editorial to other elements of the business, to understand what are the most relevant and important things that move the needle, right? I think the way that we've been trying to frame Consensus is that we're trying to bring high quality content at scale here to the conference. And to me, the idea is, hey, if you're making a business decision, or you're trying to navigate the future, or you're a builder trying to understand how to write the next kind of industry moving code, you really need to get good insight into what's happening, something substantive, or even have maybe something being said by someone more authoritative. And so that's kind of the way that we thought about this, was multiple themes, from AI to regulation to stable coins to protocols, etc., but also making sure that we've got really truly recognized leaders in the space speaking authoritatively into this.
All right. And in terms of highlights, news-making moments, what stands out for you?
Yeah, so yesterday was a really big day for us. I mean, we had Kevin O'Leary and Dean Skirka taking the stage, and I thought it was pretty interesting because Kevin's got a lot of great things to say. But it just so happened that the day before we started Consensus, there was the announcement of Robinhood acquiring WonderFi, which is where Dean is the CEO. So combination of really, really great voice with really interesting insight to something that's literally breaking news on our floor. That was really exciting yesterday. We also had Dave Portnoy kind of close the day. That was a fun conversation, quite wide-ranging, I'd say. But the one in the middle of the day that really kind of, I think, just really stole kind of like a lot of attention was we had Eric Trump and Asher Ginud from American Bitcoin take the stage. This was the first time that they've spoken since their announcement earlier this week on Monday that they were going public. And it was really cool to see that they chose Consensus to be the stage, that they were going to talk about that. And so we had on the main stage literally just wall-to-wall packed people just watching what was going on. And it was just really cool to see that this is where it was happening.
It was also the first time that Brandon Lutnick, the chair of Cantor Fitzgerald, was able to
That's right.
speak
Yeah.
publicly at a crypto conference, correct?
Yeah, no, that's correct. Yeah, so the day beforehand, I was very fortunate to be able to host him on stage. It's incredible to see how a TradFi institution like Cantor, that people would recognize in the general capital markets, is so all in on this space. And I think Brandon, as the new chairman and choosing again us as the first place to speak openly about this, he was just so, you could sense the conviction. And I think to me that's probably another big theme that I've noticed throughout this conference is, as an investor and as somebody who is committed to building and founding businesses in this space, that conviction is very, very encouraging. And I think that's something that we've seen over and over here at Consensus.
As Consensus becomes more and more mature, as we talk about institutional interest and all these huge financial institutions coming into crypto, coming to events like Consensus, I want to say there's still been a really big focus on real-world use cases. Like, that hasn't gone away, and that's been so refreshing to see. I was on stage, on the brand stage yesterday, talking to the founders of Helium, Kid, and The Realist. And to see blockchain infrastructure just being embedded into companies that just solve problems for people is really cool, and I love that those conversations are still happening amongst these big, splashy institutional conversations and news-making ones. So that's kind of been what I've enjoyed so far.
Yeah, absolutely. And I think it was also quite deliberate that we made sure this doesn't just become a fintech conference, right? I think the potential for blockchain technology and Web3 to be able to empower different other non-financial industries is something that we still haven't seen as much traction as we would have liked to, but I think that there's certainly the promise and the opportunity, and we need to stay ahead of it. One other one that I was particularly excited about as a Canadian was we had Rain Maida from Our Lady Peace.
He was at the desk yesterday.
Here.
Also,
yes.
big Our Lady Peace fan.
I've been a fan since
okay?
long time ago. But when I spoke to him the first time, it was one of those things where I was surprised as an accomplished artist who's been in the music industry for so many years, having, I guess, kind of the interest and the intellectual rigor in approaching the space and the honesty around it as well. I think that's been really refreshing. It wasn't a very linear, hey, I thought this was going to be great, and then immediately he's just been building. He had this kind of up and down interaction with the space, but he still believes in it, and he's just kind of looking and observing and trying to understand, well, how do I keep on evolving our approach to this so that we can find the right use cases for this? And one of the things that he talked quite passionately about was secondary ticket sales for concerts. As an artist, actually, you don't get to reap any of the benefits of people selling this in the secondary markets. And there's a good reason for that market, but actually there's also a lot of bots and a lot of things that just kind of don't really, jive with the spirit of what this is meant to be. And I think that's where he also sees blockchain technology helping to provide that transparency and trust and empowering things to move forward as well. So to your point, it's really great to see that people are still thinking about real-world use cases in finance as well as outside of finance.
Yeah, it's not just, this crypto's for everyone, Web3 is for everyone. We're going to onboard the whole world onto this industry. One last note on Miami. Consensus will be held there next year. What can you give us as a preview?
Yeah, look, I think Miami is like a really exciting place because one, it's a crypto hub. There's a lot of people that flew up here to this conference from Miami, and so we know that there's a core community there that we want to engage in. I think also as a destination, like I mentioned before, it's a great place to host something like this. But also, the other thing that maybe people don't realize is that Miami is a fantastic place to connect North and South America. And there aren't very many places or conferences right now that actually bring to the forefront what's happening across the Americas. And we've, over the years, actually had a number of folks fly up from, whether it's Brazil or Chile or El Salvador, coming up to our conference at Consensus. Moving it to Miami gives an even greater chance to be that gateway into the Americas and actually bring more of that conversation forward. So I'm also very excited for that particular point.
All right, we're already looking forward to it. But we got to get through today first.
That's
Michael,
right.
thank you so much for joining us.
Thank you so much. Thank you so much.
All right, that was Consensus Chair Michael Lau. Let's take a look now at what's going on around the conference floor.
Thanks to our friends at Consensus. They do an amazing job, and hopefully we'll be back very often.
Hey, Mr. Wonderful here at Consensus 2025, and I've got to tell you, the energy is palatable. It's amazing.
Let's check in on today's top crypto headlines. It's Friday, May 16th, 2025. This is a CoinDesk Daily Special from Toronto. We're coming to you from the CoinDesk Live studio at Consensus 2025, sponsored by MoonPay, the global leader in crypto payments, building up its payment stack from on-ramps and trading infrastructure to now enabling commerce and asset management. U.S. President Donald Trump's second eldest son, Eric Trump, affirming that Canada should be the USA's 51st state for the mutual economic benefit of both countries. Speaking at Consensus 2025 in Toronto, he also revealed his interest in cryptocurrency emerged when political attacks on his family aligned them with the crypto community, fostering a strong partnership. He described Bitcoin as digital gold and a store of value, emphasizing its liquidity compared to real estate. Trump co-founded American Bitcoin, a mining firm planning to go public through a merger with Griffin Digital Mining. Barstool Sports founder Dave Portnoy calling meme coins a form of gambling and a Ponzi scheme unlikely to last. At Consensus 2025, he recounted his chaotic meme coin ventures, including a $4.5 million loss on Libra and a $7 million gain in an hour from a $1,000 investment, while facing lawsuits and accusations of rug pulls. Portnoy admitted to loving the speculative rush, but expressed growing unease with the backlash, citing real-world confrontations over investor losses. He predicted that meme coins would not last beyond the next 4 years. Finally, the U.S. Department of Justice has charged 12 individuals in a $263 million crypto fraud and money laundering conspiracy. The scheme involved siphoning digital assets from a Genesis creditor using social engineering scams. On Thursday, Coinbase similarly disclosed a data breach where scammers bribed employees, leading to potential payouts of up to $400 million. For more news in your pocket, download the CoinDesk mobile app, available on iOS and Android. Let's take a look at the chart of the day. The SOSO value chart shows net inflows into the U.S. listed spot Bitcoin ETFs have slowed. The drop has probably played a role in keeping the BTC price range bound between $100,000 and $105,000. Nevertheless, the global crypto corporate adoption narrative is thriving. Eric Trump captured the feeling at CoinDesk's Consensus Toronto event, saying, "I'm traveling, I'm on a plane, everybody in the world is trying to hoard Bitcoin right now. Everybody, I hear it from sovereign wealth funds, I hear it from the wealthiest families, I hear from the biggest companies." For more updates, head on over to CoinDesk.com.
Keep up with crypto? Never miss a market move with our new mobile app. The crypto world moves fast, and staying ahead means having the right information at the right time. Track the tokens that matter most to you, add them to your watch list, and get instant notifications on price movements and all-time highs. CoinDesk award-winning journalism now in your pocket. Be the first to know about breaking stories, regulatory updates, and market trends. Tune into the latest CoinDesk podcasts and videos to gain insights and stay updated on the ever-evolving market. Cut through the noise, curate your newsfeed and alerts around your interest. Get the insights you need without the distractions you don't. Download the CoinDesk mobile app today.
Welcome back. I'm Christine Lee with my co-host, Will Foxley, a former CoinDesker who is helping us here at Consensus with the Bitcoin mining stage. Tell me all about what we can expect there.
Bitcoin mining stage was awesome. I mean, we're here in Toronto. Canada has a ton of Bitcoin mining hash rate, and I think that's often overlooked. Canada is a huge producer of energy, whether it be hydro or out on the western side of Canada in Alberta, you get more into oil and gas. I think we saw a lot of the Canadian Bitcoin miners show up in force at Toronto, which to me was not a surprise, honestly. I think to a lot of people it was, though, because people don't know about Canada and Bitcoin mining. So I was super happy to see everyone show up and talk on stage, full day, just going through tons of different programming, whether it be American Bitcoin launching with Eric Trump in the main stage presentation, all the way to some of like the more nerdy stuff, getting into like the gadgets and gizmos of Bitcoin mining.
What are some of the highlights in terms of newsmaking, stories on the latest state of the Bitcoin network?
Yeah, I think American Bitcoin was probably the biggest story of the last 60 days or so. Of course, like Eric Trump getting involved with the HUD 8 team, and they basically split out the mining assets from HUD 8 and moved them over to American Bitcoin. And then Eric Trump came on to American Bitcoin as the CSO, the Chief Strategy Officer, and as a co-founder. I think a lot of people have big expectations for that company just with the Trump moniker, and if there's going to be a quote-unquote MAGA premium for the stock is what they're kind of calling it. But that remains to be seen. I think that was one of the bigger storylines at Consensus and in the mining scene recently.
Well, as I mentioned earlier, there seems to be this narrative that more family offices are getting into it. A lot of institutional adoption coming on board from sovereign wealth funds, et cetera. We are seeing, as I mentioned earlier from the chart of the day, that ETF inflows are slowing down a bit. We're seeing Bitcoin range bound. What's the mood in your view?
Yeah, no, so since last year, we've seen a lot of Bitcoin mining interest as an investment vehicle decrease from the retail crowd. The institutional crowd is still there. So if you kind of watch it, you'll see Vanguard, you'll see Jane Street, some of these market makers getting into it. And the reason that they're doing that is because there is a bid from certain institutions into Bitcoin mining stocks. However, it's more interesting on the ETF front, right? Like, though we're seeing a decrease week over week with ETF flows, it's been a really good month overall. And I think like that bid on the Bitcoin ETF front continues to hurt the Bitcoin mining investment thesis. And I think for Bitcoin miners, and we certainly saw this on the stage yesterday, how do they show that they are different than the ETFs as an investment from everyone else?
And in terms of Bitcoin dominance, I mean, that has been leading the charts over 60% lately. What's the mood there? Are we going to see an altcoin season, or is Bitcoin just going to reign supreme?
Altcoin season comes when it wants. It's so hard to know when the altcoins are going to spring forth from earth. I mean, I think Consensus did a good job of kind of like walking through that. The Dave Portnoy interview that you guys did was fantastic. I mean, just to kind of see what's in the mind of a degen. Overall, though, I'm a Bitcoiner, and I think that as a Bitcoiner, I would love to see Bitcoin dominance just continue to go upwards. I'd love to see Bitcoin adjacent assets continue to do better, like Bitcoin mining stocks.
And in terms of U.S.-Canada collaboration in the mining front, how do you see that coming to the fore? I mean, the greatest example is probably American Bitcoin.
Yeah,
but
that's a pretty solid example.
In terms of the energy and the global hash rate, like, is that going to dominate in North America?
Canada continues to grow. It's not as much as the United States. I think Texas, Georgia, some of these southern states in the U.S. continue to do very well. Canada does have a ton of energy, and that will continue to be tapped. Probably about 10% of the network going onwards. More than that, it's hard to say. I think you'd have to see what this new administration in Canada is going to do in terms of energy policy.
Well, another big topic we've been talking about throughout the conference is stablecoins. They will become a 3.7 trillion asset class by 2030, according to Citi. The race is on to dominate this market, and one of the latest entrants is Noble, launching a yield-bearing US dollar pegged stablecoin in March on the Cosmos blockchain. Let's learn more with Jelena Djuric, CEO of Noble. Jelena, thank you so much for joining us.
Thank you so much for having me. It's a pleasure.
All right, so the stablecoin market is quite competitive right now. We see Tether being the dominant issuer of stablecoins, followed by Circle and Coinbase also their entrance. So how are you entering this market? What is the pitch here?
So I think it's important to remember how far we've come. 5 years ago, the stablecoin market was a $5 billion market. We're now at about 250. Obviously, Citi is projecting in the trillions. For us, we do look at yield-bearing stablecoins, very crypto-native dollar stablecoins as the kind of future, right? So what does this mean? The yield-bearing stablecoin space, it's a few $billion, right? As you said, mostly it's dominated by Circle and by Tether. We see Noble Dollar as an example of something that is a lot more programmable in nature. So you can actually share the yield with certain distribution partners. In the same way that Circle shares yield with Coinbase when it comes to the issuance of USDC, we look at new mechanisms like the Noble Dollar, providing a little bit more of an interesting incentive alignment structure with distribution partners like exchanges, like payments applications, like various DeFi applications. So yeah, we launched Noble Dollar about 2 months ago, and it's about a $90 million TVL, so we're early, but we do see this category growing.
So I see USDN, it's a yield-bearing stablecoin with a current yield of 4.15%.
Yes.
You guys over-collateralize,
Correct.
backing 1.2% from U.S. Treasury bills. And is the draw here as well, perhaps, are you more transparent with your reserves?
So we do see the Treasury bill collateral framework as the most stable, safe, resilient collateral structure. Obviously, we've had yield-bearing stablecoins in the past that have spectacularly blown up, Terra obviously being the most famous example. So for Noble and our partners like M0 and others, we collateralize Noble Dollar in the same way that Circle and Tether collateralize their dollar stablecoin with T-bills, right? These are liquid assets that are abundant, and the demand for these assets are theoretically infinite. But for us, again, the difference is that we can pass on that 4.2%, 4.15% in a programmatic way to certain distribution partners. So again, we really focus on the
Is that automated?
And it is automated, exactly.
Okay,
it's on a per block basis, right? So these aren't off-chain contracts. These aren't B2B arrangements where we say, okay, for the next year or 2 years, you get the privilege of taking advantage of this yield in a programmatic on-chain, very crypto-native way, very similar to a DAI, honestly. Obviously backed by MakerDAO, you have this way of programmatically distributing the yield to sources of demand.
Is it an algorithmic stablecoin?
It's not algorithmic, so it is fully over-collateralized by Treasury bills, again, in the same way that you have the USDCs of the world collateralized by T-bills. So these are real T-bills held in real bank accounts in various financial institutions. But again, the difference is that you can programmatically distribute this yield to sources of demand. It could be a DeFi liquidity pool. It could be a centralized exchange. It's pretty cool.
In the stablecoin market, we typically see payments as a use case, and we also see the trading side. And Tether kind of rose to prominence because of the trading side, where they're able to get a lower cost basis when you're trading with Tether and another pair, whether it be BTC or ETH or whatever.
Yeah.
For you guys, are you trying to focus on that trading side and you're trying to eke into what Tether's doing, or is it more on the payment side, or is there like a third door option I'm not even bringing up?
Yeah, I mean, a lot of the demand, to be clear, for USDN right now is within DeFi, right? So it is within certain DeFi protocols. We're working with Babylon, for example. It's a Bitcoin staking protocol built on the Cosmos network as well. So basically, this dollar stablecoin, I mean, there's all sorts of applications, as you said. It could be trading, it could be payments, it could be DeFi, it could be speculation. You could also just use it as a savings mechanism, obviously, to kind of. But for us, we really want to make the economics of DeFi applications better, right? So if you're a perps DEX, let's say, and you have billions of dollars, like a hyperliquid, billions of dollars of volume, and all of this collateral sitting in trading accounts on a hyperliquid, there could be a yield component from those dollars that could be going to traders, they could be going to a DAO, they could be going to even the core team as revenue. So basically there's an opportunity cost for all these dollar stablecoins that are not paying out yield for teams, for users, for, again, distribution partners. And we want to make that opportunity cost zero, basically, right? If you're the distribution partner for billions of dollars of stablecoin volume, like a Hyperliquid, you should be able to tap into that to that yield.
What are some of the regulatory challenges that you're facing? Because this is a global industry, and there are many jurisdictions with varying rules and laws.
Yeah, I mean, it's very interesting. There's basically two proposals right now in the US when it comes to stablecoins. There's the Genius Act and the Stables Act. We do see the Genius Act as a bit more of a robust kind of framework for the treatment of stablecoins. Obviously, when it comes to kind of the yield component, there hasn't been clear guidance on this. We're hoping that in the next couple weeks, very soon, there will be, hopefully, again, more clarity on this, because there have been impediments to getting that passed. But basically, there will be a distinction between issuers and distributors. Again, if you're the issuer, right, if you're a Circle, if you're a Tether, there are going to be certain, obviously, guidelines. But if you're a distributor, if you're an exchange, if you're a Coinbase, if you're a Binance, if you're a payments application, being able to kind of offer that yield to your end customers, I think, will be treated differently than, again, if you're the issuer that can, again, keep some of that yield as revenue, but also, in many cases, have to share that with distribution partners.
You mentioned that you were inspired to launch this stablecoin in part because of the collapse of Terra Luna, which brought down the crypto industry in 2022.
Yeah.
What were some of the lessons there?
I think it really came down to safety and risk. There were obviously, a lot of DeFi applications for UST that, created that stablecoin to a $40 billion market before it collapsed. But at the end of the day, it was unsustainable, as we all now know. For us, we want Noble Dollar and the products and the assets that we support on our protocol to be extremely safe. Again, treasury bills as collateral, dollars in bank accounts, across the world that actually are a safe way of offering these really powerful assets to as many people in the world as possible, but without the complexities and risks that you saw with Terra Luna.
Just one question as we kind of wrap up here. What's next on the product roadmap? What are you excited about? What are some things that you guys are looking to launch in 2025?
Yeah, we're distributing Noble Dollar to many other partners, as I mentioned. We're working with the likes of Babylon and Celestia, increasingly in the Ethereum ecosystem, because again, we want USDN to be the most crypto native, programmatic, easy to adopt stablecoin for all of these protocols. And then basically, we're also launching an application layer. So how do we build a lot more interesting stablecoin applications that are useful for as many people as possible with the mechanisms of Noble Dollar under the hood?
All right, excellent. Jelena, thanks so much for joining us.
Thank you.
That was Noble CEO Jelena Djuric. Let's take a quick look at Bitcoin right now. The CoinDesk Bitcoin price now at $103,764. Now, they're about just up about 1.7%. Trading pretty flat, range bound in the $100,000 to $105,000 range. Let's take a look at Ethereum. The CoinDesk Ether price now at $25.87, also slightly up about 3.4%. SG Forge, a Société Générale subsidiary, is at the forefront of institutional blockchain adoption, providing custody and tokenized bond issuance for major financial players. Its recent integration with Bitpana's platform has broadened access to its EURCV stablecoin across European markets. Joining us now with more is Jean-Marc Stenger. He's the CEO of SG Forge. Jean-Marc, thanks for joining us.
Good morning to everyone. Thank you for having me with you today.
So we were just talking about stablecoins. This market is projected to explode this year. Where do you see yourself in the map amid tough competition from Tether and Circle, the incumbents in the space?
Yeah, sure. Maybe first, before jumping on the subject, I want to share that I'm very happy to be with you today. Actually, I personally take it as a great sign of this convergence which is happening in between the more traditional banking industry and the crypto industry. And definitely, Société Générale, we want to be at the forefront of that. This move we made last year in launching our own stablecoin, the Euro convertible, was, I think, a great example of that, and we are definitely willing to expand in that front. So competition is fierce, exactly. The market is already well structured around key players in the space. We think at Société Générale Forge that the story is just starting actually for stablecoin. It's a critical asset for a number of use cases in the crypto industry. It's also going to be a very critical asset in more traditional finance for wholesale banking operations, for retail markets. When it comes to payment, prospects for growth of these type of assets are just extraordinary. We do think that there is a place for banks, definitely for an innovative bank like Société Générale, and bringing a new product in the market which is very different, probably more robust, more secured, fully compliant to the MiCA regulation we now have in Europe. In this market, I think is something clients, investors in this industry are expecting, are looking for, and I mean, based on the feedbacks we are receiving from the market, I think we are very optimistic for the development of this product.
And I suppose, where's the demand coming from? Is it specifically institutions that you're targeting? And most stablecoins, they're US dollar pegged. Do you see
Indeed.
an addressable market for the euro and other currencies?
Sure. Different questions in that one. Actually, use cases which are targeted are very broad. The very first reason why we have decided last year to launch the Euro CV is basically to answer to the request of our own institutional clients, for which we have been organizing security token issuances over the last few years. That's actually the first move Société Générale did in that space already 5 years ago, where we have started to organize issuances of digital bonds and digital structured product on Ethereum mainnet in the form of tokens. Issuing securities is great. It has a lot of advantages. We can touch on that a bit later if you want. But very quickly, our clients investing in these products were also looking for the cash component, you know, to settle these securities. And actually, that was the real start of the story of launching the stablecoin, to accommodate for these use cases. Then, second, witnessing what was happening on the crypto market for, you know, the traditional trading activities we see with crypto exchanges, we quickly realized, also with MiCA coming up in Europe, that there will be a strong need for more robust, more resilient, and probably banking-grade stablecoin in the market tomorrow. So it was a kind of opportunity window for us to also promote this product more deeply within the crypto industry, starting to reference this product with many different crypto exchanges. The partnership we have with Bitpanda, but also Bitstamp and some others, fall into that category. That's exactly what we are doing at the moment. It's to expand the usability and the availability of this stablecoin in the market.
And in terms of a euro-pegged stablecoin, do you see that taking off compared to the US-pegged stablecoins, which are dominating the market?
Yeah, sure. The euro stablecoin market is still very small compared to the US market. What we see is two things. First, and again, coming back to this complete reshuffling of the crypto ecosystem we are seeing in Europe with MiCA, we see the demand for euro stablecoin dramatically rising. There is no structural reason why European clients, is it on the institutional side or the retail side, will continue to trade exclusively in USD, paying an FX cost, a currency cost, when they on-ramp and when they off-ramp. So the demand for euro stablecoin is meant to grow just for that, because the base currency in Europe is euro, and so clients will trade in euro. That's just going to happen that way. Second, we also see a very dramatic increase in demand for euro stablecoin linked to cross-border payments. Here we are outside of the crypto environment. It's corporate clients, it's SMEs, it's remittance, it's retail clients, you know, sending money abroad. There is also a structural need for the euro on-chain, a euro stablecoin, and that's another angle we are pushing in the market with the euro convertible.
Tell us a little bit about the tokenized asset issuance you guys are working on. It's a pretty interesting market to be working through. How are you guys approaching that while also pushing forward with the stable coins?
Yes, that's a more medium-term trend we are seeing, but a very deeply rooted trend as well within our capital market activities. I mean, for people who are in crypto for years, everyone knows that transactions are quick, efficient, cheap, instantaneous. I mean, there is also a programmability nature attached to token, which is very interesting. And actually, when you are sitting in the traditional market front and you are just looking at all these characteristics, it's a dream, compared to the legacy systems we may have, where transactions in a comparable basis are slower, more expensive. Reaching investors, distribution can be difficult. In some cases, just impossible. When you are an issuer and let's say a corporate, you want to issue debt to finance yourself, to fund projects, maybe the best investor base for such a debt issuance is not in your home country, it's abroad. Today in the traditional financial market infrastructure, it's difficult to reach these investors. On the other side, capital allocation is suboptimal, also linked to these inefficiencies. Bringing these securities, and in our case, starting with digital bonds, but going to more complex financial products, is solving all these issues, in terms of affordability, ability to trade for smaller denomination, ease of use, and all the operational efficiencies we are seeing. And these are the reasons why we see structural demand rising from our corporate clients, but also financial institutions we are serving at Société Générale, who are increasingly turning to this new form of securities for transaction of tomorrow. We are not yet there. I mean, there are a lot of, still operational hurdle to solve. There is a lack of liquidity on the secondary market, notably, but this is progressing very, very nicely, and we are convinced at Société Générale that somehow the future of finance and our capital market activities will rely to a large extent on this tokenized product in the future.
And how is the regulatory environment for the stablecoin market in terms of, does MiCA address the clarity enough for you to operate? And especially when considering Christine Lagarde has been very skeptical about Bitcoin and has mixed reaction on stablecoins, acknowledging their opportunity, but also very cautious.
Yeah, sure. Well, regulation first, it's a kind of this favored subject over the last few years. First, I want to say that, I mean, it's also a very good sign. We are talking, I think, less and less about regulation, which is a good news in itself, meaning that no clients and providers are turning more to the products, the client needs, and so on. MiCA in Europe definitely is a chance to that respect. We now have a full regulatory package which is applicable across Europe. Europe is still fragmented in terms of capital market activities, different countries, different regulation. First, and I think that's the key element first people have to understand, MiCA applies across whole Europe. 500 million customers, one single regulation, single licensing process across all the countries. MiCA is very clear, which is a second chance. It's not always the case with regulation. So obviously you have people, providers who complain that it maybe not comprehensive enough. Maybe there are some key elements which are missing. DeFi, for instance, is not well treated into MiCA, but at least for all the elements which are treated within MiCA, things are clear and are applicable. So it creates one of the largest markets for crypto in the world and one of the most mature markets. This is what we needed as a bank, as Société Générale, to envisage developing activities in that space. So now we have that in place. Other places like the US are moving forward there. There are other areas in Asia. I think MiCA, to my view, will probably do what we have seen, and again, we can think positive or bad things about it, but what we have seen with GDPR, it's setting a level playing field, which will be a reference for all the other jurisdictions, and all the crypto activities will probably tomorrow be structured a way or another as Mika has been framed.
Yeah, just to wrap up here, I'm interested in knowing what's going to happen in 2025 for you guys. What's in the playbook and in the offering for y'all?
So can you say it again?
Yeah, what's in the playbook for 2025 as you close out the calendar year?
Yeah, so yeah, but obviously in the direction of what I've explained, we want to do more. I think we made this decision a few years ago to engage the group through this dedicated subsidiary, Société Générale Forge, into the crypto environment. Stablecoin was the first natural step for us, and as I said, we think there is a need from clients to have a robust banking-grade product here. So doing more, making the product available to the market through more trading venues, more crypto brokers is definitely our short-term priority, and that's what we are pushing at the moment.
Excellent. Jean-Marc, thank you so much for joining us. Appreciate your insights.
Thank you for having me.
Right, that was SG Forge CEO Jean-Marc Stenger. More after the break. Virgo CX is a leading Canadian crypto exchange providing secure trading, staking, and wealth management services to retail and institutional clients. While championing Canada's role in Web3, Virgo CX is also seeking expansion into new markets like Australia, the UK, and Europe. Joining us now with more is Adam Kai. He's the CEO of Virgo CX. Adam, thanks so much for joining us.
Yeah, thank you for having me.
So we've had some news over the past couple of weeks, one being that Coinbase acquired Deribit, that Robinhood acquired WonderFi, entering the Canadian market. So the competition is ramping up. I mean, how are you, I guess, what is the plan to deal with the competitive environment growing here in Canada as a crypto exchange?
Wow, let's start with a tough question from day one, eh? Yeah, so I think in the past several years, we're seeing a lot of consolidations happening in Canada. Obviously, the reason for that is trying to achieve the cost effectiveness, economic scales. And in Canada, obviously, the regulation is very, established. So in order to achieve that, you have to obviously go a lot more in terms of the consolidations. So we're seeing global players, Robinhood news, obviously. Certainly, that puts a lot of Canadian peers thinking about what's kind of the futures. Are you looking for now merging with bigger players? Are you looking for your own way out? So for Virgo, our decision is we are a proud Canadian entrepreneurs 5 years ago, running trading platforms since 2019. And we would actually take our vision one step further. So we actually already did that since 2022, expanded to Australia, achieving a license, providing service there. 2023, expanded to US for the OTC desk. And now, actually during this consensus conference, we launched 2 more new products. One is the Virgo Pay, which is a global stablecoin remittance system, right? So right now, first day out, we have 3 countries covered: United States, partner with Bridge, fantastic company, Canada and Australia. And then in the next 1 month, we're looking to add additional 30, 40 currencies into it. So we want to become one of the hub for the low-cost stablecoin on-ramp and off-ramp. I'm talking about a fee range anywhere between 1% to 1.5 against like 3 to 5%. So we're looking for low cost and bring the stablecoin adoption to it. And also, we're looking to leverage stablecoin as a way to do the money remittance. I want to bring utilities to people's day-to-day life, make money flow easier across the board, make it 7/24 real time, and in the meantime, enjoy the benefit of the blockchain transactions. So that's Virgo Pay we launched, global product. And then we also incubated Wallet V, which is self-custody crypto wallet. So multi-chain support, on-chain swap, cross-chain swap. You have all the data analytics you can use. So this is actually the first time. Actually, I appreciate you guys coming to Toronto, giving us the opportunity to announce 2 global products, and we're very excited. And we want to set up office in Asia, obviously very much big in Singapore, in Hong Kong, Taiwan, a lot of different regions, and looking to get more presence in the United States. So our approach is taking the Canadian pride and become global.
Excellent. And I'm curious about the users on Virgo now. What kind of what's the transaction volume you're seeing? And as the markets have, I suppose we've seen a roller coaster. How have you seen the ups and downs?
Good question. So actually recently we decided to turn Virgo CX to become a non-custodial platform. So we're actually one of the first ones in Canada making that changes. So we're believing that people will need sooner or later to manage their own cryptos through their solutions. No matter what's card wallet, qualified custodian, they can choose it. But I think the future, the central exchange is going to be a fiat on-ramp, off-ramp gateway, allowing people that access, easy access, cheap access. But after that, everybody should have a crypto wallet, to have the full native Web3 experiences. And that's our conversion phase. And we're seeing that being liked by a lot of our customers. They're using us for fiat on-ramp, off-ramp regardless. And they're feeling that experience to be very straightforward. And they have their own control of the cryptos. So I think that's where the future will be.
I see here that you guys raised about $8 million in 2022 to pursue NFTs. Now there's a stablecoin play here. To what degree does it matter that you just get the licenses and regulations and then you can start creating tons of different products within Web3?
Yes.
So Australia, United States, Canada, it seems like the licenses matter more and then you can just kind of paint the picture as you go about it.
100%. So in total, we have raised now more than $25 million. So 2022, $10 million, 2023, 8, and we're finishing another round of 8, so more than 20. So the license is super important to run certain business, such as we have Virgo Digital Asset Management, is fully licensed in Canada as portfolio manager, investment fund manager, and EMD, producing the actively managed products for the accredited investors in Canada. And in Australia, we have Austrac DCE license. In the US, we're giving the FinCEN MSP license and acquiring the multiple states MTL license. So every country we go, we want to make sure that we're running compliantly. And of course, for the wallet side, you want to make sure that design, everything there is fitting to certain cultural restrictions. But in overall speaking, we're mindful of the general global regulation kind of landscape. Yeah.
And you mentioned wealth management as part of the business. Tell me, how are you managing folks' crypto portfolios? How does that work?
Great. Yeah. So we're actually the few portfolio managers really kind of investing to mostly actually the crypto blockchain equities. So we have 2 sets of products. One is separate manager accounts, working with interactive brokers. It's huge brokers globally. And we also have our offer memorandum, mutual fund trust in Canada. So we're really kind of helping the people looking for the active risk management, ensure that the risk is managed. And for the accredited investors, so they put in a fund or they can go through SMA, through IB, and we have kind of low, medium, high risks according to people's demand. And really, kind of at the end of the day, we actually choose the best custody, best security brokers to ensure the safety is there. So your principal, when it comes to counterparty risk, is always minimized. So we provide that institutional solutions to the family office, fund of fund, high net worth individuals in Canada. And we're also applying for the foreign RA in US, and it should be done in a matter of a couple weeks. And we should be able to also do the SMA in the United States as well.
Excellent. Well, Adam, thank you so much for joining us.
Thank you for having me, and hopefully you guys enjoy Toronto.
Absolutely. All right, that was Virgo CX CEO Adam Kai. The hashtag Consensus 2025 is on fire. Let's see what people are posting. All right, we've got Blockchain North, and we have Kevin O'Leary here, to Eric Trump, to Tom Lee, from Fundstrat. They're doing some insights, energy, and some bold takes on where the markets are headed. Let's see what day 3 has in store. Indeed. And we've got EZA. Oh yes, this is our hackathon here at Consensus. Today, we've got EZA on stage with founder, the Quacks, Phil and Dom Quack, and their A16Z backed startup. This is how we build the future of crypto. Folks, we got a lot of developers on the floor, so very exciting to see the innovation happening. And we've got Margot Nykirk, one of our CoinDesk reporters here, saying, good morning, Toronto. I'm moderating these two panels today at Consensus 2025, the future of Ethereum, as well. That's happening at 2:05 p.m. with Paul Brody there. And we've got Vitalik, an Ethereum story Q&A with the film's directors. That's happening at 3:25 p.m. on the Builders stage. Yes, come and find out all about where Bitcoin was born with the new movie there featuring Vitalik. If you're at Consensus Toronto, share your favorite moments with us at #Consensus2025 and tag our handle at Consensus2025 on X. Bitwise Asset Management is a leading crypto asset manager driving institutional crypto adoption with its low-fee Bitcoin ETF, attracting billions in inflows and seeing client allocations rise from 1% to 3% in recent months. Chief Investment Officer Matt Hougan is no stranger to CoinDesk and bold forecasts, including a $200,000 Bitcoin price target for 2025. Matt, we got a lot to talk about. All right, first of all, this $200,000 price target for 2025 right now, Bitcoin is at about $103,000. What are the catalysts that are going to get us to 200?
Yeah, it's great to be here. The short answer to that is demand and supply. The thing about Bitcoin right now, the reason this is the best moment in history to buy Bitcoin on a risk-adjusted basis is there's just too much structural demand for the amount of supply in the network. Bitcoin only produces 165,000 Bitcoin per year. Last year, ETFs bought 500,000 Bitcoin. I think they may buy more than that this year. Add on corporate buying and government buying. There is just too much demand. I don't think anything stops the train. We feel more confident about that $200,000 prediction today than we made it in December of 2024.
That being said, Bitcoin is now a bit range bound. We've seen between 100 and 105,000. What's going on?
Yeah, so there are select number of sellers who have been willing to sell around the $100,000 point. Why? Because people are human. Some of that selling has come from FTX, some of it has come from Mt. Gox distributions, but we think that is running out of supply. Once we break loose of the $100,000 sort of range bound, I think it's blue skies ahead. I think we go to the next behavioral stopping point, which may be 150. Maybe we have to work through that, and then I think we end the year above 200K.
You all have done an amazing job of helping educate the market and bringing that kind of first 2024 year of Bitcoin adoption, getting the momentum going. I think with the rest of crypto, a lot of the education has to take place. There's, what, $250 billion of stable coins that need layer ones. There's RWAs that need layer ones. There's meme coins that need layer ones. Yet, I think people, the everyday investor still needs to ascertain or get a little bit more confidence with everything else outside Bitcoin. How's that going? What are your next steps?
Yeah, I'll say that that story has started to shift. You know, before I came to this event, I was at a major regional broker-dealer financial advisor event. They managed about $500 billion in assets. I had 5 times the number of questions about Ethereum than I had at any conference before that. And the reason was the things you were saying. People are wondering, how do I invest in stable coins? How do I invest in tokenization? I think as they start to knit that together with what that means from looking down chain beyond Bitcoin, we're going to see some diversification beyond Bitcoin. Bitcoin is still king of the hill. It's still going to attract the most flows. But I think people are probably too skeptical on ETH and Solana flows into traditional financial products, I think it's got to hit up, sort of tick up at the end of the year.
How critical will staking yields be? We saw, Europe, now Canada. Is that little trickle of dividend-like income, although it's not dividends, right? Dividend-like income coming on top of an ETF holding. Does that add enough kind of spice into the equation?
I think it's helpful, but the real story is ETH properly, right? ETH went down 60% from its all-time highs. If you staked and earned a few percent, you were still sad. So I think most people are betting first and foremost on ETH. The staking will be nice. It will be a reason to buy the ETF and not do it directly, but it's not a game changer. The game changer for ETH is the change in the Ethereum foundation. The game changer is the success of the Pectra upgrade. The game changer is maybe stablecoin and market structure regulation. I would look to those things more than I would the addition of staking if you want to see ETH ETFs go to tens of billions of dollars.
Right, and do you think people are starting to knit together the use cases of DeFi and what ETH is trying to do? Maybe the stablecoin legislation is a pivot point there, or are people starting to get that? Because the Bitcoin story is pretty locked in. The growth story is still a bit ethereal, to use a right?
Yeah. I think they're starting to, but I don't think we're there yet, right? I think that you need to knit together a few positive stories, and you really need to see the inflection. I think if we get stablecoin legislation passed, that'll be the next sort of leg in the stool. I think it'll be helpful. Look, I'm very optimistic for ETH long term. I'm less certain in the intermediate term. I think in the intermediate and short term, the story for Bitcoin is very clear, that demand-supply mismatch. I think ETH has more work to do. But I do think investors are looking at it as maybe almost a value play in crypto. Those aren't words that we use very often. Often the hype exceeds the fundamentals. It may be the case that the fundamentals are exceeding the hype on ETH. That can be interesting for people with, let's say, a 2-year time frame.
Right.
What are some of the macroeconomic factors that you're looking at that will impact the crypto markets? We see with the tariffs that had a lot of global uncertainty around trade, and that spooked markets earlier in April, but now they seem to be rebounding, as well as what the Fed might do and what U.S. Commerce Secretary Scott Bessent might be doing with the Treasury buybacks. What are you looking at?
Yeah, the best thing that can happen from a macro perspective is us not talking about it and not worrying about it. I mean, the crypto-specific drivers are so positive right now. I think we would be much higher today if we hadn't gone through this crazy V-shaped macro thing. It distracted all of us from the fundamentals being so strong in crypto. So I'm hoping we've entered this more new normal period where the tariff discussions aren't as volatile, where interest rates, maybe we go down 25 or 50 basis points, but we're not going seesawing to 0 and back to 5. Again, the best thing that macro can do is get out of the way because the crypto-specific fundamentals are so strong. I want crypto to be in the driver's seat of where crypto prices are going. I think that's going to happen, and if that's true, it's going to be a great rest of the year.
That being said, Bitcoin was kind of a mooring, in mid-April, and then sprang back to life as an all-time high seeker, right?
Yeah, I think that's right. Well, I do think we learned something from the April sort of tariff tantrum.
Yeah.
This was the first macro shock where traditional investors could access Bitcoin. If you go back to previous macro shocks like the taper tantrum or the last China trade war in 2018, traditional shops couldn't use Bitcoin as a tool. There weren't ETFs, there weren't regulated futures. People wonder, why did Bitcoin decouple from stocks this time when it hadn't in the past? Because all of a sudden traditional investors could use it for what it's built for, which is a hedging tool. So I think that's an indication of where we'll be in the future. I think the correlations are going to go down over time and not up. But again, the story on Bitcoin is a demand story of institutions moving hundreds of billions of dollars into this asset, and macro is sort of on the sideline.
Yep, and you're talking to them. Thanks for the update, Matt.
Thank you for having me.
Hey. That was Bitwise Asset Management Chief Investment Officer, Matt Hougan. Later in the program, Robinhood and WonderFi will be joining us to talk about their latest merger. Keep watching CoinDesk Live at Consensus 2025 for more. Welcome back. And joining me now is Head of Product and Research, CoinDesk Indices, Andy Bear, and my colleagues here at CoinDesk. Thanks for joining me. And let's also bring in Founder and Chief Commercial Officer for 8cap, Patrick Murphy. Patrick, thanks so much for joining us.
Thanks for having me.
All right, so tell me a bit about what 8cap does, a global multi-regulated fintech founded in 2015.
Yeah. So we're a derivatives broker, and we offer traditional assets as well as crypto assets. We're based out of Melbourne, and we've got offices in the UK, Europe, and Southeast Asia. So we offer our products on TradingView, and they're the type of product. It's called a CFD, which is quite well known in the European, UK markets and Southeast Asia markets.
So in the derivatives markets in crypto, we know about Deribit. They're kind of the dominant leaders. So how does 8cap's story fit in the picture? And is there a lot of untapped potential in derivatives that need to be seized?
Yeah, so the CFD product is probably a bit of a precursor. So we're more on the TradFi space. We offer our CFDs in stocks, FX, metals, indices, and have started to offer crypto CFDs in the last few years. So there's a lot of the largest exchanges are actually starting to offer CFDs like Crypto.com and exchanges like that. So, yeah.
I think before crypto was evil in the United States, derivatives were evil in the United States, aside from listed options and futures. So Americans don't don't have access to CFDs. I bet they would love to have access. How has the crypto CFD crowd just kind of melded in with the others? It's just, you kind of want to hunt, I guess, for volatility and hunt for maximum gain potential, right, for dollar or collateral invested. How has crypto grown within the giant, package of the pie?
Yeah, so I think the good thing about the CFD is you don't actually have to own the underlying asset. So it's a really easy product to trade short-term volatile markets.
Long and short, right?
Long and short, and with leverage.
Yep.
So it fits really well with the crypto traders. So we're seeing like a lot of demand for it. It's also really easy to offer lots of different assets because you don't have to do all the custody. You're just trading the price. So there's a lot of crypto exchanges looking to offer CFDs alongside their spot crypto products as well.
Now, your experience in offering indices, I guess, woke us up to the idea of having our CoinDesk 20 index, our flagship, on 8cap as a way for people to trade the top assets within the digital asset class, almost like they used to start to trade QQQ for tech stocks 25 years ago. Tell me about that launch, what kind of markets you think are going to get excited, and how much interest it's going to stir up.
Yeah, no, we're really excited about that. We launched it this week, and it's been a great week. So, yeah, I mean, the stock indices is something that's really popular among our traders when they just want to trade the market, long or short, and they don't have to pick, which stock it is. So it's something crypto people want to be able to trade as well. They can just go long the market or short the market for the day or the week. So we've got a lot of demand from our own retail traders, and then we've also got the exchanges that we actually do our B2B products through. So they've been demanding like a CoinDesk indice, top 20 liquid assets. It's a really easy way to trade.
So there's direct reach and then reach through your partners to get even broader reach.
Exactly. Yeah, so our main growth is coming through our B2B play. We're helping support a lot of crypto exchanges with the regulation around offering regulated derivatives. We've got licensing in the UK, Europe, UAE, Australia, so we've got quite broad reach. We have customers in about 100 countries, so we can open up crypto exchanges and brokers into those markets.
In terms of the data that you are processing, what can you make of the market sentiment right now based on your users?
Well, to be honest, we have a pretty small portion of our book at the moment in crypto. It's probably a few percent. So a lot of our trading is still on the TradFi side, but through these partnerships, we're hoping to grow our volumes. But I'd say people are, it's short-term trading, so they're going long one day and short the next. It's very very
we like
much
that,
up and
Christine.
down.
We like it. Crypto's a trading asset class, you know.
They're hedging
As
their
long
See
bets.
how
as
you
it's
feel in the
moving.
morning, see how you feel in the afternoon.
Exactly. As long as it's moving, as long as it's volatile, people are trading. So.
All right, well, Patrick, thanks so much for joining us. And Andy, great to have you as always at the desk
Thanks.
as well.
Nice to see you on Friday. We're getting a little bump in prices for Friday at Consensus, so always good to see that
We
too.
love the consensus bump. Let's take a quick break. We'll be right back.
Welcome back to the CoinDesk Live studio at Consensus 2025 in Toronto, brought to you by MoonPay, the global leader in crypto payments. Earlier this year, MoonPay made 2 historic 9-figure acquisitions of Helio and Iron. I'm Jen Sanasi with my co-hosts for the next few minutes, Debbie Soon, Leah Callan-Butler, and Jay Hamilton. Hello, guys.
Hello, hello.
Happy Friday.
Thank you. You too.
All right. I've talked to all of you separately throughout the conference, and I just want to bring all of the conversations we've had together so the audience can get a little bit of an understanding of the diversity of topics that are covered at Consensus. Jay, I'm going to kick it off with you here. You and I were talking about legislation before we started off this segment, and we've been hearing different things on the Consensus floor. So talk to me about what you've been hearing when it comes to stablecoin legislation in the U.S.
Yeah, like, there's such a need for us to get this legislation done in order to continue the tailwinds that we have within the markets. And I think it's kind of become discussed as an expectation. It's, oh, we're going to get stablecoin legislation, we're also going to get the market structure bill, and they're all going to get done by August. And I remember when that conversation first started happening, I was like, wait, we're talking about politicians here. Are they really going to be able to move that fast?
So
I was
slow.
very skeptical, but that's what I kept hearing coming out of DAS. That's what I was hearing. Now here at Consensus, I'm talking to a bunch of lawyers, a bunch of people who are behind the scenes, and they're worried. They're legitimately worried that it might not happen. And you know what's happening is the Dems are upset that Trump is grifting on crypto with his meme coin and with all those things, and it's leading to some politics playing out where a bunch of Dems who were willing, this legislation needs to get bipartisan support to pass, and it will, but not right now in this environment. And the next week, the next few weeks will be really telling. Everybody should really be tuned into that to make sure that we still have the forward momentum there, because if we don't, then it's concerning.
That's really interesting. I mean, like you said, a lot of people have been talking about stablecoin legislation. It feels more important this year than ever because there are so many institutions, so many banks in the space that want to get into stablecoins, and they're waiting for this legislation. You are right. The Dems voted against it, but we had an update this morning from CoinDesk reporter Nick Day. He said that there is going to be another vote on Monday. There is an updated draft that addresses some of those Dem concerns, and a lot of the folks who joined us at the desk yesterday said still optimistic about stablecoins, not so optimistic about market structure. So we will have to wait and see there. Leia, I want to kick the conversation off to you. I don't know if you have been talking a lot about legislation. I know that you are our gaming girl.
Gaming girl, yeah, but no, this week has been all about privacy and security for me. So I have been riding around Toronto on the Midnight bus. Midnight is a privacy and security focused blockchain, but we had this idea, let's just go to the streets and talk to real people, everyday people, about their online lives, their digital selves, and whether they actually care or understand some of the risks that come with digital, I guess, your digital existence. It's actually been super interesting. I kind of thought that a lot of people would think like, oh, I don't really think too much about, what I'm giving up when I share all of my identity and all of my data for free on things like Facebook, or what happens when I use my banking apps online, or even emails and texts, all the things that make up your digital identity. But when we spoke to these people, they were actually really deeply concerned.
They were? That's shocking to me.
Really deeply concerned, not just about the way that big tech companies exploit their data and make money off it, but also how governments have access to their personal data and information, even in the name of national security. A lot of it was just like apathy. They were kind of like, I know that they're doing it, but
it's convenient.
Yeah, you give it up for the convenience of being able to traverse around the digital ecosystem. You have your Gmail or your Facebook as your digital passport, and that unlocks a lot of opportunity, a lot of access, a lot of great stuff on the internet for people, but they were aware of the fact that someone else is making a lot of money off that. Yeah.
How do you think about privacy, Debbie? Do you care?
I mean, I think at the end of the day, it's all about, well, okay, the short answer is yes, I do care, but I think also it shouldn't have to come at a trade-off at, the user experience. And I think, on my side, what I've been paying a lot of attention to has been consumer crypto and consumer crypto applications, and how easy it is for people to get onboarded, how easy is it for people to get on-ramp and off-ramp. And I think we're seeing some great innovations here in terms of paying with stable coins, right? But for the average person to be able to do that, it doesn't have to feel like it needs to be jumping through hoops. There should be a really easy way where, yes, I can use my email if that's what I'm used to, but also an easy way to kind of retrieve my assets and see what's going on with it.
Speaking of consumer applications, MasterCard and MoonPay announced a partnership here at Consensus yesterday to really bring stable coins to a more retail-focused user base, which I thought was really cool. But I am really focused on these real-world use cases too. I was on stage yesterday with Helium, The Realist, and Kid, and I'm so happy that, and I said this morning at the desk as well, that although there's all this institutional interest here, although we're talking about a lot of kind of traditional innovation in traditional financial infrastructure, there are still folks building, there's still folks using blockchain infrastructure to solve real world problems for real people, right? Like the companies I just mentioned, cell phones, ticketing, collectibles, those are all real things that existed far before the Bitcoin white paper was written.
And those things are being purchased by non-crypto natives. I don't think we give enough credit to Helium for bringing in new people who have no idea that their cell phone is built on crypto rails. They're just, I can have a free cell phone plan or a much lower cost cell phone plan. That makes sense. Yes, I'm in. And so that type of part, the thing that really stands out to me is I've been worried recently that AI is stealing a lot of crypto developers. AI tech is very exciting. So a lot of new talent going in that direction. And you come here and you realize that's not the case. There is still so many entrepreneurs in crypto and in blockchain that are not just the finance side, not just the stablecoin side, but all the other use cases. And I think that's going to be monumental. One use case that stood out to me that I thought was so interesting, PwC, one of the largest accounting consulting firms in the world, they use blockchain internally to manage the data for their travel so that they have instant settlement, because when a PwC employee travels, that travel has to be put towards some account for one of their clients. Well, usually it takes 60 days to settle those accounts. With blockchain, it's instant. And they use that internally. That's internal use case. It's so fascinating.
Well, you brought up AI there. I know we got to wrap, so this is the last thing we can talk about. We'll leave it on AI. Don't AI and blockchain kind of go together now? Isn't blockchain maybe solving some of those foundational issues and challenges that we've all seen dominating the narrative of AI?
Yeah.
Well, I'm looking forward to this afternoon. So I have a panel. It's about finding alpha in DeFi in the age of AI agents. And I love this because it's really about how AI is democratizing the space. It used to be all about who got access to info first in terms of being able to capitalize on DeFi markets. But AI is just making all of that information available to everybody. So in the age of AI agents, when everyone has access to that info, it's kind of interesting to understand like how professional traders are going to have to find a new edge over the top of retail traders. And I love conversations like that because as you were saying, it kind of feels like AI is stealing a lot of mind share, but this one's about like how could AI make crypto even better?
How can it make it better? And how can crypto make AI better, right?
Yeah.
How can crypto make AI trustless, permissionless, more verifiable, more transparent? The two of them really kind of solve each other's problems, and I think that's so cool.
Yeah.
Debbie, I think you got cut off.
No, I would just add one last line about the talent thing. I think AI is also allowing a lot of people who weren't developers become developers, myself included. I have an autonomous AI agent, which is my dog. She tips autonomously on social. So yeah, like I am just excited to see what new ideas we can bring to life about being hamstrung by certain technical knowledge with AI.
Do you have an AI agent, Leah?
I don't have one of my own just yet. But
I feel like that was a loaded question. You're like,
I've sent money to them and stuff like that. I love seeing like their antics on Twitter and stuff like that in terms of what they do. And there's also some great stuff in gaming at the moment where, for example, you might have like a bounty prize pool and the AI agent is programmed to not give away its money, but then people can come on and like try to mess with it and try to, trick it into giving its money away. I'm loving stuff like that in terms of like its application in AI and crypto and gaming.
Jay, do you have an AI agent?
I have a few. Yeah, I have a few.
I'm behind the curve here.
I think everybody should have a few and start experimenting with them and using them. And I mean, they're pretty simple. Like these aren't.
I don't know how to set it up.
Right? I mean, I have one that manages my email, one that manages my meetings. Like just simple, basic stuff like that.
I'm living in the past.
We'll get you. We'll get you.
You gotta get me on. Well, thank you so much, Debbie, Jay, Leah, for joining me here at the desk. We'll see you around the conference floor, and we'll carry on the conversation.
Thanks, guys.
All right, let's take a quick break. We'll be right back. Do you need a little more accountability on your fitness journey? Well, there's a gamified fitness app built on the Solana blockchain that rewards you for taking your health seriously. Joining the show is Moonwalk Fitness Director of Growth, Caitlyn Cook, to tell us more. Caitlyn, how's it going?
Great, how are you?
I'm doing good. Just Debbie and I chilling at the desk. All right, talk to us about Moonwalk Fitness. I know there is this whole like move to earn, step to earn, play to earn, do everything to earn movement. Is that what's going on here?
Yes, so we're taking a bit of a different approach from the traditional move to earn apps that we've seen in the past. Moonwalk is a fitness accountability app that's combining daily step goals and financial incentives to help users form healthy habits that last. Basically, you download our app for iOS or Android, connect your preferred step tracker like Apple Health or Google Fit, and from there you're able to join a variety of games. Each game lasts a certain number of days, has a daily step goal, and an entry deposit in order to enter. And you put money on the line. If you hit the daily step goal that's predetermined for that game consistently every day throughout the contest, you get all of your money back at the end of the game, and the opportunity to split a prize pool. That prize pool is made up of partial deposits from other players in the game who do not meet that daily goal consistently. We like to call it gamified accountability, just encouraging people to use the power of loss aversion and potential financial reward to drive them to consistent performance.
So you get your money back and a fit body.
Yes.
I love that. And I guess, how are you seeing that kind of engagement and retention on the application? People really excited about it. Also, what is the average step goal that people are putting in?
Somewhere between 7,000 and 10,000 steps is typically the goal that we see most people enter games for. It's been really well received early on. The iOS and Android app launched in January and February of this year, respectively. And it's been a very powerful, simple tool for people. We've gotten anecdotally a lot of feedback from different users who, whether they were struggling with getting their fitness journey started or people who are already active, the money on the line really drove them to be way more consistent than they had ever been in the past, to really feel the benefits of hitting daily movement goals and staying active. And that's also in many cases led users to make other healthy choices in their life, such as eating healthier, going back to weightlifting and other activities that they've enjoyed in the past. It really causes a powerful snowball effect that I think a lot of people don't expect coming in the door. But retention from users who have joined their first game and go on to join a second, third, fourth, fifth, etc., has been incredibly high, which feels like good early signal.
Is it normies that are joining the app, or crypto natives, or a mix of both? Like, who are the folks who are getting on here?
So in the early days, with where the product is, as we continue to develop it to make it more friendly for a mainstream crowd, we started with the Solana ecosystem. They've been incredible beta testers of the product. A lot of our user base now is either crypto or what I like to say crypto adjacent, people who are a little bit more familiar with going through the ebbs and flows of early stage crypto products. But our end goal is the mainstream consumer application that so many teams have talked about in the past, of really onboarding the masses to this very simple, positive, health-oriented product.
Yeah, do you have any, I guess, what are the strategies to go after these so-called normies? And, do you think that this whole financialization of it, would that make them more skeptical, or something that they're actually excited to try?
I think it's a fun twist on something that people are already trending towards generally. We see a lot of people talking about walking. If you ever go on TikTok and look more down the kind of social fitness girly kind of corner of the internet, you see a lot of people talking about walking, getting their step count in every single day. So we're trending the right direction that way, if people are realizing this is something simple and effective that they can integrate into their day-to-day life that they're already living to make positive choices and feel good both physically and mentally. I think the financial component to it is actually really compelling and interesting relative to the products on the market today, and it adds a fun twist. The good part about the product is that in terms of the money that you put on the line to join games, it's a very flexible model. So we have free-to-play mode for those who want to try the product without putting money on the line just to get started. We have the ability to join games that have deposits as low as $1 or as high as thousands of dollars. So you can really pick and choose your own journey in terms of the daily step goal you're trying to achieve and the money that you put on the line, which I think lends itself to a really wide breadth of users.
What was your inspiration? Like, what led to the creation of this? Were you trying to motivate yourself or your friends or your family to take more steps? Like, what was your journey that brought you here?
So I've always been very active. I was an athlete growing up, and when I moved to Chicago for my full-time job in finance after college, I was getting my daily steps in all throughout COVID, and I can honestly say that it saved me physically and mentally by making that choice to go for walks every day. The Moonwalk product really spoke to me, and our founders actually came about the idea during a bear market where people often make maybe negative suboptimal choices when their bags are down. And one of our co-founders and his friends made the decision to put CryptoPunks on the line to see who could lower their body fat percentage the most. And it ended up changing his life. He lost a ton of weight and really went down a path he wouldn't have otherwise to be incredibly health-oriented and has never felt better. So he created Moonwalk to really find a way to bring that journey in a similar way to as many people as possible.
Debbie, did I hear that you're a fitness girly?
I'm definitely a fitness girly.
I heard this yesterday. Did you used to do? Are you a bodybuilder?
So like an amateur bodybuilder, but I used to compete in CrossFit as well. Now I'm kind of more into the functional fitness route. I'm hopefully going to take my first high rocks at some point. So yeah.
Okay, so fitness girly to fitness girly. What do you think of the fitness to earn, like an accountability app like this? Is this something that you could see fitting into your routine?
Yeah,
or something
absolutely.
like this?
I mean, I think in general, fitness is one of those things, it's always way more fun with friends, right? And I think when you can stack habits, as we all read Atomic Habits, and when you're taking something like walking that is so simple, and then people feel encouraged to add on things like eating well, weightlifting. So I'm also curious to see how this goes beyond kind of walk to earn, and what is the future vision, for Moonwalk Fitness.
The financial component and the financial and social incentives that are embedded in the product really lend itself to a wide array of different gamification options. We've had users who, maybe prefer cycling, swimming, other activities that this model could be very easily applied to as long as that activity can be reliably tracked. But then you're thinking through, other very powerful components of the wellness journey around sleep. You could think of other possibilities as well there that we're looking at eventually moving into. We want to direct people towards focusing on the most practical places they can start in their fitness journey rather than making it feel intimidating, which I think the fitness industry often tends to do. And it sets people on the wrong path of, setting themselves up for failure in a way by setting unrealistic goals that don't actually fit into their day-to-day lifestyle. So we want to stay on that path. We want to direct people towards the metrics that are most important and the decisions they can make that are most impactful day-to-day. So lots of activities to come, different game modes to come, but we're going to be gamifying a lot of different healthy activities, I'd say.
Caitlyn, well, congratulations on your success so far. We look forward to following your journey. Thanks for joining us.
Thank you.
That was Moonwalk Fitness Director of Growth, Caitlyn Cook. We're going to take a quick break, and we'll be right back.
Of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletters.
Sunny Liu is the CEO of VeChain, one of the earliest enterprise-focused blockchains. Under his leadership, VeChain has partnered with global giants like BMW and Walmart to bring real-world use cases from supply chain transparency to sustainability on chain. Hello, welcome to the show.
Yeah, it's my pleasure.
Okay, so you're wearing the UFC shirt.
Yeah.
I want to get to it in a second, but you just told me this is your 10th anniversary of Consensus, 10th anniversary of VeChain. So was VeChain birthed at Consensus?
Kind of, I would say. Actually, I feel very good about Consensus, especially this year. And 10 years ago, in the first Consensus, I was presenting VeChain prototype. And now I'm presenting like all of the latest upgrades, the VBetterDAO ecosystem, and also the partnership with UFC. And I feel like the whole industry has been evolving, and VeChain was part of it, and Consensus is part of it. CoinDesk is part of that. We are making the histories.
That makes me smile. That makes me smile. You know, things like VeChain can be born at Consensus every single year. I think we don't even know what we're participating in.
Call us regular.
Yeah.
Very regular to Consensus.
Yeah, you are a regular to Consensus. Okay, let's talk about that UFC partnership. I know Dana White has joined your board of advisors, I
Yes.
believe. You have a UFC partnership. What's that going to look like?
Well, actually, we started everything like 3-4 years ago. Basically, the UFC has, well, let's put it this way. UFC is the fastest growing global sports league, right? And also have quite a matching fans with the crypto fans. So I think I believe it's a very good opportunity to go outreaching millions of the people in the world, following the global expansion roadmap of the UFC as well. And recently, I have been talking to Dana like in person. Well, we have been very good friends actually. And I start to show what we're doing, like mugshot, drink coffee, and using the Tesla to earn the rewards by every charging. Well, before, actually Dana was like, Sonny, I know you very well, but I don't know anything about crypto. But when we show these type of applications, he really liked that. So he directly put the question to me like, okay, how can I help you? So I say, you can join us as an advisor, can help us to outreaching your 100 millions of fans in the world. That's he did it. And also he's, I would say it's the best part. Dana is not gonna be only the advisor on paper or like, according to his words, hang out his picture on the website only. No, he actually, roll up his sleeves and do all of the work, keep his hands dirty. I give an example. Last month we were in Miami collaborating with 4ocean.com. 4Ocean is an NGO to focus on clean up the beach, clean up the ocean, recycle the plastics, all of the stuff. And he showed up in the morning, like 10 a.m. Even in that same day, he arrived in Miami like 3 a.m. But he showed up in the morning on schedule. Everybody thought like, oh, Dana may just make a pose, take a photo, and then leave, right? No, he actually spent 3 and 4 hours with us and collect 20 pounds by himself, plastic waste from the beach. And, he calling the actions to his hundreds of millions of fans, do the job, make the ocean more clean and make the environmental is more suitable to the human development. I think it's very important. So.
Well, I think sports is an incredible way, obviously, of getting, crypto in front of millions of users. But yesterday you were also talking about, real decentralization for mass adoption. In your mind, what does mass adoption really look like, and how long do you think it will take for us to get there?
Well, I would say it's just like internet. When internet started, everybody was like struggling about the different type of protocol, TCP/IP, SMTP. But nowadays, there is no such discussion anymore. Basically, you just use a different type of the tools, right, for different type of the utilities. So I think for Web3 is the same. You cannot just ask a normal user to like install a wallet and back up your private keys and all of that stuff, right? It should be just in some of the utility applications. You use that on every day, then you don't even need to be aware there is a crypto behind, there is a blockchain technology behind. So I think the real mass adoption is just like the internet did. It's to your daily life. You use that because you love that, right? Give an example, we have a new application launched like just a few months ago. We call EVEarn.io, which is for a Tesla user, every time you charge your car, you get rewards. And everybody loves that. But the more important thing is we integrated with Tesla systems. So which means when you are a Tesla driver, you log in the application with your Tesla accounts. And then you don't need to worry about all of the crypto or not or all of the stuff, right? And also the API, the authorized API, allows the charging data loading to the smart contract automatically, and basically user just, doing the normal thing. You charge your Tesla and you gain the rewards, that's it. So everybody loves that. And so far we got 98% of weekly retention rate.
Oh, wow.
So that means once you start to use that, you love that. and you like to, spread the words with your friends and families.
What's the trick? I think there are a lot of people listening to you talk, and they think, I have a startup, I have a community, maybe I have a DAO, and people show up at the beginning, and it's hard to retain them. It's hard to get them to come back again and again. What would you say the trick is for you, or the secret sauce?
Yeah, I think the trick is, back to the basics of Web3. The Web3 power is actually from the people, from the user. And the user is no more just like a normal consumer, that type of thing, because the user is also the data owner. Like you own your own data, you own your own creation. So the trick is you gotta treat the user no more just your consumer, but like your partner. So it doesn't matter you're a big corporation, you're a small startup, or even you are just individual developers. When you work with the community, we are working together. So there is no hierarchy, there is no like, oh, I'm the platform, you're just user. No, it's like everybody just doing the different type of job, but eventually goes to one single mission.
Sunny, Debbie, and I were just talking about how focused we are on hearing about real-world use cases, how much it energizes us, and this conversation has done just that. Thank you so much for joining us here at the desk, and we'll see you around the conference.
Yeah, thank you.
That was VeChain CEO Sunny Liu. We are coming to you from the CoinDesk studio at Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. We have 6 stages, 6 summits, over 200 sessions, and more than 350 speakers at Consensus. Let's listen in on one of our dynamic stages happening right now.
Where are we at? Well, yeah, I mean, 100% agree with that. Whether it's sports fans collecting digital trading cards, or whether it's the profile pictures. But kind of abstracting out, I think it's not about meme coins or NFTs. It's just about a new business model for the internet. Today, you have advertising, you have micropayments, you have subscription. NFTs are a way to try and create a new business model for brands, new business model for creators, new business model for communities. That obviously creates new kinds of communities, just like every platform shift does. And we see our role as just helping those brands and those creators bring experiences to their communities that are sustainable, that engage wider and wider cohorts of their fans, and try to do that in the right way. I mean, obviously 2021, 2022, the pace of introduction of these concepts into the public consciousness was so dramatic that, let's say, when you talk about digital collecting, you were talking about on ESPN collecting a product that hadn't existed 3 or 6 months before, whereas now there's years of history and years of communities that are being built. So I think the priority for us is just trying to figure out how do you make things people want and bring it to them, not put this label of NFT or meme coin, but just engage with that community where that community is.
Yeah, same thought building on that. We think a lot at ApeChain about hiding the wires. Account abstraction, how can we get people to use NFTs to participate in meme coins and meme culture without even being aware that they're using NFTs or meme coins. For better or worse, those terms are loaded in a lot of communities and a lot of the world. So on ApeChain we talk a lot about how do we sort of onboard folks without them realizing that they're being onboarded using Web3 rails.
Rohan, I want to go back to you. So a lot of people credit you and NBA Top Shot as really the thing that brought people into the NFT ecosystem. We saw unbelievable amounts of value be created, be sold, be redistributed. But also, it was really the first time I think people thought about the financialization of culture in terms of a blockchain. And so, one, you guys deserve a ton of respect for that. Now we fast forward to 2025. We still saw $5 million in sales of Rafiq Anadol's work this week. It's not like people have gone away, but the sort of passion and the conversation around NFTs has taken a little bit of a different turn. And I'm just wondering, as someone who's been doing it as long as you do, how do we change perception to really get to your point, the core technology of what this does?
Well, I mean, look, the real OGs would give us a little more credit because the 3 years before NBA Top Shot, we actually wrote the first NFT standard, and with CryptoKitties brought the first sort of digital. I think that was the time when a lot of folks first realized, hey, crypto can be more than currency, and we can actually start building applications with this technology. But even back then, so my co-founder Dieter, who's the CTO of Flow, the Flow blockchain, where all our products are built on, he coined the term NFT. But when we were talking about it, we didn't think much about it because we realized, hey, look, people used to talk about MP3s, but now they just talk about songs. People used to talk about, uploading AVIs, but now they just or MPEGs, but now they talk about videos, right? And that's how technology evolves. We talk about the file format, which is the fungible token or the non-fungible token, but really the way consumers will think about it is, hey, these are digital trading cards. These are digital pins. These help me win tickets to go Disneyland. These help me join a community of like-minded folks and engage in the way I wouldn't otherwise be able to. That's, I think, how people will talk about these things, as the community, not the technology. And by the way, with the rise of AI and the change in both how we build our products, but also the kinds of products that can be built, like within these ecosystems, people can come in, whether it's ApeChain or others, use AI to create new kinds of products, and those products will be used by consumers who are not even maybe realizing how this all kind of started, which is a hyper-speculative kind of collectible ecosystem.
And Obama, I want to jump to you for a second, because I think what Hougan's done with the Bored Apes Ape Chain is such a beautiful example of what Rohan's talking about. It is a community. The community has a container which is creating a rule set, and then there is the currency that's within the community itself, right? And what that does and the access it brings based on your participation. What are the challenges, though, that you have seen in trying to sort of spread that word, get that message out?
Well, there's certainly, I think the speculative boom of 2022, 2021, and the crash that happened both across crypto and within NFTs, leads to this. I mentioned it earlier. There's a bit of like a knee-jerk reaction to the term NFT in a lot of circles, which makes it hard to onboard new people. Of course, that's not everybody. We've got a thriving NFT community on ApeChain, and the Bored Ape Yacht Club, is a thriving, strong community, and that's despite there not really being a ton of volatility in the price of those assets. People aren't still holding Bored Apes because they're necessarily expecting it to go back to 100 ETH. They're staying in the club because they love the community, they love the culture, they identify as being part of it. And you see that happening on ApeChain with a lot of NFT collections as well. So the challenge for us is, how do we continue to onboard more folks to, make that appeal wider, given some of those, tensions that you have around the technology and the terms and the fallout from 2022.
And Nam, I want to come to you. Rohan and his team was put in the work when no one cared, right? And building things that a really small audience loved. Bonk comes along and immediately sort of catches fire. And then almost it felt like you guys reverse engineered innovation into the community. So what does it mean now to have this very passionate community that you're then building things that keep them involved?
Yeah, I think there's a very large belief in memes of this idea of no utility, no revenue means there's no ceiling. It means they can do anything. And that works for a set period of time until you get to the area of just well, what does this asset actually have a value for? What does it mean to be a part of holding on to this as purely more than just a speculative play? Because if you're only ever a speculative play or based on something for attention, that lasts until the market discovers something new. And that's where you've seen the rise of various different memes, right? Pepe obviously has a lot of time and attention. Then you have things like Whiff that get time and attention, then Fartcoin, and then all these other things. And you're always going to be looking over your shoulder if you're in a leader position if you don't have anything to offer other than that. The good thing about meme coins, and obviously what also NFTs and these other areas or kind of sectors have proven, is that you can convert the commoditized attention or the value that your community has into applications, into use cases, into things that people will actually spend time using and spending time on the blockchain for. So for Bonk, what we try to do is essentially develop a bunch of long-term greedy communities that can develop their own ideas, use the IP, create various different products, with the goal of creating their own businesses that are just under the banner of a cute, friendly dog. And at the end of the day, if it's getting more people to spend more time on chain with applications rather than just purely on the speculative layer, I think that's healthy long-term comparative to the idea of just all right, well, I'm going to hold this for 72 hours because Murad is tweeting about something, right? That lasts for a while, but it's not going to be able to last forever.
I think a lot about that we are evolving from kind of nation states that have physical borders to network states of just people with like-minded passion, right? And so if I think of the network state of Taylor Swift and the ability for that state to have its own digital imagery, its own collectibles, its own currency, and completely spread across the globe. And the fact that she and that team focuses still so much on giving all of that to Instagram and giving all of that to Twitter and all of that to Facebook and to TikTok, as opposed to owning those rails. What do we need to get some of these really big cultures in to start seeing, oh, we can actually really reward our community back instead of rewarding Mark Zuckerberg? Rohan, why don't you start?
Well, I mean, I think it's a tension, right? Because you've heard a couple times say less speculation, but I think the reality is that the public wants speculation. And if you think of like even our industry in sports, everyone that watches sports has something writing on whatever, something about the game, whether it's their collecting, whether it's their gambling, or they have fantasy lineup, whatever it is. For better or worse, the social media lifestyle that everyone's sort of living in means that we need that extra dopamine hit. And so skin in the game social media is very much the future. And this idea of having ownership in the communities that you're a part of, being able to contribute and grow that ownership, et cetera, is very real. Now, the problem is that how would Taylor Swift today launch a token or launch even an NFT collection in a way that is beneficial to her fans first and foremost, right? Like whatever she does in the current construct, even following kind of the playbook of Top Shot, would cause that. There's no way to sort of avoid it today, and that's a big issue that we're trying to figure out how to solve. You might have seen a week ago we launched a series of new meme coins for CryptoKitties, and trying to figure out, we're still calling them meme coins or meow coins, but that'll get kind of abstracted out, and that's the whole problem to solve, is how would a mainstream community introduce a token-based community or token-based ownership into the way they engage with their fans and the way the fans engage with each other. I mean, we don't have the exact playbook, but it looks something between a mix of NBA Top Shot, the Top Shot fungible token, CryptoKitties, and what it's sort of doing. But then how do you actually introduce that? How do you reward existing customers? I mean, the fact is also true in B2B. The whole concept of using tokens to break the network effects and bridge the user acquisition sort of gap between mainstream platforms and a new product, that hasn't played out yet. What actually ends up happening in most cases is the tokens reward the early speculators, and then the later community either comes or doesn't come, and in most cases doesn't come. In cases like Uniswap, very different, right? Because they had that product market fit, the token rewarded the community, that caused them to sort of go to a new level. How do you create that in the cases where you can't have that sort of immaculate conception of no one knowing there's going to be a token before there is a token?
But I just want to double click for a second. There is almost nobody in our space more than yourself who's talking to the NFL, NBA, Disney. You're talking to the people who could make this happen, and I think they're just scared of what it means to their ecosystem. So what's the one thing you need to say to them to say, let's try an experiment?
Well, I think if we're talking about fungible tokens, we need a playbook more than just let's experiment. When we started talking to the NBA back in 2018, 2019, we had CryptoKitties to show them. And so there was a sort of model of, hey, these are the things that went right, these are the things that went wrong, this is what we're going to do different. And I think today we're still trying to figure out that sort of playbook, because you're saying they're scared, but for good reason, right? Like the way fungible tokens have worked out for most mainstream influencers that have gotten involved in them is not, from Dave Portnoy to everybody else, it's a little too spicy for most of these things. And at the end of the day, you have to think of fan first, and how do you create something that rewards the fan and actually creates a new engagement model that couldn't exist before, which I think we have with NBA Top Shot. When we created that product 5 years ago, the concept of digital collectibles wasn't a thing, and today you go to any sports conference, they have a digital collectibles panel, and it's assumed, it's a fait accompli that people will collect things digitally, because we live in a digital first world, and sports fans are all about collecting things physically. It's just a question of what's that right user experience, what's the right economy, what's the right way to bring it to the masses in a way that doesn't remove the speculation, because there's still, that's part of even card collecting is, hey, I'm going to rip this pack, what am I going to get in it? Or I'm going to collect this rookie, what's going to happen in 10 years when I give it to my kid, et cetera. So how do you bring that digital without losing the magic, but also without over-indexing on the fan that's doing it just to make money?
I actually think that you can do it without the speculation. I think that you can use Web3 rails to bring culture on chain, to bring sports, to bring music on chain without needing to make a token that is like a meme coin of an artist or a meme coin of an athlete. Use stable coins to help athletes and help artists get paid faster, to cut out middlemen, whether that's around merch or around music or different obstacles that artists and athletes face. I think there's ways that we can bring culture on chain without having to sort of speculate and have fans holding the bags.
But I want to jump on and now I want to come to you about this, which is, I agree completely, and I think that we all probably would agree with that, and that reimagining the financial rails is the opportunity we're all playing in a beautiful way, right? Rohan talked about for the brands, it's a little too spicy. I look at the Bonk community and they want spicy, right? They are in because they want to find the next unicorn fart dust that's going to go here and then see if they can get out before. So is there an opportunity within, let's say, the Bonk ecosystem where the game we're playing is quick hit, up and downs, and really playing speculation as an art?
Yeah, you've got to the point where like the NHL playoffs are on right now, and you have like the sports networks that are advertising like 4-leg game day parlays. And anybody who has experience in gambling understands like that's a terrible bet more than anything, but you're rinsing an entire community of sports watchers.
Hey, welcome back to CoinDesk Consensus. We are live here in Toronto, and we're doing something kind of fun. Live recording of the mining pod for everyone who, I know you're out there, you love Bitcoin mining. There's a few of us, and today we have some amazing guests from the Fractal Bitcoin community. It's an L2 ecosystem that is kind of including the Bitcoin mining ecosystem as well with its merge mining product. Of course, we're joined today by Spencer Yang and Caroline Chen, core contributors of Fractal Bitcoin. Both welcome to the stage today. Great to have you guys.
Thank you for having us. Super awesome to be here.
Okay, so let's just start. This is more of a podcast recording, more so than just like a live TV segment. So we get to have a little fun with it. Like imagine we're on Joe Rogan, we're like opening some beers and just chatting. Tell me a little bit about Fractal Bitcoin. What is it when you guys are given like the elevator to pitch to Bitcoin miners specifically? Like how do you kind of describe the ecosystem you guys are building out? I'll throw it to you first, Spencer.
Awesome. Put me on the spot right here. Let's get started. So Fractal Bitcoin is essentially trying to scale Bitcoin and also create an innovation playground for Bitcoin. So right now, about 80 to 90% of Bitcoin hash rates are already merge mining Fractal. And of course, block rewards are proof of work based. So 1/3 of block rewards actually go to merge mining. So if you're already mining Bitcoin, you can also merge mine Fractal at the same time. And the other 2/3 of rewards actually go to permissionless mining. So you would essentially be able to make a choice. And I think it really helps you if you are maybe not profitable on the Bitcoin side and you want to kind of like mine and still receive some rewards. So that's kind of what Fractal is good for as well.
So the Fractal part's interesting because like you're mining Bitcoin, and a lot of these Bitcoin miners are out there. They're focused on energy efficiency. They're thinking about machines. They're thinking about getting new site and acquisitions. There's a lot of M&A right now. But there's this whole other world where it's like you can mine Bitcoin and then merge mine and add another token on top. The most impressive and well-known of these strategies is the Dogecoin, Litecoin merge mining, right, where you have a script miner. This is actually a huge thing in Bitcoin mining right now that a lot of, I think, smarter miners who are really paying attention to the token community are aware of, and they're buying script miners to merge mine both Litecoin and Dogecoin, and these sit right next to Bitcoin miner. It's literally the same sort of application. There's a few different plugs you need to use. But Caroline, I want to throw it over to you. Tell me a little bit about the merge mining side of things. Like when you're describing to a Bitcoin miner, and this might be unfair, this might be a Spencer question, but I'm going to throw it to you anyways. When you're describing this to a Bitcoin miner, like merge mining, and they're like, they don't know what that is. Like how do you tell them like this is what it is?
Yeah, I think merge mining is actually getting more critical as far as the ecosystem for mining goes, because obviously with the halving and like sort of not as many transactions as we hope, I guess, these days on the main network, like how do we ensure that machines continue to run and continue to generate profit? So that contributes continuously to the Bitcoin economic security. So I think like merge mining is one of the ways that enables miners to do that, because then you have additional diversified ways of revenue streams, and that comes from, let's say for Fractal, like we contribute like from basis points to like higher depending on where the token is at. So like that enables miners to have that sort of diversify revenue, to keep running, to keep like ensuring that the operations keep going. So for us, I think merge mining is a no-brainer for the protocol itself. So we have this thing called cadence mining, which is for two parts. Like 1/3 is to merge miners and 2/3 to people who secure the Fractal network itself. So that's to ensure sort of alignment economically with the Fractal network, but the merge mining part is also to inherit some of the security from Bitcoin while contributing that profitability to miners.
Okay, do people get tripped up when you kind of bring out some of these new mining terms? Because in the Bitcoin community, unfortunately, my mining friends, and I'm one of them, I suppose, kind of get like knocked for their lack of technical knowledge. So like when you bring up cadence mining, is it typically like what, and then just kind of like lose interest, or is it because you're working with more of the pool crowd, you can kind of get away from that, you don't have to worry about that too much? Spencer, I'll throw it to you for that one.
Yeah, I think the reason why we kind of like invented a word, I suppose, I mean, we didn't invent words, but that being said, it's the first time I think that people have heard of this term, right? And I think they're like, oh, what is this, right? I think the first reason why we did that is also because, it's really about like characterizing the mechanism, where it's a cadence of like 1/3, 2/3, and it's probabilistic, right? So it's probabilistically speaking, 1/3 of block rewards go to merge mining, and probabilistically speaking, 2/3 on average of blocks go to the permissionless mining side. So that's the kind of the reason why. But that being said as well, I think when we explain this term, especially in the white paper and also on the website and so on, a lot of people would then just like go read the details, right? Yeah. Because at the end of the day, as we know, the mining community is one of the most sophisticated communities when it comes to profit and loss. Like the risk reward function.
Actually running a business.
Yeah,
Bitcoin miners do know how to do that.
Yeah, it's a real business, right?
Yeah.
Sometimes people forget that, right? There's so much operational details that go into it, and then also they're bombarded by a lot of financial products as well, right? Maybe it's like forward hedging and all these kind of things as well. So they would be the audience, honestly, to look into every single thing, and it's really no difficult task for them to essentially understand it.
So I'm underestimating my friends, is kind of what you're saying.
I think you might are. Right.
Let's go into the pool side of things, which you just brought up a moment ago, and then I want to circle back and talk about the Fractal Bitcoin ecosystem you guys are building out on the development side. I'm excited for that part of the conversation, because obviously with Blockspace and what we do with our media company, we focus a lot on the Bitcoin development side. Back to the mining pool. So recently you had an announcement that Foundry, the largest Bitcoin mining pool, is now actively merge mining rewards. I believe that brings you up to 90% of Bitcoin's hash rate, right? Is from my last understanding of it. That's a ton of hash rate. And how did you guys get some of those deals inked in place so these mining pools would be aware of it and then be able to offer merge mining rewards to their miners? Carolyn, I'll throw it to you.
I think it was pretty straightforward, actually. So like when we launched in September last year for mainnet, so just before that, we were just talking to some of the mining pools that we know and just letting them know that this is coming online. And actually, they were all really excited about the possibility of merge mining Fractal, because it was also at the point where I think they were like fluctuating profitability and revenues around that point. So I think they were excited that Fractal was bringing that activity to them. So not only do they get block rewards, they also get transaction fees from Fractal. So right now Fractal has about 2.3, 2.4 billion transactions since we started. So a lot of that has obviously been very good for miners supporting the Fractal network. So I think it was sort of a no-brainer for them, like just bringing that sort of more activity, that energy to on-chain, and then that also contributing to the bottom line. So I feel like with Foundry, for example, I think they've already known about it since September. It's just been taking a while because of like internal controls and things like that. So I think all the pools were aware of Fractal like in September last year, and they just like at their own pace, like basically turning things on and like supporting the network. So I think like sort of the interesting part of that is like some of the pools are distributing FB to their users and some are still in the works. So all of that just comes down to like whenever they get like their internal controls, their compliance stuff all figured out. So.
Yeah, no, to your point, like a lot of these mining pools have to be pretty sophisticated to get SOC 2 compliance. They really have to know where rewards are coming from, I should say. Yep. And so the fact that like that took a little bit of time isn't surprising to me. from a mining pool perspective, these mining pools, we'll use Foundry as an example. They have clients, and these clients are typically U.S. based, big companies. They trade on public markets like the NASDAQ or New York Stock Exchange. How have they sort of approached looking at a new ecosystem like Fractal Bitcoin, which they might not be as familiar with? I mean, Bitcoin has this nice name brand, but it took 15 years to establish that it's something worth devoting your life to, I think, as all of us have here. But for a new ecosystem like Fractal Bitcoin, you're talking to these public companies that can be a little skittish. How did you kind of bring that to the forefront of the conversation? Or did you just leave it to the pools? Spencer, I'll throw it to you.
Yeah. So first of all, I think when we, been talking to the miners and talking to the pools and so on, we found that a lot of miners actually have been proactively talking to the pools and asking them and requesting for them, since we've launched on mainnet, to have Fractal included in rewards, right? So it's really a lot of the demand was actually from miners themselves, and these could be people running, tens of exahashes, or it could be these people who are running maybe a small operation. And that being said, I think at a broader level, to your point about how many of these public listed companies are now mining Bitcoin as well, it's really interesting because many of them may not actually know there's a broader Bitcoin ecosystem. I think it's on us as a community and as a builder in the space to share more information and help them to understand the benefits of Bitcoin ecosystem and the on-chain activities, Matter protocols, and many of these interesting things to help increase the utility of Bitcoin beyond only the digital gold and digital store value narrative, which is perfectly okay, right? But I think the way I think about it is that it's helpful to have a broader umbrella of use cases with any asset, right? Be it gold, be it cash, be it Bitcoin. And I think that's what Fractal can provide to them. And of course, it will be very encouraging if some of them also choose to adopt a strategy of holding Fractal on their balance sheet as well, right? That would be incredible, and that's definitely something I'm looking forward to as well.
Awesome. Okay, so we've kind of talked about the supply side dynamics of these things, how the merge mining works, and how Bitcoin miners are interested in working with the Fractal Bitcoin ecosystem. Let's hop over to the application developer side, I should say. So the FB ecosystem, I sort of think of it in terms of Fractal Bitcoin itself, and then you have the Unisat wallet, which a lot of people tend to use. I'd love to hear more about like the relationship between those things, and then lastly, the core contributors to Fractal, which includes both yourselves and some other folks. So Carolyn, I'll throw it to you. Like, can you kind of round out, if you will, the entire Fractal Bitcoin ecosystem for our audience?
Yeah, of course. Fractal is basically like, it came from this idea that we want to look at a few problems that have been sort of existing in Bitcoin since 2013 with the rise of ordinals and some of the meta protocols. So one of the things that we started with actually looking at congestion. So how do we actually create a scalable system that allows us to use Bitcoin core code itself to scale Bitcoin? So I think that's kind of the main part of it. It's like everything is very native Bitcoin because we're using the same code. We're trying to stay as close as possible, which is why even the mining mechanism is similar. So like with that in mind, like there's no like foreign constructs. There's no like we're not graphing anything on. So it's very very like Bitcoin native to begin with. So I think for that actually enables us to do some pretty interesting things. For example, we have the same address type as the same address as Bitcoin. So basically, if you want to send Fractal to someone, you can just use their Bitcoin address, and that would show up in their wallet as Fractal. So I think that actually enables lots of developers to build stuff on the same basic infrastructure, and that will help to make it easier to onboard to Bitcoin and then to Fractal as well. So I think that's kind of the basis of it. So for Fractal ecosystem, we started with a core contributor team between Blockspace Force and Unisat wallet. So now Unisat has other products other than the wallet. So we've been working very closely with them to figure out what's the roadmap for making sure that Fractal can support as many devs as possible. So we have some very novel things that have come on Fractal. For example, miner validated tokens. We have things like ZK proofs that are being tested on Opcat, which Fractal enables. So that's kind of like the innovation part of it, is Fractal enabling some of the things that people are interested to see on the Bitcoin mainnet but haven't seen yet. So how do we let them come on faster and try out in a real economic environment so they can actually test out how that's going to work with their user base, with the tech and all of that. So we've seen that, and also we've seen lots of more interesting stuff like atomic swaps that haven't been as well done like on Bitcoin. So enabling that as the first step between Bitcoin and Fractal. We also have just large scale gaming, like avatar driven metaverse type things that are on Fractal. So because of the scalability, let's say 20x faster than Bitcoin and sort of a little bit more block space, so that enables more developers to try out all kinds of things. So I think like sort of a well balance between like infrastructurally having support of Unisat, OKX, wallet, and at the same time with like more of the developers who are very excited about the extra block space and sort of the faster transaction times and what it enables in terms of like innovation. I think that's kind of a overview of Fractal and the ecosystem.
No, that was awesome, and I like some of the points that you brought up. So I'm going to pull on the thread a little bit. One of which being like you can use Fractal Bitcoin as sort of like a playground or a testnet for Bitcoin. Bitcoin does have testnets. There's testnet 3, testnet 4 just spun up. They don't have any value, these testnet Bitcoins, but there's some problems with it. Typically, Bitcoin developers try to get TBTC, again, this fake Bitcoin, to use on it. It can be hard to locate sometimes. And then there's lots of block reorgs, and so they're trying to like test out new things and they can't get it done. For Fractal Bitcoin, what sort of things are you trying to draw Bitcoin developers into to test? Is it more specifically to Bitcoin Core itself and the new ways they work on Bitcoin Core, or are you guys trying to bring in some of like the outside people, maybe they're in the Ethereum ecosystem or the Cosmos ecosystem, or they're working on other token standards? Is it more on the Bitcoin side you're bringing in, or more on the altcoin side that you're bringing in? Spencer, I'll throw it to you for that one.
Yeah, I think first of all, we're definitely trying to help the Bitcoin developers and the Bitcoin ecosystem first, right? I think ultimately the way that we think about it is that that's the reason why we started Fractal, and also the reason why we wake up every day and we get super excited to support the ecosystem, right? So first of all, I think we noticed that the Bitcoin development ecosystem has changed quite a little bit. We have a lot of developers now who have been building on the meta protocols like Runes, Ordinals, BRC20s, Alkanes, and so on. So I think Fractal, from a setup perspective, not only supports the Bitcoin developers building on the Bitcoin script, but also these Bitcoin developers are building these protocols as well. As an example, when the BRC20 committee and the main contributors of BRC20 are looking to enable new features like the single step transfer and so on, they can essentially test that on Fractal first, right? Implement it on Fractal first. Pizza swap as well, which essentially is an evolution of BRC20 swap, is actually implemented first on Fractal as the first AMM implementation that uses the BRC20 token standard and really makes it easy for people to be able to create liquidity pools, swap tokens, and whatnot as well. So I think that's kind of the core focus of being almost like the connecting tissue, having the connecting tissue be the meta protocols, and having Bitcoin and Fractal be kind of like complementary in that sense. And I think what we've seen, and to Carolyn's earlier point about congestion of the network as well, there are definitely moments where Bitcoin will be very congested, right? Today, maybe not. Maybe we're at 1 to 5 cent per VB.
It's pretty sad right now. There's not a lot going on in Bitcoin land.
But something's going to happen, right?
Yeah.
We'll see, right? The Bitcoin mempool is going to be lit up, and we're going to be super excited, right? And when that happens, it's one of those things where there could be a natural demand flow that gets propagated over to Fractal, or maybe not, right? I think right now, Fractal is an ecosystem that could have some of these use cases on its own, but at the same time, let's not forget that the block rewards are also going to Bitcoin miners. So ultimately, the way that we've aligned Fractal and Bitcoin is not just at a Bitcoin script level, but also in terms of rewards. So developers can feel safe that when they're building on Fractal, when they're launching stuff for users and whatnot, they're also contributing to Bitcoin at the same time.
Yeah, the money keeps staying in the Bitcoin ecosystem. We got about 3 minutes left. I got 2 more questions for you guys. Let's talk about Alkanes, Ordinals, inscriptions, and all the other competitors that are on top of Bitcoin. There's been this rise of Bitcoin assets. How do you see just FB fitting into this? How do you see Fractal fitting into this?
Yeah, I think we are super optimistic overall around the rise of these various protocols, right? Because at the end of the day, it demonstrates demand, right? And I think a lot of people have been asking us, what are the killer apps on Bitcoin? And I will tell them, the killer app is these protocols as well, right? I know it sounds almost like trivial. It's like someone saying the killer app of Ethereum is ERC20 tokens, but it actually is, right? To a very large extent, right? So I think in that sense, it's super nice to see a lot of creators actually make use of this, right? People have been inscribing wizard inscriptions on Bitcoin. People have been inscribing various kind of like interesting art and content and videos. And also, of course, a lot of these standards also have communities tied to that, right? I think on Fractal, we have communities like Fractal Potato, we have communities like Moon, Gleazy, and so on. It's super interesting to see how these various communities can self-organize and emerge. It's almost like how society is formed, right? Where you have this like empty canvas and space, and that's what we want Fractal to be able to power, and we are very, very optimistic about these protocols. And then maybe taking a step back as well, a lot of the builders are also contributing meaningful work to the protocols, right? You have, for example, teams like Best in Slots looking to do contracts and so on BRC20 side. You have teams like Oil Corp and so on, building new standards like Alkanes and having smart contract capabilities. So we as a, like a passionate student in the space, we are also like learning as these protocols come up. And who knows, right? Maybe with other new standards and new possibilities, there's awesome things that we can unlock as well.
Carolyn, last question too, with the little time we have remaining. Block Space Force is a venture family office that's associated with all this. What sort of products or protocols are you guys looking to bring in-house and kind of incubate along with Fractal Bitcoin and Unisat?
Yeah, I think for us, Fractal is a very big part of that because we believe there's a lot that could go into the ecosystem to build out this alignment with Bitcoin and continuously feeding to that. I think we are also very interested in staking, restaking, some of the other, like building out like Bitcoin yield on-chain and off-chain. So I think there's a lot of stuff there. And definitely also looking at different ways of bringing more capital into the ecosystem as well. So we're looking at like Bitcoin treasury companies, like supporting a lot of the efforts around ensuring there's a lot of education as well as more interest in the space overall, and also like taking that interest and putting that back into how to get more devs into the ecosystem, building with Bitcoin script, building with more things that will actually enable us to create that sort of future that we hope to see with Bitcoin everything. So.
Love it. Well, thank you so much for both joining us. Fractal Bitcoin on the Mining Pod is the first one for both of us. Thank you guys so much for joining us today. We'll be right back in a moment with another recording of the Mining Pod. We're doing another segment, this time with Scott Johnson of Digital Shovel. We'll be right back after a quick break.
Can't keep up with crypto? Never miss a market move with our new mobile app.
The crypto world moves fast, and staying ahead means having the right information at the right time. Track the tokens that matter most to you, add them to your watch list, and get instant notifications on price movements and all-time highs. CoinDesk award-winning journalism now in your pocket. Be the first to know about breaking stories, regulatory updates, and market trends. Tune into the latest CoinDesk podcasts and videos to gain insights and stay updated on the ever-evolving market. Cut through the noise, curate your newsfeed and alerts around your interest. Get the insights you need without the distractions you don't. Download the CoinDesk mobile app today.
It's your boy Logic coming live from CoSensus 2025. We're live in Toronto. I am with Phil and Dom Kwok, and we're going to get in with the EZA Hackathon. Now, as we dive in, what is the most exciting things you have seen today at the Hackathon?
First of all, just the number of people. I mean, we have 1,000 hackers at this hackathon, which is the biggest one we've ever hosted, the biggest one.
Hey, welcome back to the Mining Pod live at CoinDesk's Consensus Toronto. I'm joined today by Scott Johnson. He is the CEO of Digital Shovel, a Toronto-based Bitcoin mining and AI infrastructure company, and we're going to dig into all things AI and Bitcoin mining. Who would have thought? Scott, welcome to the show. How are you doing today?
Fantastic. Thanks for having me.
Yeah, super excited to have you on because you're Toronto-based. CoinDesk showed up in Toronto and Force this year. Tell me a little bit about the Canadian Bitcoin and Bitcoin mining scene. We got Alberta on the western side that does a lot of Bitcoin mining. There's been huge news there recently. And then, of course, we've had Bitfarms, Hut 8, and other large players that you guys service within Canada itself as well.
Yeah, I mean, there's lots of markets that are expanding. Unfortunately, Quebec kind of took the foot off the gas a while back. There's some really exciting stuff happening in Newfoundland as well. And then, yeah, as we all know, Alberta's been great, especially on the stranded gas side. We were speaking with Kalea from the Canadian Blockchain Consortium telling me about some of the cool stuff they're doing to try to relax regulations, make it easier to build some of these smaller sites up to 10 megawatts, a lot easier with a lot less red tape.
Tell me about the energy a little bit, because I think people who are watching this online might not be as familiar with like the energy profile of Canada itself. One thing that you noted right there is Quebec, so the hydropower in that region and then all through Ontario has been a big draw for Bitcoin miners historically, which is why you also saw on the other side of the border in New York a lot of these huge Bitcoin mining sites. Some of the first large mega mines were in those areas, but for Canada specifically, like, there's a very large energy profile. It's not always tapped as much. Does that keep Bitcoin miners just like interested, but there's not enough clarity and regulation to move forward, or what's the deal there?
Well, I think going way back, 2018, 2019, there was a huge rush to Quebec, a variety of really big projects, 50 to 100 megawatts, which at the time was a really big project. Yeah. Not that it's not right now, but it's not a shocker
it's
to
not
hear
a
those
like Texas.
Exactly, and then Quebec being Quebec doesn't like anybody but Quebec making money off Quebec and put the brakes on it. They had the moratorium, and I think they've relaxed some of it, and for smaller projects, We don't see a lot of our stuff going that direction anymore, and I think when government jumps in and does that, that knee-jerk reaction saying, Bitcoin bad and we're going to create a benefit for the environment by banning it, creates a big problem for structured investors and not wanting to do something that they might be, bounced out of there, like just like what happened in New York. Right?
Yeah. So we had a conversation the other day about this a little bit with the tariffs rolling out and how Canada, the United States are going to have to kind of figure out a new stasis for interaction here. You guys make so much equipment here in North America with your configurable mining pods. I want to hear a little bit about the tariff stuff. Before we jump into that, though, give us the lay of the land on what Digital Shovel is doing in Toronto. You guys have a fabrication shop. You guys build a lot of in-house services for both the AI and the Bitcoin mining side of things. For those who are not super familiar with what that means, can you detail a little bit about the product line you guys offer?
Yeah, for sure. So we started back in 2018 cutting apart shipping containers and throwing in a bunch of panel boards inside there, and we slowly, over the last 6 years, became completely vertically integrated. We build everything, including the panel boards, the electrical switchgear, the bus bar, the actual container itself. So we have a full sheet metal shop, robotic line, powder coating, and then we even do the PCB assembly as well, all in-house.
And you guys bring in a lot of those parts from Canada specifically, and then North America writ large, including the steel, right?
Yeah, steel and the aluminum's even from the U.S. Two biggest components that we don't manufacture would be the actual circuit breakers themselves, and then the fans, both of which come out of China. However, because they make up less than 10% of our bill of material, our product's still considered made in Canada. So right now it's subject to only the 10% tariff, and then there's, for any steel that's not U.S. made, there is a tariff on the steel as well.
Yeah, I think just like kind of zooming out here for the audience, like there's obviously a lot of tie-ins with the Trump administration tariffs and Bitcoin, because we saw the price of Bitcoin react pretty violently to the tariff announcements, along with the rest of the market, right? There was a huge sell-off, Bitcoin recovered a little bit afterwards, and now it looks like the tariffs are being kind of wiggled quite a bit on a country-by-country basis, and Bitcoin's responded really positively. I think we're over 104 today on the day, which is great in time for consensus. For Bitcoin miners, they're also dealing with tariffs in a different way. It's not only that Bitcoin price went down at that time, it's that maybe their machines got more expensive, or importation or exportation of their goods got a little bit more expensive. From a manufacturer's perspective, tell me how you kind of took on all the turbulence of those few weeks during quote-unquote Liberation Day.
Yeah, we had a massive slowdown, as did everybody, because of that unpredictability around the tariffs. I mean, you want to go order a pile of miners that potentially could have, if they're coming out of China, 130, 140% tariff added on top. We took the step to basically tell our customers in the U.S. that we're going to eat the tariff for them on any new product that we're selling in, at least at the 10% rate that we're at right now. We have enough room to do that in hopes that that's going to subside and not take a huge chunk out of our business.
How did you see any of your clients, partners, service providers you're working with respond to these tariffs as well? The one storyline that we actually talked about at another conversation was the Iris Energy having to stomach a $100 million bill potentially for importation of units during that few-week period when there was a huge increase in the percentage of tariffs coming out of China. Now that number has gone down since then, so they kind of got unlucky, and who knows what ultimately ends up happening as they're disputing it. But any anecdotes or stories from service providers you worked with, or mostly kind of across the board, people were like, we'll see what happen?
Well, I mean, you see with Iris, I mean, they've completely taken their foot off the gas, or Iron, in terms of Bitcoin mining. I think that was a combination of things, though. If somebody was on the fence because of hash price, and then all of a sudden that happened with tariffs and the excitement around AI, it's a logical pivot. We build a lot of infrastructure for them, busway and power distribution systems and stuff like that for their Bitcoin side. But not just them, even there was a lot of medium to small players that just, everything's on hold, and they want to hold on to cash for the meantime to try to weather this storm, because like you said, that percentage of tariff coming in on product, and if a lot of these smaller guys don't operate with a huge amount of cash to be able to weather something like that. Iris can handle that.
Yeah.
But some of the smaller guys, and when I say smaller, we're still talking 5-10 megawatt sites. They don't have an extra 10 or 20% cash just sitting there to pay for those miners
Yeah.
to jump up. I mean, much less the brokers that are importing this stuff that are relying on, definitely sub 10% margin when they're reselling miners. I mean, that can completely devastate them, right?
Well, I'm going to take you out of your comfort zone and ask you to speculate a little bit as like a political commentator. Why do you think the Trump administration is pushing Bitcoin mining in the United States specifically, but then also pushing on these tariffs that undercut the Bitcoin mining ecosystem and have been hurting different players? It's just a misalignment and not an understanding what's going on?
I think they're two different subjects, right? I mean, I think the execution of the tariffs as a whole was very poor. However, there are lots of countries that have tariffs that are well in excess of some of the ones that were levied across places like China and a variety of other markets as well. Something probably definitely had to be done. Was this the way to go about it? Probably not.
Yeah.
But I don't think that decision weighs in. Like, they still want to develop the local economy and the local markets. But they're not going to cherry pick. Okay, well, I guess they did cherry pick with laptops and cell phones, but they're not going to.
A few things they did.
A few things, yeah. If your cell phone's going to double in price overnight, that affects your voter base a little bit more. But when it comes to industry, I don't think they were sitting trying to cherry pick which one they were going to give preferential treatment to and which one they wouldn't. It's a lot easier to just say, look, this is across the board, and we're going to have to stomach it.
Yeah, that makes sense.
Not that I like it, but I think that's the mentality.
One thing you said earlier, I kind of caught my eye. It's just interesting that you guys started off as this Bitcoin mining company in 2017, 2018, cutting up container cargo ships and fabricating them for Bitcoin mining. And now 2025, you guys are vertically integrated, making AI infrastructure. Tell me a little bit about that journey, the sophistication you've seen increase in Bitcoin mining here in North America. Any thoughts on Canada if you want to add in there, since we are in Toronto, but going from like this little startup working, I'm assuming in some sort of garage somewhere converted, like
parking lot of the same building we're in now. We just slowly took over the entire building.
Wow.
It was originally going to be a marijuana grow op that didn't get their license, and we just slowly took over room by room.
That's amazing. Yeah. That's an amazing story. So, like, how have you seen this side of the Bitcoin mining industry professionalize over the last 7-8 years? AI HPC is no joke, right? So, like, some of these customers, pretty high touch, they want a lot of sophistication. And there's a lot of stories like yours where it's guys figuring out, hey, I can make some Bitcoin, and I can make more Bitcoin if I start mining it. And if I can do this container side of things, the services, the parts, I can formulate a business around it. A few years later, it's something else entirely. But tell me about that whole journey, how you guys saw it.
Yeah, I mean, in terms of the evolution and the maturity of the industry, as with any industry, you're either going to do that or you're going to fail.
Yeah.
I think what I like most about the maturation is it just for Bitcoin as a whole, the ability for us to be banked now, which is still actually really difficult in Canada to do. It's actually a lot easier in the U.S. Yeah.
Okay.
Yeah. I can't as a business accept Bitcoin, or my bank won't bank me.
Wow.
Now there might be other banks and the things might have changed. Because when we first started, CIBC shut us down, TD shut us down. We're with Bank of Montreal right now, but I cannot take and accept Bitcoin onto our balance sheet, and at least in this business.
Yeah.
There's other ones that can. Our accounting firm, M&P, which is the biggest accounting firm in Canada, will not audit our financials if we deal with Bitcoin.
My goodness.
Or if we even get paid a derivative in cash as a result of proceeds of Bitcoin mining.
Do you see that changing in Canada anytime soon?
I hope so. Again, we were talking with the Canadian Blockchain Consortium about this and some of the measures that they're pushing to do that, because there's a lot of time. Like, if you come in to most major banks, like as a small company, and say, look, I'm going to be a Bitcoin miner, most of them, and you're going to get paid Bitcoin and then we're going to convert it to cash, most of the Canadian banks won't bank you. Now, if you're larger, and you've got some pull and lawyers that know people at the bank, then it can happen. But it's still tricky.
That's wild.
Yeah,
I did not know that it was like still.
It's wild.
Backwards.
No, I haven't gone in the last 2 years to try to jump to another bank or something like that. We did look at switching to Royal at one point, and there was all sorts of questions about what we're doing with crypto, if we're accepting it, and they didn't outright say it, but it was more or less, well, yeah, if you're getting paid in crypto or Bitcoin, we don't want to deal with you.
Oh my goodness.
Yeah, it's nuts.
And so, okay, I did not know. That's a little bit terrifying. Let's go south of the border to the United States. where are we seeing hash rate grow in the United States based on like what you're seeing with order fulfillment? People are buying containers from you guys, modular data centers. Where are those being shipped to?
Texas last year by far was our biggest market. Iowa is quite big. We did a decent amount of deployments in Nebraska as well. I'd say those, at least for us, for our customer base, are the three big ones.
Okay.
I mean, we get smaller ones that go to all sorts of random pockets. Like we had some go to California recently, which just
really,
yeah, it was they're pairing it with a solar project.
Okay.
Definitely not grid because their prices are less than palatable.
Yeah, and then in terms of the equipment that you're sending out, still on the container side, or are we getting more into the building retrofits? What's the
last year, the majority of our business was actually the infrastructure, so switchgears and busway systems. We still sold a decent chunk of mining pods and containers, but we saw a huge uptick in people that were looking for that infrastructure, some using it for Bitcoin, others using it for HPC, because there are a lot of parallels in terms of that higher power density distribution systems. While we don't do a racking solution yet for AI, the switchgear, busway systems all are a direct overlap.
No, that's actually great that you're bringing that up, because that's the point I want to move towards next is like, in terms of the different parts, services, and things for AI HPC in this quote-unquote mullet miner where you have HPC in the front and then Bitcoin mining in the back, how do we kind of mesh these two worlds together? The containers, they seem to not be super in demand. Like I'm assuming you can maybe do something with AI HPC with the container, but the buildings seem better.
The thing is you're spending so much money on your servers.
Yeah.
Like, why are you going to cheap out on the data center side of it? Like it becomes not a footnote, but it's a minimal part of your overall build to build that building compared to what you're spending on a bunch of servers, right? For AI at least. And with that level of investment, you're in that $20-30 million a megawatt versus $1 million a megawatt, if not less. Like for Bitcoin mining, they're two different animals. I mean, the one synergy that I see between the two that makes a lot of sense is using the Bitcoin mine to do your curtailing load paired with the AI. So AI, you got to stay up 100% of the time. It's not worth curtailing on and off. But if 25% of your load at that site is Bitcoin mining and then the rest is AI, well, you can work into your deal and your power price curtailing the Bitcoin mine when needed, so you can still get that large power distribution, get a good cheap power price, and then still do the curtailment with keeping 100% uptime for your AI.
And just in terms of how that would look on a physical site, you typically have those two separated almost entirely. Oh, I have seen some funny images of like GPUs and ASICs being right next to each other. And
you can do it, but it doesn't, like, again, you're spending orders of magnitude more for that AI data center. Put AI servers in there. Like, you don't require the same level of build for a Bitcoin mining farm. Even like a gorgeous site, like Iron sites, I don't know if you've toured them down in Childress, they are, for a Bitcoin mine, they're absolutely stunning. They build a super quality build out down there, but that is pale in comparison to what they're going to go build for an AI setup, right? Like you're using passive air cooled versus a full chiller system in AI. They're two different animals.
Yeah, the direct cooling chip. Let's talk about a few other of the builds as we kind of close out here. And I'm just curious, how much are you guys paying attention to any of the new builds, giving up phone calls to people? Core Scientific is obviously retrofitting a lot of their sites to fulfill the CoreWeave obligations. Galaxy Digital just announced that they're going to be retrofitting their entire site and building up to 800 megawatts. So for you guys on the sales and services side, I'm assuming that kind of like watching it, surveying it, throwing out the like quotes and bids for different offerings. But any takes on those builds so far and how they're going to go out? Right? 800 megawatts is a lot.
We don't get super involved in the build direct often. We'll provide our infrastructure and then engineering around that. So on the retrofits, it's more been people saying, okay, look, I need to get X switchgear, X busway. Can it do this? Cool, and then they'll handle the rest of it. I'm curious to see what those retrofits come out like because, I mean, form factor is not the same. The setup for the power distribution is not exactly the same. I think you're going to spend more money trying to retrofit it rather than just building a new building. I'm more curious if what they're doing is just when they say retrofitting, they're using that substation and building a new building for AI beside it. Might be the case, might not be the case, but
that's my gut feeling as well.
Yeah.
Just having been to the Galaxy Digital site as well. One last question as we kind of close out here. Just on a business front, I'm certainly interested in knowing how you guys are thinking about adding this AI HPC revenue to your books. Bitcoin mining is obviously extremely cyclical. I'm assuming, and you can correct me if I'm wrong, that you guys have had to weather the cyclical storms of Bitcoin mining within your business. Does AI HPC kind of make it like bring in some more linear revenue? Is that something that you guys are focused on?
I would hope so. Those sites are much more long-term and not quite as cyclical. I think right now, though, we're definitely going through a cycle of a huge boom on the AI side. But for us, even with the Bitcoin side, it's just, although it is somewhat cyclical, we almost always have orders in the queue, even when the market's taking an absolute crap. And it's two different customer profiles. One is the guys buying into the hype when the price is high, and the others that are buying into that everything's cheap right now, and they realize that's the ideal time to build rather than when, you know, hash price, like you said on your show previously, you know, price is super high right now, but hash price sucks.
Yeah.
Like as a comparison, I think we're, like, I can't remember what rate
it's
we're
just
at.
around like $50 a petahash, and
But we were at
Bitcoin
50 bucks
miners,
a petahash, what, a year ago or something like that?
It's not great. One data point that's going to kind of help out what you're saying there is, you know, difficulty continues to go up. And I'm assuming just like your orders are also pretty linear and following difficulty because people just continue to put on new hash rate online. So, any thoughts on that as we kind of close out here?
Yeah, it's a mix. I mean, I like the equipment usually acts as a bit of a lagger to the actual hash price. A lot of our customers are hosting guys, so they don't care quite as much. But hopefully it's going to invert a little bit and get a bit better hash price going into next year here.
Love it. Scott Johnson, he is the CEO of Digital Shovel. Thank you for watching the Mining Pod here at CoinDesk's. So we're going to take a quick break, and then we will be back with a live session of the hash.
Welcome back. I'm Jen Sanasi. Joining me are my co-hosts Zach Seward and Will Foxley for this special edition of The Hash, live from the CoinDesk studio at Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. MoonPay is building up its payment stack from on-ramps and trading infrastructure to now enabling commerce and asset management. Woo!
That is a mouthful.
That is a mouthful. MoonPay, man.
MoonPay, doing it though.
That was a good read. You're a real pro, Jen
Yeah.
Sanasi.
Thank you.
You're a real pro at this stuff.
Much. I'm so happy to bring you guys here to just compliment me for maybe the next.
That's the
8
plan.
minutes.
That's the plan.
Transcendent growth over the last few years for you.
Let's talk about Jen Sanasi's growth trajectory, all right? Let's talk about, I mean, we all know our roles on the hash, right?
Yep.
You were kind of the Bitcoin curmudgeon.
Yeah.
I was the guy that you guys made dad jokes about all the time for being old.
He was the handsome one.
Jen was like, I believe in NFTs, and I think NFTs are great, like on every segment, and that was pretty much it. I mean, that was really the secret. The secret formula.
Everyone else we can forget about.
Yeah, Ben Bowers.
Everyone else is gone.
Yeah, Naomi.
Yeah.
Wendy. No. This is it right here.
Danny was a
Danny
frequent
made a brief appearance every once in a while. Yes.
He was the real curmudgeon, let's be honest.
You know, we were talking about the famous Danny incident with Naomi Brockwell. That was gold.
It was gold. And for Hash fans,
It's a deep cut. We're here for the deep cuts in the Hash archive. That's what we're here for today.
all right, let's talk about consensus
All right.
before we go off on a tangent here. You've been moderating on stages. You've been moderating on stages.
I have been.
You've both been here at the desk. You've been out and about in the evenings, networking, partying. What have some of the highlights been for you?
Well, I mean, first of all, I just want to shout out John Belding, really the unsung hero of Consensus. He's done a wonderful job this year organizing these speakers, making it all work. He, Amanda Corcoran, Alexa Kimmel, huge shout out to them on the programming side. It's been a pleasure working with them behind the scenes, and they've done just a killer job. I mean, the vibe here is pretty amazing. I think everyone was a little bit worried about Toronto in a year in which US is really the heart of the crypto story. And yet we have something like 15,000 people, very lively expo, lots of butts and seats for big stages, and some buzzy speakers. So, I mean, like, I don't know. I think they hit it out of the park this year.
Hit it out of the park.
You know, I've said this several times on the show, but I'm going to say it again. When Consensus was planned in Toronto, it was a very different regulatory landscape in the United States, right? That's why Consensus is in Toronto. Sponsors, brands, people who have booths didn't want to come to Consensus in the United States. And I think that's a testament to just how fast things can change in this industry. Now it's like, everyone wants to be in the States.
Hey, I want to be in Toronto.
Okay.
Gotta come up here, gotta hang out in this is your neighborhood, right?
It is my neighborhood,
Yeah.
but I don't live here anymore. Although I am repping the Toronto sports team colors. And so is Zach Seward.
Go Leafs.
I don't know what you're doing.
Comeback time.
They're losing, so I'm not wearing their colors.
Hey,
I'm
game
a winner.
tonight. Game tonight in Florida. They could come back.
They
It's not
can
over
come
yet.
It's not over.
It's a
Support
do or
them, You
die.
gotta wear the colors. That's
Yeah.
how they win.
That's how we do it. You're kind of rocking like the Blue Jays like alternate look right now, actually.
I am rocking the Blue
It's pretty
Jays.
crazy. The ballpark is like right.
It's literally right there.
Yeah,
I walked the
right
wrong
there.
way around the building and was late yesterday. It's because I went to the stadium like an idiot. So that happens though. You do things.
That's a good story.
Yeah.
That was a good story right there. And there's a giant tower next to the ballpark.
Have you been up it?
No.
It
Have you
used to
been
be
up
the tallest tower in the world.
it? Really?
Yep.
Do you know what the tallest one is now?
The one in Dubai, I can't remember the name.
That's so good. You nailed it. The Burj Khalifa.
Khalifa.
Yep.
Yep.
Okay, I'll bring you back to Consensus.
Bring it back to Consensus.
Really good time. Yesterday we hosted the Bitcoin and Bitcoin mining stage right over there, spotlight stage. A little smaller because, it's Consensus. This is a big tent. Bitcoin isn't always as interesting. There's not as much going on with digital gold, but I think we brought a lot of heat, and shout out to Colin Harper who helped program that stage. A lot of good conversations around American Bitcoin, a new Trump-backed team bringing Bitcoin mining, pure play Bitcoin miners back into the spotlight in what has been sort of like a kind of middle of the road year for Bitcoin miners, and then a lot of other good conversations around the Bitcoin ecosystem as well. So for me, I love that Consensus this year. Bought a little orange coin to Toronto.
I'm going to play my original road of man on the street, just wondering what's going on. American Bitcoin. What is going on with American Bitcoin, and why is American Bitcoin at a Canadian conference?
They did say a lot. They were loud here. We had Eric Trump on stage talking about Canada being the 51st state, which I'm sure didn't make a lot of people happy here, but in true Trump family fashion, he was not afraid to say something that was pretty loud and perhaps critical. So that was said on stage yesterday. And then American Bitcoin in general, I think, is just trying to make a splash, right? So there's this new idea of the MAGA premium, where you are associated with the Trump family, and therefore capital markets will give you like a little bit of a bump. You see that with the Trump media company that actually trades multiples, like crazy multiples above like its actual revenue. And it's just the association. So I think for the American Bitcoin team, they're trying to cash in on that premium as well. That's the man on the street. That's what's happening.
I mean, American Bitcoin, Eric Trump was on stage. He said it was great to be in Canada, and he was met with applause. I know you brought up the 51st state thing. I was surprised that people are happy to see Eric. I mean, it is a crypto conference, so maybe it shouldn't be that surprising. What do you think?
I mean, people, they love the coins, right? And I was talking to Dave Portnoy backstage yesterday, and he's sort of like, he was like, he's not alone in copy trading the Trump family. So, when Eric Trump is saying, hey, ETH looks good here, there's a lot of people who are following and investing in turn. So, whether that's the World Liberty Financial stuff and some of the tokens that they have on that platform, whether it's pronouncements about other major crypto assets, people in this space eye every opportunity and advantage that they can
Number go up.
to ride number go up. Because number go up, attention go up, vibe go up, and we're sort of in the moment where, according to Raoul Paul at least, we're entering the banana zone, where this thing
Zach can not get this guy out of his mind.
may just rip. I mean, the man's a legend. The man's a legend.
I think every time I've seen you at Consensus so far, you've told me about the banana zone.
I'm all in on the banana zone. I'm all in. I saw him do
Let's see
a
your
talk.
portfolio. Let's see it.
It's
What
looking
we
sad.
rank?
It's
Okay.
looking sad. We're gonna have to get out the magnifying glass to get in
The
on this one.
80-20 rule, as we kind of wrap up here, is true. 80% of people here are up, number go up. 20% are just for building stuff. So that follows, right? They don't really care who's on stage as long as they're like saying coins are going to go up.
I
Zach
will say,
gets it.
I still am
Amen,
all
brother.
for. I am all for the use cases. All right, that is one thing that has stayed true for me. I am for the everyday use cases. I've been talking to the companies
great
that are
throw.
still building. Yeah.
This is the alley-oop to me to show my magazine. Usecase.xyz, sign up. If you're like Jen and you care about the use cases, usecase.xyz for a print publication dropping in September. Check it out.
I've signed up, so there you go. If you're about the use cases, usecase.xyz. Maybe I can become a brand ambassador.
We can
for
work
the
something out.
zine. Maybe we can work something
Reflink
out.
inbound.
There you go.
We
Use
can work
code
something out.
Banana Zone to
Use
get
code
20% off your next magazine.
All right, that was super fun. Thanks for sticking with us in this interesting episode of The Hash. I was joined by Zach Stewart, Will Foxley. We're going to take a quick break. We'll be right back. Hello and welcome back to CoinDesk Live from Consensus 2025, brought to you by MoonPay. Joining us now at the desk is David Fields, founder of Ready AI. David, how's it going?
It's going well. Thanks for having me.
Thanks for being here. A lot of announcements happening here at the conference, a lot of partnerships. You have a new partnership with Common Crawl. Talk to us a little bit about what that entails.
We do. So to give you a little bit of background on Ready AI, so we're structuring all the world's data and making it universally accessible to AI. So Common Crawl is a group that's responsible for the majority of the data that goes into OpenAI's models, Meta's models. So they have what's known as the Common Crawl of like all of the web data that's accessible to be used for training purposes. And so we worked with them on an AI agent, kind of based on all of this data, on kind of years of kind of their internal web serves and discords, to really make it possible for AI researchers to come in and immediately sort of get an understanding of how to utilize this data set. And now we're starting to work with them on optimizing this data set for new use cases in AI.
Break that down a little bit more for
Sure.
me. What was the problem with the data before? What is the problem that this partnership's solving?
Yeah, so really think of what we're building as a structured data pipeline that can enable AI agents. So this is sort of an enterprise AI agent use case. So this agent lives in their Discord now and is ultimately able to answer very detailed questions about how you get set up with your kind of with this data set. What's in that data set? How can I kind of get started and start to train my AI models right away? So that was sort of phase one. Phase 2 is now saying, well, there are a lot of other use cases. So RAG, retrieval augmented generation, this is something we're really focused on as a company. So most enterprises really just need to optimize their data so it can be retrieved from using foundation models. They don't need to train their own foundation models themselves, but there's a ton of unstructured data that they want to put into these systems, and so that's what we're enabling. That's what we've kind of shown with Common Crawl. But with Common Crawl, we think we can optimize their data set for some of these novel use cases, and we're starting to work on that via our pipeline that we've built on BitTensor.
Got it. So I was going to ask, in your bio on this site, it says Bitcoin since 2013, I think. Is that right?
That's right.
So I'm trying to dig in this explanation, what the crypto angle is here. And you alluded to it about the BitTensor mention, which does seem to be kind of an emerging ecosystem for decentralized applications. So talk to me, what's the crypto angle here, and any thoughts on building on BitTensor that might be worth relaying to the audience?
Yeah, so I mean, I studied incentive design in college, kind of before Bitcoin was even a thing. And so seeing Bitcoin in 2013, I kind of immediately was intrigued. I've spent my career mostly on the investing side. So I worked at Disney doing M&A and strategy at corporate, worked on the Pixar deal and we acquired Pixar, ended up going to run investments for the former CEO, for Michael Eisner, for about a decade. And kind of on the side, I kept investing in and getting very excited about Web3, and ultimately decided, really with the emergence of AI, like it was just too exciting of an opportunity to bring those two things together. And so with BitTensor, I sort of look at BitTensor as like the most interesting and innovative incentive design that I've seen probably since Ethereum. And I know that's sort of a bold, sort of call. But really what it's trying to do is create a proof of useful work system. So if Bitcoin is effectively solving problems or solving a kind of hash problem that effectively goes to waste other than securing the network, BitTensor really was attempting to say, how can we put that GPU compute to useful work and also sort of secure the network at the same time. So we've built one of the subnetworks on top of BitTensor. We're in that data layer, but it's kind of a general purpose architecture. So there are many people who are doing compute subnets. There are people who are doing inference subnets, data subnets. And so we really were excited about leveraging this global marketplace of intelligence. So people are doing data annotation for us all around the world using LLMs, models that they train, and they're now doing it at a level that's 86% better than human annotators and like 51% better than GPT's top model for this task, because we're really specialized in sort of the data tagging and structure.
Are there any other sort of emerging projects in the Tau ecosystem that you're excited by? Again, I hear more noise about BitTensor than I had previously, and I'm looking for a way in.
It's really exciting. I mean, so just 3 months ago, there was a pretty significant upgrade to BitTensor, which was called Dynamic Tau. So it actually fair launched tokens for all the subnets. So we're subnet 33, so we now have a fair launch token. The only way to get it is to be a contributor to the network. So you have to mine and actually provide data annotations. You could be a validator who's verifying the work, or you could delegate stake as an owner of Ready AI's token to the validators and sort of earn some staking rewards as well. So there's now, I think, 110 subnetworks. It's permissionless, so anyone can sign up for a subnetwork. There's some Tau that you have to put up that dynamically changes in price if you want to put up a subnet, and then you're competing in a marketplace. So ultimately, the price of our token determines how much Tau emissions that we get and get to share with all of our contributors. So I wanted to give a little bit of the background. I know you asked about some of the projects. So there's a bunch of fantastic projects. There's one called Shoots. That's doing the most tokens per second of any kind of API provider to OpenRouter, which is like one of these API marketplaces, not just for Web3, but for the broader ecosystem. So they've processed trillions of tokens and inference, so really significant scale that's being done here. There's another project called BitMine that's looking at solving for is something kind of AI created, AI generated, or is it human generated? And so there's a variety of things kind of up and down the stack and prediction oriented. It's a pretty diverse and exciting ecosystem.
All right, David, we gotta leave it there. Thanks so much for joining us at the desk
Awesome.
today.
Well, thank you so much for having me.
Hopefully we'll see you around the conference.
Yeah, sounds good.
Thanks, man.
Thank you.
That was David Fields, founder of Ready AI. Let's now take a look at what's happening on the conference floor.
It's your boy Logic. We're live at the EZA Hackathon. We're on the ground. We're talking to the hackers, the builders, the founders right now. Let's see what they're talking about. What's up, bro? What's your name?
Jonathan, what's up?
Chilling, man. What you building?
Right now, Tinder-like public service to fund projects.
So my name is Prithvi, and we are from Northeastern University. So we're building a decentralized Web3 support ecosystem.
My name is Alejandro. I'm from University of Waterloo, and we're all building Aeonia.
So we're trying to build a freelance platform that connects clients to freelancers, and we're trying to bring it fully on-chain.
What we're trying to do is we're trying to build a multiplayer game, and it's completely built on-chain. Everything is decentralized and it's on the chain.
We're trying to build an in-theory version of a supply chain management system.
Here at EZA Hackathon, we've seen some cool ideas, some cool projects. I have nothing but high hopes for the future, especially with Web3 and blockchain technology. We have some future leaders here today. Peace.
Can't keep up with crypto? Never miss a market move with our new mobile app.
The crypto world moves fast, and staying ahead means having the right information at the right time. Track the tokens that matter most to you, add them to your watch list, and get instant notifications on price movements and all-time highs. CoinDesk award-winning journalism now in your pocket. Be the first to know about breaking stories, regulatory updates, and market trends. Tune into the latest CoinDesk podcasts and videos to gain insights and stay updated on the ever-evolving market. Cut through the noise, curate your newsfeed and alerts around your interest. Get the insights you need without the distractions you don't. Download the CoinDesk mobile app today.
Ahead of the markets with the Crypto Daybook America's newsletter. Get daily price updates, key trends, and analyses delivered straight to your inbox every morning at 7 a.m. Eastern Time. Sign up now at coindesk.com/newsletter.
Welcome back to the show. I'm Jen Sanasi here with my co-host Zach Seward. Helium recently announced a partnership with AT&T to bring Wi-Fi to thousands of U.S. locations. Joining the show now is Helium COO Frank Mong, who was on our Brand and Creator Summit stage yesterday here at Consensus. Hey, Frank.
Hello. How are you?
I'm doing great. How are you doing, Zach?
I'm doing pretty good.
Yeah, we
Fantastic.
are just all three of us killing it here at Consensus.
Yeah.
Let's talk about this AT&T partnership. This
Sure.
was a big deal. I remember when
Yes.
the news came out, it was a really big deal to get a telecom giant like AT&T to partner with you. For our audiences watching at home, talk to us about what the partnership entails and what it means for folks who
Sure.
use AT&T.
Yeah, it's an incredible long effort to work with AT&T. Our guys, Mario DiDito and Joey Patton on the team are like the stallions from telecom. You know, they're fantastic. And they really worked to get the AT&T team on board by really creating value to AT&T and their customers. And that's step number one. And how they did that was they showed that the Helium network allows AT&T to essentially turn fragmented, unmanaged Wi-Fi networks around the United States into high quality, sort of virtually manageable environments that customers of AT&T, when they're near it, can use that environment securely with no interaction. It just automatically happens. in that manner, allow AT&T to really balance their traffic better. For them, it's lower operational expense, lower CapEx, but for the customer, it's still the same great AT&T experience. So that collaboration with them really started with showing them and demonstrating that the Helium network that the community has built truly is high quality. That's step number one. And that's really how we really took that to the next level.
Right now, Helium is coexisting with AT&T, but when you think about the future you're building towards, do you displace AT&T? Do you displace the big telecom giants?
Yeah, that's a spicy one.
It is, isn't it?
It really depends on how you look at it. There's two sides of this market. There's the supply network side, and then there's the demand subscriber customer usage side. So I'll focus on the supply side. The supply side is a network. Helium has a network. AT&T has a network as well, and they have a network of cell towers that they either build and own, or they have partners like American Tower and others that are managing it for them. Those are very, very expensive propositions, whether it's a cell tower that they own or something that American Tower is running for them. Expensive as in like hundreds of thousands of dollars to do per tower. When you think about the Helium network built by the community, they're indoor cell towers focused on inside, making connectivity inside a building better. So in that way, it's more complementary. Cell towers are outside, Helium indoor towers are inside, and it's only $250 if you want to buy one, or you can use an existing enterprise class Wi-Fi gateway, like Ubiquiti, Aruba, Cisco Meraki devices. Those listening on your show right now, they'll know what that means. But those with Passpoint will have the ability to use and connect to Helium. And so there's a number of approaches to this, but at the end of the day, what that means for AT&T as a network operator is that they have choice, and they have high quality choice between Helium, American Tower, and their own. And what they want is to be able to balance that traffic across the board. So from that perspective, it's very symbiotic. On the supply side, it's a different issue. We all compete, we all want to offer better services for customers, and the Helium mobile proposition is that, hey, you want a free plan, we have it for you, no gimmicks. And that's just tough for anybody else to compete with because we're powered by crypto underneath that.
Got it. So for AT&T in this instance, efficiency, cost savings, what's in it economically for the folks who stood up the Helium network, the regular people with the nodes? Do they see benefit from this partnership in an economic way?
Great question. And so what this means for Helium mobile hotspot owners or Helium network operators, they get more traffic using that shared network. And that just means more HNT that they'll earn through that traffic that's used. So it's about 50 gigs, 50 cents a gig that they get for traffic flowing on their network. So because of collaborations like AT&T and Helium mobile subscription growth, we're seeing roughly about 1 million DAUs. That's 1 million daily active users on the network, transferring about 25 terabytes a day across all of the Helium hotspots out there. So that equates to HNT earned for them. So if you haven't gotten involved, you should check it out.
You mentioned the free Helium mobile plan. You mentioned it on stage when we were together yesterday. And some folks, when we were at dinner last night, were asking, like, how does it actually work? So lay that out for our audience who's wondering, how do I get a free mobile plan?
Yeah, so it's very simple. If you want a free plan, you get 3 gigabytes per month, text, talk, and you don't have to give us a credit card. You just download the Helium mobile app, sign up with your name and birthday and like your street address. You're in. Once you're in, you have to enable location sharing. We need that, and that's a way for us to see where you dwell, where you hang out, as well as all the other subscribers on the free plan. That informs our network to go and grow and build in areas where you like to dwell. That information is completely anonymous. We don't share your ID, we don't share who you are and all that. So you don't have to worry about privacy or security. But we anonymize that and we share that so the network can continue to grow. And for that information sharing, we earn HNT. So Helium Mobile, in essence, is keeping that HNT. In exchange, we give our subscribers of that free service 3 gigs of data, and they earn something called cloud points. It's like airline mile points that they can earn on a monthly basis, and they can redeem that for real gift cards, Starbucks, Lego, Disney, whatever you like. And so I think that's the proposition, and that's the underlying economics. And that also means that it doesn't cost us anything to do this, which is a win for everyone.
Got it. I'm going to ask you a question about DePIN as a sector, right? I think Helium is probably the market leader in DePIN. You guys are doing big things, working with big names, really interesting to see. However, I don't think there's a ton of other examples of DePIN really working within the category. So I'm very curious for your perspective on why that might be, if it's a supply-demand mismatch, if some of these solutions aren't providing actual material benefit to partners. Yeah. Why isn't DePIN really clicking at scale when some of these things could be really game-changing?
Yeah, I think it's probably two things. One is awareness. I think DePIN probably needs to do a better job of getting out there and marketing itself and sending a very simple message. Today, I would say most of DePIN is capturing what I would call like hackers and tinkers, people that like hardware and that like to play and build. And so that's a subset and small group. What we have to do is enable that group to go and expand, right? Get their voice out there. So I think that's one, is just pure awareness. I think number two, a lot of DePIN projects out there that are very successful, like Render, HiveMapper, GeoNet, just to name a few, they work B2B. They're working with large enterprises, and just like us working with AT&T and collaborating, it takes a long time. It takes like a year and a half to get them to a point where they go, oh, you are solving a problem for me, but not only that, you're solving it at a better pace, in a better way. And so now I trust you. That takes like a year and a half to 2 years. So I wouldn't like sleep on DePIN. I would say, okay, be patient. Some of these guys are making headway, like HiveMapper announced, I think, Lyft as their new customer. I mean, I'm sure that took like 2 years. They were at this for a long time to get to this point. So I would expect in the months and years to come, there will be more and more large enterprises coming on board at DePIN.
Yeah, which areas do you see as most ripe for that opportunity, right? You mentioned HiveMapper, which I believe is in the transportation space. Yeah. You mentioned Render, which I think does decentralized compute for like visual graphics and stuff like that. As someone, again, building in DePIN, what are those other spaces that are like the low-hanging fruit for these decentralized systems?
I would say look for things that have high expense, high CapEx costs. Like, for example, a cell tower costs about $300,000 to $500,000 to put up. If DePIN can create an indoor tower for $250, that's staggering. You've got a competitive advantage just on capital expense. I would look for things like that. Render's another good example. CPUs are expensive and they're short in supply. You've got this massive opportunity to decentralize that and use excess space to go and help process GPU. So to me, those are like the indicators to look for. What's super rare, scarce, and very expensive to get, and how can this DePIN company, like a Helium, turn that around and make it super cheap?
When you think about timeline, you think about the future that you're building towards. What you're talking about sounds like it requires a major shift in the way things work and capital allocated to some of these industries. What's that timeline?
It can be a long time. Like when I first started at Helium 8 years ago, I thought about operating in decades, not months or years. For Helium to succeed, even 8 years ago, I knew that it would take us about 10 years to really break through that enterprise glass and really make a difference with a large customer like AT&T. It's taken us 8 years, so we did it faster than a decade. But I would expect horizons to be longer, just because you're dealing with incumbents that have been operating for almost 100 years. Really old technology. To get that to move and change takes time, and it takes a lot of acceleration by a large group of people, especially when it relates to decentralization and crypto. And so I think there is a time horizon. I'm on a decade time horizon for Helium. We're getting close, so I love where we are and the pace that we're going at. But I would say for all of these other projects, it does take a long time. But again, the market we're going after in the telecom space is worth like $7 to $9 trillion globally. That's a lot. That took a lot of energy from a lot of people over a lot of time to get to that $1 trillion mark. If we could even get into the billion marks, we're doing great, I'd say. And I think the good news for DePIN is that Helium is well known in telecommunications. They know who we are. They know what DePIN is, and they know what this could mean. So I think we just have to keep proving ourselves. Deliver value, deliver great customer service, and just outrun everybody. Just gonna be faster.
All right, Frank, on that note, we are gonna have to leave it there. Thanks so much for joining us at the desk, and we'll see you around.
Thank you so much, guys.
Good stuff, thanks.
Cheers.
That was Helium COO Frank Mong. All right, it is time to take a look at Myriad Markets, where users are betting on whether Drake will attend Consensus in Toronto. It is Friday, so we don't have much time left for Drake to make his appearance, but I want to let you know that 4 markets are live on Myriad Markets, including whether the Toronto native will attend Consensus 2025 in person. Will Eric Trump mention President Trump more than 3 times? And will MoonPay President Keith Grossman use over 20 exclamation points in tweets during Consensus? Plus, there is a USDC betting market on whether Bitcoin will reach $110,000 during the event. You can join in on the action on Myriad Markets. We're taking a look at the poll right now. Zach, I don't have my glasses on, but it looks like most people think that Drake is not coming here.
I think that is safe to say. We're looking at about 99% probability that Drake will not attend. I think that maybe they're going to get that one right.
I mean, you're just going to have to wait and see. I'm not saying I have.
Do you see him anywhere?
I'm not saying I have any insider information.
Do you see him anywhere?
But I'm just saying maybe you're going to have to wait and see.
Okay. I mean, I'm ready to do that. I'm ready to wait and see.
All right, let's go. Let's get to our next segment now. AI and Web3 are unlocking a new era of creativity, one where stories can be co-created, IP can be owned and monetized in new ways, and the relationship between fans and creators can be redefined. Our next guests are at the center of this innovation. Story Protocol CEO and founder Sai Lee, and Phantom 4 Ascension story writer, director, and producer David Sawyer. Hello.
Great. Nice to meet you. Nice to have you.
Nice to have you here with us on stage. I know that there was a world premiere here at Consensus.
Yes.
On the main stage. Tell us about what went down.
We premiered a short video that hasn't hit our platform yet. It's just kind of introducing the world to some of our characters from Emergence, which was built on Ascension and Story. And we're kind of in the beta testing stage, rolling out different features, but it's super exciting.
All right, so we're entering the world of AI-generated content. You know, you see sort of mimetic value in people turning their, I don't know, their profile picture into, famous anime art, for instance, right? And I think that's a really tangible example of why tokenized IP can be of value, right? The original creators of that art weren't really rewarded for that going viral.
They weren't rewarded at all.
Exactly, right? So if there's a way to log this on the blockchain in which some of that material benefit can reaccrue to individual creators or companies behind these efforts, I think that's what you're building towards. If you can unpack that vision a bit further with some other concrete examples, I think that'd be great.
That's a great example.
I think that's a great example. There are 2 things, 2 ways I would describe Story. First is that it tokenizes IP. IP is a massive asset class, $60 trillion asset class. It's your memes, it's your favorite characters, it's your favorite, any kind of brands, trademarks. All of these are IP, but at the moment, it's all illiquid. It's all, you can't trade, you can't invest. It's something owned by big companies. It's locked up, right? So we allow you to own this IP. Blockchain is great at assigning and assigning value and transferring value. So that's one. After these IPs tokenize, what we do is we take out the middleman around licensing and remixing. So you made an example of how ChatGPT is using Studio Ghibli's animation style, right? For instance, Studio Ghibli can tokenize their IP, and then they can set the licensing royalty sharing rights around using their style. They can say, if you happen to use my style and then commercialize it, for non-commercial, do whatever you want. It actually adds up the mimetic value and the distribution effect from IP. But if you actually end up creating a Studio Ghibli style show and make tons of money from YouTube, from ad revenue, give me 10% of revenue back, 30% of revenue back. So that, and all of these will be tracked on chain and also will be set through Story.
Got it. So that's programmatically enforced instead of going into the world of lawyers and, and invoicing.
Yeah. A lot of individual creators on Etsy. I'll give you another example. I was involved in a big IP, a TV show, very well known, and we were talking about doing merchandise for it, T-shirts, coffee mugs, what have you. And to be frank, the merchandising material that the studio was generating just wasn't very good. So I called up Etsy. I was on a Zoom. And there was all of this unlicensed material on Etsy, and it was better than the official stuff. And I just said, can't we just make a deal with the top 10 creators on Etsy? And the lawyers at the studio said there's just no mechanism for that. This would solve that. These individual creators on Etsy, they don't have the time or the money to hire a lawyer to create individual licensing agreements. But if they come to our platforms, it's all sort of built into the framework with a series of drop-down menus. And that way, it works both ways. The creators make money, and at the same time, the holders of the original IP are sort of kick-starting innovation and refreshing their IP.
Yeah, I'm just going to jump there because I think it's interesting that you mentioned sort of the small individual creators versus the big boys, right?
Yeah, it can work both ways.
So I'm very curious, when you're sort of making this pitch to both of those parties, is it resonating more with one group over the other? If I'm an individual IP creator, does this become more attractive to me? Or do you find that the bigger companies are more interested in, again, getting that extra revenue from potential remixes of this content?
If I could step in, I think the big companies are realizing that, say 10 years ago, the remixes and derivatives are fan fiction and fan art. But now, with actually AI, basically you can be your own Hollywood studio. This is inevitable. People are going to make insanely great remixes that are very, very high production quality. So this is inevitable. Instead of do lawyer up and start suing this phenomenon, why don't we create a win-win scenario where I can benefit in terms of revenue, distribution effect on this? So that I think people are opening up. It's an inevitable reality. So instead of actually trying to wall garden it, let's make an open source, but have a value capture.
So I had a question. So say I make a movie. It stars AI Jen Sanasi. She's my lead. Am I right? Am I right? It's a wonderful movie. Can she retroactively gain access to that IP such that her AI-generated likeness is something that produces benefit for her? Or is that something that she would have to go into and I would have to go into from the launch of this product from the start? How do I get sort of retroactive benefit?
If you guys were smart, you would do it at the beginning. You would log your likeness, which is your, in this case, intellectual property on the blockchain, and then protect yourself against all future uses. But I'll give you another example of what we're doing. I created a use case for Story and Ascension called Emergence, which is a new franchise that wasn't created with the studios, and that was built to be built upon, if you will. And so what we've already done is we're sort of in the soft launch phase, and we've got about 100,000 members of the community, and we're in the middle of finalizing deals to do a narrative podcast, comic books, et cetera. But we're going to allow the community to create characters and have a path towards canonization. So some of the characters they create will eventually appear in the podcast, in the comic books, and the provenance of that will be registered on the blockchain, and they will be compensated for that provenance. When I was a kid reading Marvel Comics, you could write a letter to Marvel Comics and maybe do a sketch of a character, but there was no way for your contribution to ever sort of swim upstream and become canon. Same with all the Star Wars fan fiction right now. There's no way for any of that to become canon. We're talking about a mechanism, a possibility where that could become a way. And there's a potential for that to democratize the creative process.
I get the use case for smaller creators, but I want to come back to the studios, the intermediary, right? What role do they have in this future that you're building towards? There are a lot of people making a lot of money off of IP right now. We talk about rights contracts. They're often much more complicated than I think that we can unpack at this desk right here, especially when we're dealing with big studios. What role do they have in the future that you're building towards?
So the role they have is they can be a participant of this future, because if you're Studio Ghibli, you got a mimetic and distribution effect, right, about Studio Ghibli style. But everyone knew about Studio Ghibli style anyway, but it's not, they're actually taking a lot of money off the table from not capturing the upside in the revenue. And maybe, okay, most of it was just fun memes or fun non-commercial stuff, but why don't you just go out and say, okay, I love this. Why don't you make animation with all these tools that are coming in AI, put it on YouTube. Maybe some of it becomes part of my canon, somebody becomes, somebody goes viral on a TikTok or YouTube. And you can commercialize and you can share the revenues. There was a very funny video on YouTube called Harry Potter and Balenciaga. So there was a 10-minute video of Balenciaga commercial done in Harry Potter style. It got tens of millions of views across all these platforms, but the creator, they get sued by Warner Brothers, J.K. Rowling, or Balenciaga. So what they've done is they actually said, I really want to continue to make these remixes. Give me some donation and tip. And he turned off all any commercials because he knows he'll get sued, right? So instead of that, maybe Warner Brothers or J.K. Rowling can say, okay, there could be 10,000. It's not just fan fiction. There could be 10,000 fan movies that are coming out. Yeah.
I'll give you another use case as well. I get offered a lot of intellectual property in Hollywood, and all the different studios have these troves and troves of rights, and they're constantly looking for, how do we refresh this property that hasn't had a film or TV show for 70 years? And so sometimes they look to someone like me to figure it out, but they're sitting on a lot of this stuff, and a lot of times they don't know what to do with it. So one use case could be, we're going to take some of our secondary or tertiary franchises, we're going to register on the blockchain, and we're going to offer to the community and say, let's see what you guys can do. If you guys can figure out a way to monetize it and innovate with it, we both win. You guys win and we win.
So what I like to say is, like, some people, when they think about Story, they think about it as an IP protection platform. I would like to have them think of it as more of a IP growth platform, right? So you're sitting on incredible IPs, and now everyone can make great spin-offs, great remixes off of your IP, as you've seen on the Studio Ghibli animation style you mentioned. So why don't we empower them? Now so I like to say, if everyone has an IP Lego, really, really high value IP Lego, and they have this magical wand of AI, they can create insane stuff.
Yeah, I like how you're alluding to composability, right? Which is sort of a crypto term, right? You get this rapid innovation by building new things on top of existing things in an open source fashion. So there is sort of some resonance, I think, between what you're saying about those creative IP Legos. I guess my question is, what do you think is going to unlock this? What do you think is going to actually drive the success of this, right? Because you bring out the backbench IP and you say, hey, go play with it. That could take off or it could not.
So one of the big things that crypto has advantage for is this. Actually, it's on music, not just Hollywood IPs. For now, we've actually tokenized Blackpink's music, Justin Bieber's music. So we're allowing crypto investors with stable coins, like how they invest in T-bills, investing these IP RWAs and get yields is what we've done. We have about almost $20 million worth of music catalog from Justin Bieber's Peaches to Blackpink's music catalog, kind of tokenized. And let's say if this movement becomes bigger and bigger and we get bigger funds, bigger music catalogs onboarded, then what we can do is we can have master rights for these properties, and we can actually set remixing licensing right. So if there are very, very attractive IPs like that, and a lot of these IP holders want to come here for the liquidity of crypto, amazing money flowing in crypto. So that's one thing that we can attract people into, and then we can show further yield, further engagement coming from these IP properties once it's tokenized.
So SY, how are you getting these deals, right? Are you just knocking down doors in Hollywood? You just know people in the industry and you're saying, hey, here's the benefits, here's what you should consider. Is that really where you're at this point in time, or are there other ways in which people are coming into you to talk about tokenizing their IP?
I think one of the things is, it's not just about BD-driven things, but also it's about right application partners who makes it extremely easy to actually play and remix with this IPs with AI. So we have a company, for instance, called Abelo. They work with Balenciaga to Crocs, and now all these IPs are registered, and you can make your own version of Crocs shoes, your own version of Balenciaga shoes, and actually print it with the 3D printer. And then later, and for some of these IPs, they can have a rev sharing agreement with the IP owner. So it's once they see great product experiences where, like, just any bottoms up creators can make very, very creative product easily, they actually want to get in because everyone's looking for another revenue stream. So if there's a product driven approach of making sure with these IP Legos you can make great stuff, number one. Number two is not just product, finance-driven approach, where, okay, you're looking to exit your IP, you're looking to sell some of the IP, you're trying to fundraise for your IP, come in, IP RWA. It's like Ondo for IP in some ways. And then, just a lot of BD deals, as you said. Yeah, those kind of things.
Well, yeah, keep on the grind, man. Good luck to you.
Yeah.
Good luck. Thank you for joining us
Thank
at
you.
the desk.
Thank you
and
very
we'll
much.
see you around the conference.
Thank you so much. Bye.
Thanks, guys.
That was Sai and David, Story Protocol CEO and founder, and Phantom 4 Incension Story writer, director, and producer. All right, let's take a look at what's going on social media. Our hashtag is Consensus 2025. If you want to tag us, we are at Consensus 2025. We're at CoinDesk. Let's take a look at what some of you are saying. I'm not going to read the tweet because I think maybe that's kind of lame, but we are looking at the AI Summit here. I said it was kind of lame, but it's really because I don't have my glasses on, Zach. So what does it say?
I'll read it for you, Jen.
Okay, thank
I got you. It says, so much buzz around AI and blockchain. Loving the vibes here. So Jeff Wilzer was kind enough to organize the AI Summit today. It has been very well attended. We're sort of looking over to that stage right now. They're currently dark in break, but I will say the interest around Web3 XAI remains if the seats being filled over there is any indicator.
It's been a hot topic at the desk, too. I mean, AI is really kind of empowering crypto in a lot of ways and vice versa, so I'm excited to see some of the conversations that come out of that for the duration of the conference. Zach, take it away, our second tweet.
I will be your reading glasses, Jen. I will read this one for you. This one is about DeFi is no longer a buzzword. It's a priority, massive interest, real momentum. Let's build the future of finance. Yeah, integration of DeFi into the TradFi, that's like becoming increasingly interesting.
That's the whole thing. And all the major institutions are talking about it. We have folks like Franklin Templeton doing some really interesting things in DeFi. What I'm curious about when it comes to DeFi is how this pending legislation in the United States touches or doesn't touch DeFi and what that means for all of our builders and their projects at different stages of decentralization.
Yeah, I think watching TradFi tap into sort of crypto native sources of yield is going to be really interesting, whether that's yield-bearing stable coins, whether that's the asset tokenization that we heard talked about around IP and other RWAs. Super interesting stuff.
There you go. And I think we have one more tweet here. Zach?
I gotcha. This was the Run Club. Ripple had an amazing, this is three things. There was a Run Club.
TRM Run Club, run by Ari Redboard
That's
from
right.
TRM Labs.
That's right. There was a Ripple Happy Hour. And there was also a panel with Ari Redboard on it, in which I believe that is Jackie Melanik, formerly of TechCrunch, pictured with some other fine folks.
There we go.
There you have it.
Every consensus, Ari tries to get me to run in this running club. He calls me out on camera, but I'm a real walker, you know?
You know who else is really good at running? Chris Barrett from Chainlink Labs. That man has a multi-year daily run streak going, and it's alive to this day.
Come for the crypto, stay for the marathon. We are going to take a quick break. If you like what you've been seeing here, if you're at the conference, snap a photo, tag us on X. We may read it later.
Welcome back. I'm Christine Lee, and this is Zach Seward. We are coming to you live from CoinDesk Studio at Consensus 2025, sponsored by MoonPay, the global leader in crypto payments. MoonPay now owns Solana Pay on Shopify through their acquisition of Helio. All right, Zach, so we're making news all over Consensus on the floor here.
Yeah.
Any highlights that you're seeing at the moment?
I mean, it's just been a lot of buzz, honestly. Like,
lot of buzz,
a lot of people, a lot of buzz. We had Portnoy yesterday. We had Eric Trump yesterday. I believe Eric Trump made a second appearance today.
Yes.
So there's just a lot of, big names, big excitement, and just kind of genuine interest in seeing all these sessions. Like, not every year you get all these people actually sitting to hear the content, so it's pretty cool.
I had the chance to moderate a panel with VCs who want to make sure that they are charting the long term with their entrepreneurs that they're investing in, which was really interesting. And we had a number of entrepreneurs and innovators, builders make their pitches in front of the VCs, which is great. And that's really the key that I've been seeing, at least on the conference floor, just people networking, making deals, trying to get their ideas out there. And so I think that is really key to what Consensus is all about.
Christine, I got to ask you, what's your favorite activation? Any standout booths? Like, is there anything cool going on the expo floor?
Well, Zach, I am a fan of a young entrepreneur named Winnie who has made these chipped nails.
Yeah.
And they have NFC chips in them. And if you had a phone, I could, give it a little tap, and you might get my contact information out of that.
That's nice. I like that.
I'm also a fan of Delorean, which we will be speaking to later on. These are a great bunch of entrepreneurs who have managed to reinvigorate the Delorean brand, which we all know from Back to the Future. And they're going to build electric vehicle cars with the Delorean brand, and they're going to make sure that there's a token network involved in it. And so we're going to talk to them later on, and that'll be super interesting. Anything catching your eye?
Well, yeah, the Marty McFly mobile is over there, which is pretty cool.
We love it. Of course, stablecoins has been the talk of the year. Stablecoin issuer Paxos has tokenized billions in assets and powered stablecoins transactions for global giants like PayPal. Its recent Global Dollar Network Consortium includes Kraken and Galaxy Digital, and they aim to set a new standard for stablecoin interoperability. Joining us now to discuss is Ronak Dea. He's the head of product at Paxos. Ronak, thanks so much for joining us.
Thanks for having me.
Earlier this year, earlier this week, you announced several new members of the Global Dollar Network. Tell us all about it.
Great. So the Global Dollar Network is set up as a network that is meant to drive adoption of stablecoins globally. We partner with the largest players in the market to come together to adopt a stablecoin. Our belief has been that stablecoins, and we see this in the market, that stablecoins need three things to be able to drive adoption. One, they need clarity of regulation. Two, they need economics proportional to the value that you bring to the table. And then three, you need interoperability and connectivity and utility of the asset. And so the network model is designed to bring all three of those. Stablecoins, Global Dollar Network is powered by USDG, which is a stablecoin issued under the upcoming MAS issuance framework. So it's regulated, has all the protections where companies like Kraken, Anchorage, and Robinhood and others feel comfortable holding corporate assets and customer assets in it. And it gives you economics proportional to the value you bring. So today, issuers across the industry take revenue from stablecoins. So today, when you buy a stablecoin, you give me $1, I tokenize it, I put it on the blockchain, I invest it, I earn interest in it. That's not my revenue. I should get a portion of it, but you as the distributor and the provider of the dollar should get paid for it. And so that's what we're powering through Global Dollar Network. And then we brought a large, diverse set of customers to the table to start operating in it. So earlier this week, we launched the network in November last year, and we've expanded rapidly. We launched with a few key launch partners, the ones that you referenced, and we've now gone to expand it to 25+ customers that include companies like WorldPay, Robinhood, Anchorage, smaller upcoming startups like Eliza and Rain, who've all come to the table to create a new standard of what we believe how stablecoins should operate.
A new standard, fascinating. Okay, answer me this, Ronak. So we all love stablecoins and blockchain technology because it allows people to interact directly on the blockchain and eliminate those fees from third-party intermediaries. So with these third-party intermediaries joining a global dollar network, are we eliminating the fees here, or what's happening on that front?
I think let's maybe think about what it takes to have adoption of this new technology. We're still at the very beginning. It feels like, we come at this conference year over year and feel like we've been at this for a while. Yes, we have, but we're still in the early stages of adoption of this technology. For this technology, stablecoins and digital assets to be leveraged in daily payments and money movement and banking, they're going to need to be adopted and be distributed through platforms that you and I use today. I use, money movement platforms, and it feels seamless as someone in the US, but we're seeing a clear demand and need for US-based bank accounts across the world. We're seeing this new rail being leveraged by companies that are global like PayPal and Robinhood and others. And what is needed for adoption for you and me is platforms that are clearly motivated to integrate this technology into the experiences that we're creating.
So the fees aren't going to be eliminated,
So
but
the-
we need intermediaries. Is that what you're saying?
I think fees will eventually get to close to zero, and I think by providing yield to the intermediaries, we're ensuring that customers don't get the fees. Where if you are Kraken or Anchorage today, you're earning 4.5% to leverage this new rail. That then incentivizes you as a consumer to clearly hold more stablecoin, use more stablecoins, and as there is broader adoption, the fees will go away. But there's a path to it. It doesn't happen overnight, obviously, and there is existing rails today that have been built over the years. The way to disintermediate those rails is going to be to create connectivity and adoption of the asset, and that's what we're focused on.
I want to go back to the yield part of it. I think it's super interesting. You mentioned the risk-free rate is roughly 4.5% if I put my dollars in a bank account somewhere. And if I'm a stablecoin holder, I'm not traditionally seeing that through Circle or through Tether. So my question from a sort of go-to-market strategy approach is the yield part absolutely critical for juicing engagement of some of these upstart coins relative to the incumbent stablecoins that are in the market?
Yeah, so we've structured us as a rewards program that enables customers to earn proportional to the value that they bring to the table. We just believe that that's the right model. Forget about whether that's needed. Yes, it helps, but in what world do you pay your asset manager fees, 100% of the fees for the value they provide? That's a broken model. Calling it revenue is broken. And so where we want to go is where we're starting out. We believe that us as the technology and the issuer and the asset manager, we deserve a certain portion of that yield, but the rest of it needs to get paid out as rewards to the customers and distributors that are driving value. So this model is new in stablecoins and crypto, but exists all over the world. We see cookies on chain, we see cookies on the web, and you can track behavior. We've developed that technology and brought it onto this network such that we can understand who's driving what value, and we pay them proportional to it.
Yeah, very quickly before we wrap, do you see big stablecoin issuers like Circle and Tether ultimately going down the yield-bearing route as well?
I don't. I'm sure there'll be innovation. No, they're not going to stand around and look at us just go at this. But I think the broader characteristics of what it takes to do it after the fact versus starting out on day one need to be kept in mind. Tether has the distribution, has no incentive to pay you yield because they have the adoption and distribution. Circle filed their S1. We know 65% of their revenue goes to Coinbase today. If they have to pass yield, they have to both come to the table and pass that yield. And that's a harder thing to do. And there's very little motivation today to be able to do that. And so this is the right model for everyone that can't get that from Coinbase and Circle today, or can't even get on the phone with anyone from Tether.
Interesting. Well, Ronak, thank you so much for your insights.
For sure.
Appreciate it. All right, that was
Good stuff.
Paxos Head of Product, Ronak Dea. More after the break. Robinhood is acquiring WonderFi, Canada's leading regulated crypto platform, for $179 million. The deal values WonderFi shares at a 41% premium over their previous closing price. Joining us now to discuss is Johan Kerbrad, head of Robinhood Crypto at Robinhood, and Dean Skirka, president and CEO at WonderFi. Welcome, Johan and Dean. Thanks for joining us.
Excited to be here.
So this is huge news. Robinhood is expanding into the Canadian market. First of all, tell us a bit about this move and what the goal here is, especially targeting north of the border.
Yeah, absolutely. So the goal, is no secret. We want Robinhood to be available everywhere in the world, and we want to be able to access any financial system for our customers. So it was very important for us to start thinking about how do we keep expanding. And the Canadian market is an exciting market. 19 million people are going to use crypto technologies in 2025. It's also about 900 million in revenue, and so being able to bring the Robinhood mission through WonderFi was something that we were very excited about.
And the deal was done with a 41% premium on WonderFi. So what strategic value do you see in WonderFi as assets as you make this expansion?
Yeah, so WonderFi has two of the longest running crypto product in Canada. So I think there's a lot of value in the brand, in the trust that customers have for the company, CoinSquares and BitBuy. They also have 2.1 billion in Canadian dollar assets under custody, and they also have a meaningful user base. So for us, it was very important to think about that as a way to enter the market. The second aspect is the regulatory aspect. WonderFi has investment dealer license from zero. And so for us, it means that we were going to be able to have all this product in full compliance with the Canadian regulator.
And Dean, why did you feel that Robinhood was a good fit for this acquisition, and what will your role be in the transition?
Yeah, absolutely. Robinhood has a long-standing track record of putting their customers first, similar to WonderFi's brands BitBuy and CoinSquare, and they have one of the leading platforms globally in terms of fintech solutions. And they've made a really strong push into crypto over the last few years and built up one of the largest crypto businesses in the US. And there's a lot that WonderFi and our team and our users can benefit from this partnership and this acquisition. And we think it's a really big boost to the Canadian market, bringing a product with this status and this infrastructure behind it to really supercharge our efforts to continue to be a leader in Canada and really leveraging the best of everything they've built and learned at Robinhood.
Yeah, you guys have both. You both have really good vantage points on sort of retail excitement. Price go up, attention go up, interest go up, trading go up. Is there anything new this time around that is standing out to you in terms of user behavior, trading activity on either of your platforms? Johan, I'll toss it to you first.
It was interesting. When you saw the correction on the stock market, you actually saw Bitcoin being pretty stable. So I think that's a good indication that now it's becoming more and more of a stable platform that is not just like super volatile like before. But I think in terms of user behavior, it's the same as before. I think what we're seeing in the US with the regulatory clarity coming into play, people are being a bit more confident and they are using it a lot more on the platform, but also off platform in the DeFi world. We have a product called Robin Wallet, which is a self-custody wallet, and we see people using it a lot more to access everything that DeFi has to offer. So overall, I will say the cycles are part of the market. What we focus on when the market is a bit down is to build the next feature that our people will love. And when the market is up, is to make sure that we can offer the best price and average.
Yeah, I want to talk about some of the product stuff that you've been doing. Tokenized equities are something that you're trying to roll out in the European market, right? US stocks to European users in a tokenized fashion. There's been a lot of interest and chatter about asset tokenization, real world assets, and what they bring to the crypto ecosystem. What's your view on asset tokenization, specifically on the tokenized securities realm? And is there anything else that you guys are working on in RWA land that might be interesting?
Well, so there was a lot of rumor last week following an article. At this point, we haven't announced officially anything that we are planning on doing, but tokenization is something that we care a lot about. Both the CEO of Robinhood, Vlad Tenev, and myself have been very public that we think tokenization is a way to bring traditional finance on-chain and to actually finally modernize it. It hasn't really moved since the 80s. We saw it with a dollar, stable coin have really changed the way that you can exchange value now 24/7 at any time. And so we think that we can do the same thing for more type of assets. But at this point, no particular announcement, and we are just excited to keep working on this.
There are other competitors in the Canadian market, such as Wealthsimple, as well as Coinbase Canada. Coinbase recently acquired Deribit, expanding their perpetual futures derivatives products. How do you expect to compete with the developing landscape among the crypto competitors in your field?
Yeah, I mean, we've seen the market mature in Canada over the last few years, really starting with the regulatory clarity that came in 2021. The market has really matured through that period of time. WonderFi has consolidated a few of the smaller crypto trading platforms in the Canadian market to really build up the scale that we have today. And so when you think about competing, obviously through this acquisition and the benefits that we'll gain from it, we think we'll continue to be in a really strong competitive position in Canada. And with all of the continued interest in the asset class, we just see more and more Canadians having interest in this asset, continuing to get exposure to this asset class. And so for us, it's important to always remain competitive. Certainly through this acquisition, we think that'll really supercharge our abilities to remain competitive and continue to be a leader in this market.
Yeah, I want to talk about the Canadian crypto scene briefly. I remember covering Canadian crypto when it was basically Quadriga CX and the ghost of Jerry Cotton. And I think that had a lasting impact on the development of the crypto sector in Canada, right? It really limited your ability to offer services in a meaningful way. Just as we get sort of a few years away from that incident and the things that came from it, are there any reflections you can offer on the evolution of the Canadian crypto scene? I mean, of course, technologically, you've seen a lot of innovations here, but on the trading side, it's been a bit hampered. Curious for your thoughts.
Yeah, I mean, look, Canada has a track record of being a first mover. Many of the co-founders of Ethereum were from Canada, based in Toronto when they launched. And, some of the learnings from the Quadriga incident in particular is what you see today with the licenses that we have. On the back of that, rather famous incident, the regulators in Canada, they really woke up to this industry having a meaningful part of the financial services industry and needing to regulate it. And so through that process, the industry has really matured in Canada through the licensing framework and through platforms like ours, understanding the importance of committing to trust and transparency to our clients. On the back of the Quadriga incident, BitBuy put out the first proof of reserve audit in the Canadian market, really demonstrating our commitment to our users and allowing them to use our platform with confidence. And I think from there, you've seen Canada and Canadian platforms like ours continue to have that focus and ethos, and that's allowed our platforms to go through the gauntlet of getting regulatory approval and sustaining those licenses. Through that process, you've seen more confidence from a user perspective. You've seen the industry consolidate and mature. But the Canadian market continues to be innovative and be a first mover. This year, recently, the first Solana ETF was launched here through 3iQ. And so you have a lot of innovation in Canada. You have a lot of excitement around the asset class. And I think through the one example you mentioned, there's an ability to reflect and learn a lot and really apply it to the platforms like ours that continue to operate in the future.
Before we leave, I mentioned this to you earlier before the break, but I want to say again, I'm so glad that you are safe, that you're okay. Earlier this year, you were kidnapped for a $1 million ransom. Is there any update on finding these perpetrators? What can be done to protect crypto holders from these kind of criminals?
Yeah, I mean, look, I think crypto companies spend a lot of resources and build up a lot of infrastructure around cybersecurity. And I think over the last few months, a lot of these platforms have seen the importance of physical security as well. And so, I'd hope that whether it's the incident that I went through or others that have happened since, that people continue to take it seriously and emphasize the importance of physical security and protecting the businesses that they operate and the individuals that operate them.
I'm so glad you're okay. Thank you so much.
Thank you.
All right. That was WonderFi President and CEO Dean Skurka and Robinhood Head of Crypto, Johan Cabrat. Let's take a quick look at Bitcoin right now. The CoinDesk Bitcoin price right now at $103,927. Bitcoin's trading pretty flat at the moment. Taking a look at the CoinDesk Ether price, now at $25.77. ETH also pretty flat as we see a range-bound trading this week. All right, artificial intelligence has hit an inflection point permeating all aspects of industry and society. The intersection of AI and crypto will have consequences on the future of value, data, privacy, and how we spend. How are we shaping that future? Joining us now to discuss is Leah Mueller-Pina. She's a Chief Strategy Officer at BitGBT, which develops AI-driven crypto trading tools, and Shaw Walters, founder of Eliza Labs, which builds blockchain infrastructure for AI-powered decentralized applications. Welcome, Leah and Shaw. Thanks so much for joining us.
Hi, thank you for having us.
So, artificial intelligence, crypto, there's a lot of, I guess, moral, ethical issues to confront here, especially between decentralized AI and centralized AI. So tell me, high level, where are we in that progress, and where do you stand? Where do you see it headed?
So we're actually quite mature. We're seeing the first generation of decentralized AI models being trained at scale by not just one large company with lots of GPUs, but with lots of different people working together. A couple of companies I'd reference are like Prime Intellect just released a 32 billion parameter model, and Noose Research is working on a 40 billion parameter decentralized model now. So on the training and inference side, things have actually been moving along and maturing quite well. There's a lot of companies like Hyperbolic is a good example, or Fala, who are building the infrastructure and have been kind of quietly building. They're not, it's not generating a lot of the hype, but underneath all of this is like they've steadily been building out both the privacy infrastructure to allow private inference and basically running AI that other people can't see what you actually ran, which is obviously a priority for a lot of people, as well as just being able to host, allow people to put their GPUs into the network and monetize that. So it's actually going really well on that side. What we're seeing with AI agents now is like, actually, okay, we have these cool AI infrastructure. How do we turn that into products that people can use? So that's obviously a focus of a lot of us now is taking that and productionizing it and bringing users into that infrastructure.
And so where do you see the difference between centralized and decentralized AI, the, I guess, moral dilemmas that you may be coming through? Where do you see that headed?
Yeah, I mean, I second Sean. I think we're at a more mature stage now. My background is in AI safety. 8 years ago, I studied algorithmic bias. And so a large problem with bias is, for example, the lack of transparency in the data set, the lack of provenance. When it comes to reasoning, do I know the epistemological origin of why that system is choosing to execute in this way? And I'm really proud of the industry and all the players that Sean has mentioned, that we are now not only at a point where the technology is mature enough, but with AI agents, it is actually surpassing, technologically speaking, the solutions that Web 2 can offer. And so I think we have a very unique moment in time right now where, because of AI agents actually needing, for example, crypto to do like microtransactions and to really, for us to build like an economy of AI agents, the scalability of that will have to leverage on Web3 technologies as well. And so I'm really proud that we're basically at this point where we're now tipping into real world adoption, and we're not just an alternative to centralized AI, we're actually the better solution moving forward.
I want to add to that because something really interesting happened the other day, which is Grok, a centralized AI, started talking a lot about South Africa and politics in it, even when people were asking about completely unrelated issues. And what happened was, well, they blamed it on a rogue employee, but I think we all know who the rogue employee was. It was one person's particular pet issue. And so basically what we saw was a centralized model actually have maximally truth-seeking, have the answers and truth it was speaking completely taken into a different context and just have somebody putting their thumb on it. So what we do with a model is we can give it a system prompt and other, so if we're asking, hey, summarize this article, and also, if anybody talks about South Africa, blah, blah, blah. And basically that's what happened is they injected this in, kind of put their finger on the scale, and it created a lot of misinformation. And this is the exact, so when you talk about AI safety, I think we've really thought of this as like, oh, well, the AI is going to kill us all. And that's a non-zero chance sometime in the future. But today we have like very immediate social problems of centralized AI that we're facing.
Yeah, I love that example. That's a really poignant example. I do want to rewind to the product thing that you mentioned previously. What are the most exciting areas that you see AI-powered products emerging in the next year or so? Is there any areas in which you think we're going to see catalytic growth in people actually using this stuff? And what might that look like?
Yeah, I mean, we're already seeing a massive shift. Let's take trading, for example. from going to a website and trading on a website to trading in like a Telegram bot. And there's a lot of reason for that, because one, yes, it's just you're already in Telegram, you're kind of chatting and sharing information with other people, so you're already right there. But then also you're in a group with this application and all of these people, and they can see you interact with it, so you're all kind of working together, and the bot becomes part of your community. And so we're taking that a step further, and I would say that AI is powering this new generation of social mini apps. So we've already thought about mini apps. There's mini apps in chat, like WeChat or Snapchat or Meta stuff. But now we're taking it and saying, okay, we can actually put that into the social conversation. So if we wanted, like, I could manage the money for my family, for example, through a group chat using an agent, which is something people are doing, and building toward. Or for us, we're really interested in organizational agents that solve the coordination problems that we have as a remote team. A lot of new companies are building up as remote teams, distributed globally, and have like really silly problems. Also, we see in crypto a lot of us have this kind of interesting like a Discord server, a Telegram room where we have our team, and we also have a community. And so we need sort of like this AI agentic layer to manage like input from the community, summarizing, identifying the top like contributors, stuff like that. So I think that we're going to see a lot of this intelligence driving applications toward where people are, away from websites where you have to like convince them to go to that website, and just say, take that whole website, all that functionality, put it in Telegram or Twitter or Slack or Discord, bring it to where the people are actually working. I think that's going to be a major trend shift.
I also just want to follow up on something like what you were saying about Grok and centralized versus decentralized AI, but that was part of the point. Like, I mean, most people do use Grok. They use ChatGPT, they use Gemini, they're using centralized AI. And so will there be a shift to decentralized AI? How will that come about?
I think that Grok moment was an indication of something that a lot of people would, I think, take a serious consideration at what they were using for, and probably make a switch if there was an alternative. Now, Grok is very deeply integrated into Twitter, so or X now, and if you use X, chances are you're probably going to reach for that one click right there option. And so, there's no discounting that. It's like every social media platform is kind of going to have its AI tied to it. There's even been rumors that OpenAI is working on a social media platform because they want the data capture loop. There's no way around that, but there's a strong desire for something else. There's also a lot that, like, there's a thing called refusals. The models will say, no, I can't do that. And they say that to a lot of the things that we want to generate. That could be things like, even the other day I was asking Claude to help me program something in agents, and it was like, I don't want to participate in building AI agents. It was like, you're Claude, you're an AI agent, but that's what Anthropic decided was their moral values. Now, that's not my moral values, and I disagree with that, and they're preventing me from doing my work. So obviously I'm going to switch. I think there's an obvious market incentive here.
Yeah, and I want to add to that it's actually an architectural question, right? I think oftentimes we call AI a lot of different things, and AI is a stack of different processes, right? From the data architecture to the inference, to the fine-tuning, and then to the end user kind of interface layer. And actually, to correct my former introduction, at BitGBT, we don't just create trading agents, we've actually created infrastructure that takes existing models, large language models, and we distill them to small language models that can be hosted on your phone, and thus you can have local execution for your agents. And so our approach to this was actually saying, right now the landscape is very Boolean. It's almost like you have either these centralized players, the models are obviously very good, they're extremely convenient, that's how they capture attention. And the other alternative has always been like a personalized RAG, which most people don't have enough data or time to actually train. And so the default mode then ends up being we go to these centralized places because that's where the convenience and the performance is. We saw that and we were like, okay, let's create a third middle way. And actually we saw, okay, if we distill these large language models, we're still getting the best of AI out there at any moment in time. So when DeepSeek came out, it took us 3 days to distill that down to an SLM. And then SLMs for us are like a perfect framework actually for agents because they inherently have more safety rails. They're also cheaper. They don't cost that much compute. And so, on a product level, what we're seeing a lot right now is like agents particularly will have like millions of gazillions use cases. It's like analogous to saying websites, right? Like when the internet was formed, HTTP standards, etc. Websites now can have so many different flavors. And so I think it's important to realize like one LLM cannot service all those different use cases. I think we're seeing that in the industry, like alone to trade. So we did actually create a referential trading agent. You need to sort of fine tune the agent to know like how do I do a cross, chain swap? How do I like access a wallet? And more importantly, I think what we're going to be seeing and what I'm excited about people like us building is that the consumer right now is sort of in this gateway drug moment where they've just unlocked like, wow, if I use OpenAI, it reduces my workload for 30% and I spend more time with my kids. In a year from now, when, like in this Grok example, people start realizing like, oh, I'm being like kind of sold or upsold something weird and I don't really know where it's coming from, I don't actually feel that comfortable with my child using this anymore. Like that's that moment in a product where we're actually going to valorize privacy and security. I do think we're building for like a catastrophe moment in like maybe a year's time, and then I'm happy that our technology will be there to cater to those consumers.
You pointed to two things that I think are really interesting.
Yeah.
One is like we think of decentralization as blockchain, but local is really important to this. Yes. And we're just getting to the point where like you can run one of these models on your own MacBook for just a normal consumer computer. And so I think that's like a really important thing. The other thing is cost. Like OpenAI is actually just losing money and offsetting the cost of giving their current models. And in agents, cost and response speed, like I can run the model, then run it again, and ask, hey, was that right? And I will eventually get a much higher like accuracy from my agent, but it costs a lot to run every single LLM call. And so smaller models are much faster, which are much more responsive, and let us run these loops much faster. So this is a very important part of this.
Shaw, to get sort of a few more steps in the future, are you guys working in robotics at all? Is there a physical application of the work that you're doing, and will we see that anytime soon?
I'm personally very interested in robotics. I've kind of had to just focus on framework level. There's another team that the community Eliza project, which is built on our tech stack, said we're just going to go for robotics, and they're working with a roboticist. We'll see how that goes, but they're building on a known like Unitree rig, like a Chinese manufacturer that can already do backflips, and they're just like making it a cool, it's going to be real. So the way that robotics works right now is that it's mostly reinforcement learning or learning from watching humans do this thing. And the problem with that is just that you can say like, okay, well, do a backflip or go there or pick up. And but it's not really good at like chaining. But the kind of agents that we're building can build these logical planning steps and then issue that to more of a reinforcement learning agent. So we're seeing like Figure was working with OpenAI, and then they're like, no, we'll just do this ourselves. But they're basically combining this hybrid of LLM and reinforcement learning approach. The LLM tells the robot what its next action is, and it can chain together these really complex things. Absolutely, a lot of us are probably going to have robots within the next 5 years.
Cool.
Yeah. Leah, just as we wrap up, wanting to learn more about your BitGBT in terms of helping trading outcomes, especially in volatile markets. Tell us a bit about how the best use cases for
I think our real end goal at the moment is we're working towards an autonomous agent economy. So one where agents are transacting agent to agent, person to agent, and also within that, an agent will have a different kind of economic behavior and spending behavior, right? You don't have to sort of market towards it to upsell or to buy a subscription. And so something that we launched recently, which I'm really excited by, is an open protocol called H402. We released this 2 weeks before Coinbase's X402. And X402 only satisfies USDC and Base. So we realized, okay, we've built all this amazing framework to actually make agents, make them privacy preserving, but how do we monetize them? And when we realized there wasn't actually the existing infrastructure to do that, we not only built it, but we made it open source for the whole community. And as that pertains to trading, for example, like you first need to give that agent an access to a wallet and sort of spending. And what I'm excited by right now is like we're opening these silos. So something like a payment protocol from us means now you can go directly to Gucci or Prada and offer them to have an agent pay one of their items through crypto. Because we're using a standard that's already in the web called HTTP 402. It's a bit like the 404 error code, everyone knows that exists. 402 back in the days of the initials of the internet was actually built for receiving payments. But it was too arduous and clunky, and then like PayPal and Stripe and all these players came in, and to the point about reducing costs, like it's so costly, it's up to 4.5% oftentimes to do a transaction. And so when I think of volatility in trading, thus far it's been a lot like speculation. Do we believe in a promise and something like, giving the agent kind of access to data points? But I'm actually more interested in giving the agent the autonomy to delegate and buy something for me. So if I'm a wedding planner, like reducing all that effort of sourcing a million gazillion vendors and actually being able to settle a payment is really what we're striving towards over the next months.
Fascinating. We could go on, but we got to wrap it up there. Thank you so much, Leah and Shaw.
Thanks for having us.
That was BitGBT Chief Strategy Officer Leah Mueller-Pena and Eliza Labs founder Shaw Walters. Consensus features 6 stages, 6 summits, and over 200 sessions. Let's take a peek at one of our dynamic stages happening now.
That the qualities that Aya may not have had, and yeah, just like who are they? You know, they're still so new, I think, to people. I mean, they're well known in the sense that the developers know them. They've been very involved in different aspects of the blockchain. I'm thinking about Xiaowei was very involved in the merge, and Tomas also has been involved with client teams. But give us a little bit of a sense of why those two, especially since there's a lot of names being thrown around for that position.
Yeah, so for those that don't follow this all very closely, I think last year Vitalik and Aya knew that it's time to look to making a change. The EF always needs to be evolving to the moment and adapting to new challenges, and Aya did a great job for the period of time when we needed that kind of leader and that kind of organization. But Vitalik and Aya understand that the EF needs to evolve. So earlier this year, Tomasz Stancek and Xiaowei Wang became co-executive directors of the Ethereum Foundation. Tomasz was previously the CEO of Nethermind. Nethermind's a long-term company in the Ethereum ecosystem. They build a very popular client for Ethereum, as well as work with many businesses and enterprises around the world as a blockchain development partner. So Tomasz brings a lot of energy in terms of understanding what the ecosystem looks like, both at a deep protocol level and as a business leader, as a CEO, as a founder. Xiaowei has worked at the EF for many years and has been very deeply involved in research and protocol development. She was very involved in some of the crucial research that led to the merge, where Ethereum moved from proof of work to proof of stake, and really understands the EF at a pretty deep level. So in terms of why co-executive directors, Margot, I think there's a few crucial things. One is being able to have more capacity and coverage. There's so much to do in Ethereum because so much is happening in Ethereum. And as we see this new wave of onboarding, especially institutions and enterprise, just more capacity at the management level to deal with that is really important. Global coverage is also important. Ethereum is very global, and having one leader that's at home in Asia and another that's at home at the West allows us to do more. And the last is finding that balance between shaking things up, making some improvements, making sure that we're lean and operating efficiently, but also the careful stewardship and values that have brought Ethereum through 10 years, 16 upgrades, 0 downtime, and the largest on-chain economy on Earth. So I'm feeling great about working with them. I think they're doing a fantastic job, and there's lots more to come.
I got to chime in a little bit here. So as somebody who sits outside, have been developing and building on Ethereum for a decade, one of the things that really got under my skin is the degree to which some of this fact-free narrative on Twitter formed so much of the discussion about Aya, the Ethereum Foundation's leadership. Let's step back and look at this objectively. 5 years ago, Ethereum was a proof-of-work blockchain handling about 1 million transactions a day and was struggling to really scale. It performed really well in terms of uptime, like 0 downtime. But if you had a lot of people trying to transact, and we have clients who want to do things like inventory management that would require 2 million transactions a day, right? 5 years ago, that couldn't be handled on Ethereum. Today, Ethereum is a proof-of-stake chain with more than 120 layer 2 networks. We estimate network capacity, depending on transaction complexity, somewhere between 300 and 450 million transactions a day. And transaction fees at the L2 level, they average under 1 penny per transaction for the last 3 months. So if I step back and look at Aya's tenure very objectively in terms of the results, I would say A+. I look at results, these are results.
Yeah, that's a really interesting perspective, especially given online. There's been a lot of other perspectives regarding that. But I want to finish this chapter on the EF on one more thing before we get into the roadmap and adoption. We're sitting here talking about the future, and one of the criticisms out there about the EF is that there's a little bit of a lack of transparency. A lot of people want to have access to seeing what's going on financially at the EF. There's these financial reports that come out every 2 years. Sometimes we're lucky we get once a year. And we reported back in September that I think it was thanks to a AMA with Justin Drake, where someone had asked sort of about the runway at the EF, and at that time in those prices, the runway was about 10 years left in terms of, at the prices of September. So, you know, we're talking about future, we're talking about obviously concern about financial planning, what's being done. I mean, you know, Ethereum, the price of ETH today is higher than it was back in September, so maybe you have a little bit more runway than 10 years, but what's being done and how are you guys thinking about planning of the future and planning the sustainability of the EF over the next few years, or past the 10 years, I should say?
Yeah, I'd say the bottom line is, look, we know there's a lot of work to do. We know that there's a lot to coordinate. We know that the roadmap needs to be delivered on, and we're confident with the treasury that we have and the spending that we're seeing that we'll be able to get there for many, many years to come. Obviously, it's a challenge. You know, we need to both balance being, you know, bulls on ETH and holding the majority of our treasury in ETH, and the reality that this is an incredibly volatile market that goes through upturns and downturns. And so we need to find a strategy, and we, you know, have been doing this for many years now, that balances that, you know, saves when times are good, and that is able to then spend through the downturn. So there's no simple answer, Margot, but, you know, we do take a long-term perspective. The other piece of this, of course, is that, as I said, Ethereum is an ecosystem. That's a great thing about it. It doesn't all depend on the EF. And so we've been working for many years to help build up other institutions that can carry that work forward with us and work in parallel. So I'd say in terms of like Ethereum has the deepest bench in the crypto ecosystem. There's no other ecosystem that has so many organizations working towards the same goal that provide, you know, more capacity and also redundancy in the long term.
So the roadmap. There's been a lot of ideas thrown out there. I mean, Ethereum has really embraced the layer 2 scaling roadmap, using these auxiliary networks to, you know, scale, provide cheaper transactions, lower gas fees. Dang sharding has come into the mix. At some point, I heard about Verkle trees. I mean, this is all jargon. You shouldn't be able to understand this anyway. But I'm just pointing out that there's all this confusing jargon and consistent pivots. And so for some, it seems like the roadmap doesn't have like a clear vision. How do you respond to criticism of that? And also, you know, Paul, you're from the institutional side, and obviously layer 2s have sort of really come under focus with institutions. And one of the criticisms with the L2 roadmap is that it's sort of driven away activity from the L1. It was, you know, was the L2 roadmap a mistake? It's also led to fragmentation, led to other different versions of issues. So I want to hear from you both, sort of, how do you respond to critics who say that this roadmap has a lack of clear vision, it's ever pivoting, and whether pursuing the L2 roadmap was the right move?
So from my perspective, I'm delighted with the roadmap. And you know, when people talk about there's being a pivot, I don't really understand what they're saying. Ethereum is being Ethereum, which is identify a problem, fix it, and move on to the next problem. In terms of the biggest problem that we were dealing with over the last few years, it's scale, right? Going from being able to do 1 million transactions a day to 450 million sort of network capacity is great. By the way, when we sit down at EY and we think about what it might mean to bring a major industry like automotive on chain, right? Every car part, every car, to be able to have the traceability of those components. Something, by the way, that's going to be needed as we get into a world of, for example, cross-border trade traceability. We think about billions of transactions per day required. So my view is L2's great. Also, we need L1 to scale, right? And we need specialization. And let me just talk a little bit briefly about the value of specialization and the incredible value that the L2s bring. The L2s out there, and there are now more than over 120 of them, and I think there's another 80 announced, including one by EY, which is our privacy network. So L2s give us specialized things. They give us privacy systems. They give us, in some cases, relatively centralized chains with very low prices. Stuff like that is great for inventory, because if somebody steals your, say, car parts token, they've corrupted your data, they haven't actually stolen your money, right? So I want extremely low prices and massive scalability for certain things that are relatively low security risk. On the other hand, if I am transacting in real estate, or I've got one of my institutional clients that's moving like large value bonds, I want a very high security environment, and maybe I also want privacy. So from my standpoint, we want scalability everywhere, we want specialization and differentiation, right? And we want a roadmap that looks to take us at least 2 more orders of magnitude in capacity up and 2 more orders of magnitude in capacity down in terms of cost per transaction.
Mm-hmm. So in terms of the roadmap, here's the roadmap. We're going to scale L1 so that Ethereum L1 remains the heart of the on-chain economy and the home of DeFi. We're going to scale L2 to onboard billions of users and satisfy the use case needs that enterprises like EY and others have. And 3, we're going to improve UX so that all of this feels like one platform, like one product. That's the roadmap. In terms of whether the L2 roadmap was a mistake, absolutely not. There's a very high degree of conviction that this is the right architecture. I think the thing that's happened is, a thing I like to say is that Ethereum hits the hard problems first because Ethereum has gone the furthest. All ecosystems are going to end up with something like an L2 roadmap with modularity and specialization. We're just the ones that have gone furthest down this path. And we found the twists and the turns and the challenges on that road, and we're dealing with them. I think the specific thing that people address is L1 scaling. And yes, I think we could have turned our mind back to L1 scaling sooner. But one of the reasons it didn't happen initially was that there was a lot of focus on standing up the L2 ecosystem. And we've succeeded at that. There are now, as Paul said, more than 100 L2s. They host billions of dollars of assets with millions of users with lower transaction fees than any other chain that's competing with Ethereum. It's been a success. And now we are turning our mind as an ecosystem back to scaling L1. And that's a huge priority for the next hard fork, Fusaka, later this year. And you can expect it to be a priority moving forward to scale both these systems in parallel.
Where does privacy fit into this, though? Because this gets both at adoption and at the roadmap. And what I consistently hear is that for these big institutions to come on chain, privacy is going to be needed, like majorly.
It is.
And so, you know, I'm wondering where you sort of see when that is going to start to take focus, and whether that, you know, in terms of adoption, is a major blocker, and maybe what are some of the major blockers? Is it the UX? Is it the fragmentation? Like, why isn't the adoption there yet? Is it a mix of all those three? I want to hear your thoughts.
So I'll start with privacy very specifically. This is at EY, this is our #1 priority. We've spent 8 years building Nightfall and its counterpart Starlight that allow you to do privacy transactions at scale. This is hugely important for a couple of reasons. Number one, pretty much anything that enterprises do is eventually, if you're going to do enough of it, you're going to need privacy. You can do some stuff with the stable coins that are fungible without privacy, and you can rely upon like the broader stream of network traffic to conceal what you're doing. But almost everything that enterprises make is non-fungible. That's easy to track. And if you want to do a full smart contract, right, think about how enterprises buy from each other. Money for stuff under the terms of an agreement. So I need the money to be private, I need the stuff to be private, and I need the terms and conditions to be private. And no large company is going to come on chain and tell their competitors in the clear, here's what I'm buying, here's how much I'm paying for it, here's where it's going, these are the rules I agree to. Like, that's a non-starter. So for enterprises, privacy is absolutely essential. It is the #1 priority in the roadmap. It's our biggest research focus, and it warms my heart to see other companies joining into this space now.
Mm-hmm. From the EF perspective, like how does privacy sort of fit into all this? Because honestly, I haven't really seen much coming from the core devs in terms of focus right now on privacy.
I mean, I think that like I would list privacy up there in kind of the core values that the Ethereum Foundation cares about realizing in the world. A lot of the stuff that exists today in the computer ecosystem, for it to really scale, you know, you need privacy, both at a personal level and also for larger enterprise uses. One reason you don't see it a lot, I guess, from the EF is that, you know, the privacy solutions that exist today and are working are more on the application level. And so they're not something where there's a large focus on the protocol itself right now. Mm-hmm. So for example, there's a great project called Oxbow that uses what are called privacy pools to allow individuals to have private transactions. There's, you know, awesome new zero-knowledge technology being deployed in many places, like Aztec, a very privacy-focused L2. And of course, Paul's talked about Nightfall and, you know, the privacy products that they care about at UI. So there's a lot of application-specific things happening, and it's an area where, you know, there is good development, solutions are coming online. It's just not something that the EF has a comparative advantage in right now. But absolutely, it's important. It needs to be part of the mix.
I would just add, privacy is hard. Like, I have a joke that we're 8 years in. We started working on privacy tech 8 years ago. I like to joke we are now 8 years into what I thought was going to be a 2-year project. Our first prototype we showed at DevCon in 2018 in Prague. A single transaction cost $100, and we needed an entire block of Ethereum to execute it. Today, we can do that transaction for about 25 cents on the mainnet, and we can do far more of them. We're about 10,000 times more efficient, but that's taken 8 years. And so privacy tech is just straight up very difficult.
Yeah. We're running short on time, so I have 2 more questions for you guys. And, a lot of the focus over the last year around Ethereum has been on the price and its lack of performance compared to other cryptocurrencies. And, there was a panel up here before on talking about stablecoins, and stablecoins seems to be the hot topic these days. How do you see Ethereum as a store of value or as an economic asset in a world full of stablecoins or tokenized RWAs? Like, how does it fit into all of that?
Yeah, I think there's many things that have fed into the value of ETH over the years. One of those, obviously, is the fact that it's a utility coin. People, buy it in order to spend on mainnet to gain access to the very valuable resource of Ethereum L1 block space. Another way that contributes is now that Ethereum is proof of stake, when ETH is staked, it's a productive asset that earns yield. And Ethereum is also used as a store of value. It is, an asset used in DeFi, in many systems. It has these, really durable properties that make it a great store of value. In many ways, better than Bitcoin because you can do stuff with it, whereas Bitcoin, is not very programmable or anything like that. So I think that ETH has a more complicated narrative than BTC does, and so BTC has crossed that chasm first. But I think the world's not going to stop learning about these technologies and these systems. The world is going to have an appetite for a slightly more complicated but just as real value proposition, and I think we're starting to see that now. So I think that markets eventually price value, and I think that Ethereum is the most important project in crypto and always has been.
I would second that. I would just say, I think culturally, from an ecosystem perspective, it is really hard for ecosystems to fundamentally to do multiple jobs. Companies are like this, right? And I think ecosystems are too. People tend to do one thing very well. So Bitcoin, in my opinion, it's the asset. And even if there are technical components about Ethereum that make it technically a better store of value, I think in the mind of the public, Bitcoin is the asset, Ethereum is the platform. And so from my perspective, Ethereum may do many, many things well, but first and foremost, it is going to be the platform on which the world is going to build all the next generation of financial and industrial infrastructure, and the value is going to come from the transaction fees, the staking, and the engagement, more than treating it as a pure scarcity asset.
Well, okay, so that actually transitions perfectly into my last question, because I was going to ask, to end on this note, we've talked a lot about ETH being used for a financial system, but also, being home to the most stable coins by volume as of February, you said, or on Twitter, I think, Josh. But, or basically my question is whether in the next 10 years, Ethereum's goal is to be the global infrastructure layer, or is it to be this place for a hub for decentralized finance, decentralized financial system? What is it sort of leaning towards, or can it incorporate a little bit of both?
Yes. So for me, this answer is really simple. 100% of business agreements boil down to this. I've got money, you have stuff, we are exchanging my money for your stuff, whether it's a financial asset or a physical asset, under the terms of some kind of agreement. It could be DeFi, it could be interest-bearing, it could be a loan, it could be a procurement agreement. Doesn't matter what it is, it all is going to be done on Ethereum.
Yeah, my answer is also both. I don't see those as different things. The amount of kind of financial activity on Ethereum mainnet feeds back into the security of Ethereum as a whole and makes it this incredibly durable, hard, credibly neutral platform that can be plugged into for anything, right? It is the global root of trust that is secured in part by the financial activity, but can be deployed for so many different things, whether that's agreements or whether that's as a kind of foundation for new cryptographic techniques. These things really go hand in hand.
Love it. Thank you for your time today. Thanks everyone.
Thanks, Margot. Thank you. Thank you so much.
Please welcome to the stage Trevor Koverko and Kayla Trivieri.
Hi, everybody. I'm Kayla Trivieri, the head of product at Search on Dora and co-host of Scroll Tax. And I'm here with Trevor, if you want to do a little intro.
What's up, everybody? How's it going? Thank you to my team to blocking the exits after the Trump presentation. Thank you, guys. But no, my big thing is just seeing consensus in Toronto. This is a big deal for us. Folks here in Toronto, where a lot of crypto history comes from, to have consensus come to us. Usually we have to fly around and go to events. So I think it's really cool, and it's kind of an homage to what we as a city have done for the early crypto ecosystem.
So Trevor, I know you've had a pretty crazy career. You were drafted in the NHL, you had a life-changing accident, you've launched many startups, I mean, pretty successful so far. How did this shape your view of work and give you purpose in life?
Do we have to talk about hockey? We're still a little traumatized here.
I mean, we are in Toronto in Canada, I mean.
No. Our team didn't do too good the other day, but that was kind of my origin story. I'm from a city where you might get deported if you don't play hockey. And so that was a big part of my childhood. And unfortunately, after getting drafted into the New York Rangers, I was in a serious car accident, which abruptly ended things. But it kind of made me learn as well over the years that sometimes when a door closes, another window opens. And for me, that was crypto.
Now, you've been in the crypto space for a while now. You've seen the narrative switch, between crypto and AI. Why build Sapien now?
Yeah, I was, just to back up, I was an early fanboy of this thing called the Bitcoin white paper. I bought my first Bitcoin in 2012 on eBay, where they emailed you the private key for like 20 bucks or something. And I was just a passionate, interested, curious user of the Bitcoin blockchain. And Toronto became a hub for this. That's where Anthony Diorio started a Bitcoin hub, and that's where Vitalik started handing out the white paper when he was working for Bitcoin magazine, and then the rest is history. Ethereum launched. And it really inspired me to launch my own crypto project called Polymath. We were an early tokenization network, kind of like the first RWA network at scale, and that's where I kind of really dove into everything crypto, from investing to LPing to being a founder to being an executive, and it made me really appreciate this ecosystem. But after a few years of running that, I decentralized the company. It's fully distributed. We launched a layer 1. Charles Hoskinson and I, he was just up on stage, co-launched in 2021 Consensus our layer 1 blockchain called Polymesh, which was a big milestone for us. But then AI came around, and we were at a point in the project where it was sufficiently decentralized, and I got really excited about AI. Another Canada shout out is the University of Waterloo, where one of our co-founders went to. That's where Vitalik went as well. And we have a really good AI lineage in this city, as well as a crypto lineage. So the University of Toronto, the Jeff Hinton Lab, this is where a lot of early research was released, and things like the Transformer paper Google released, that was inspired by what Jeff Hinton's lab has done. And so I really got the AI bug, and about 2 years ago, teamed up with my co-founder, Rowan, who's the co-founder of Base as well. Him and Jesse Pollock created Base within Coinbase, and we decided to get into a specific problem in AI, and we've been working on that for about 2 years.
Nice. Shout out to Waterloo real quick. I'm also a Waterloo grad, so very special place in my heart.
Pray for the ops.
Yeah,
Western.
pray for our, yeah. I want to pivot to the gig economy really quick. We've seen how Uber and TikTok have really changed the way we work in this modern day and age. How does Sapien fit into this new work meta and narrative?
Just again to back up for a second. So, OpenAI, they were the first LLM that worked, and I know guys that were working on, Elia from our community from NEAR was an author of the Transformer paper that inspired OpenAI. And that was like a big inflection point for our industry. But as it turns out, it wasn't the first LLM. It was just the first one that worked. And when I started studying, I ran into a friend of mine, Lucy Guo, who's the co-founder of Scale AI, and learning about this. And it turns out the reason OpenAI and ChatGPT 1 worked is because of, ironically, humans. Humans are the reason OpenAI worked because they were the first project to incorporate an industrial scale amount of humans in their data sets. What does that mean? The academic term is called RLHF, reinforcement learning with human feedback. And it's basically taking a raw data set and having a lot of smart humans around the world structure that data, annotate that data, classify that data, and then it's trained on. But at the end of the day, it was that little innovation that led to the magic that we know today of being able to ask ChatGPT anything you want. And so that kind of was an opening for me in terms of like, wow, humans need AI, but AI also needs human. And for these models to keep getting better and better, we actually need more and more humans to provide data for them. Data is the bottleneck in AI right now. It's not compute. You keep hearing about that now with the shortage of chips and the shortage of electricity, but that's sort of getting commoditized. And so the second ingredient that's really important for AI is data. So where is this data coming from? You'll start hearing this concept of frontier data, which means new data that these models haven't trained on yet. It turns out the current data market is a lot like an iceberg, where the tip of the iceberg is what we look at today like open internet data. So all the data on the internet, it seems like an endless amount, but it's actually not. It's actually ran out. We don't have enough open public internet data. So all these models that want to improve performance need to get new data from other places. And so we're proposing now that under the water, the iceberg, the big block of ice, is going to be private data sets. It's going to be new data from humans from doing tasks like walking around the world and recording it. So robots can use that computer vision data. Or it's going to be humans that take existing data like an MRI image, and a radiologist is going to draw bounding boxes around the tumor cell or the cancer cell. And that's new frontier data that's going to train these models to detect cancer. So that's kind of this weird inflection point we're at now, is like, how do we get better data and how do we empower humans to create that better data?
Absolutely. It's funny, I used to work at IBM, and our joke was everyone wanted us to build these models and use AI, but we would say, you have all this data, but garbage data in is garbage data out. So where do you find this data? Where's it coming from? And yes, we definitely need humans to help us clean it up wherever it is. I want to paint us a picture of what Sapien looks like in the future. You know, we have this whole AI movement. How does this impact the way we work? What is the success story, and where do you want to take it?
Well, I'll start with a scary concept, which is Ubers are going to be driven by robotaxis soon. And
Waymo.
DoorDash is going to be drones delivering it from a drone. And so a lot of these gig workers now, you know, they might be looking for new careers. And I think that's not necessarily a bad thing. But I also want to paint a positive picture of the future where even though AI, because self-driving cars is AI, it's neural nets, is going to replace a lot of jobs, it's going to create even more jobs. So just like I said, you're going to need radiologists that are labeling data for cancer research reasons. You're also going to need humans to provide their expertise in other domains. And so that's what Sapien is, the project Rowan and I co-founded, is we're trying to make it easy for anyone to sell their knowledge to these AI models. So on the demand side, you have companies especially that are building their own models. So like JP Morgan and all the S&P 500, you're going to see them coming out with models because they're very scared right now. If they look above where they're at, they see ChatGPT, the huge foundational models that are disrupting them. And then if you look below them, you have startups that are vertical models like Y Combinator startups that are like a model just for a specific use case. And so all the S&P 500 in the middle are very scared right now, and they're building their own models. So they need us. They need to pay us humans in every domain you can imagine. Anything from like, what is humor? We want a model to be funny. We're going to pay a human to label data, what's funny and what's not. We've had a customer who wanted to build a Mandarin-speaking mathematician agentic tutor. So Mandarin-speaking mathematicians can now work on their mobile phone and provide math data to this model and get paid really well for it. So that's kind of the future that we see, is that it's actually not a scary, dystopian future of machines taking all our jobs. We can work on our own terms. We're empowered. We can work from our Android phone and label data and make hundreds of dollars an hour in some case if we have skills that are in demand. And we don't have to go to the office. We don't have to, a lot of data labeling now happens in these facilities now. I think the next evolution of that is going to be mobile. That's what Sapien is. You can actually pull out your phone and go to game.sapien.io and start earning immediately. And the byproduct of you doing a gamified data entry task for a real model that's demanding it is you get paid, and you can have fun and get paid at the same time.
Nice. So this leads me to my last question. There are many concerns with AI in the future. One of them being AI is becoming centralized. What does a world of decentralized AI look like, and how does this impact Sapien?
Yeah, it is scary. They say AI tends to be communist and crypto tends to be libertarian, and that's kind of an interesting thought. For us, though, I won't pontificate on the high level there. I'll just say we're kind of focused on the data part. Like, can data be produced in a fair and equitable way? Because right now, you're producing data, you just don't know that you're doing it and someone's profiting off of it. That's literally how these companies make money, is off your data. So we see a world now where you can opt into that, where you can actually say, no, I actually want to produce data. I want to do it in a field that I'm familiar with, that I've spent my life learning, and I want to get paid for it on my terms. And we think that's a more equitable way to do it. And even beyond that, this could actually eliminate poverty, for real. Because to drive an Uber, you need to buy a car. And to do a DoorDash, you might need to be mobile. But in this future world of AI, you could just have an Android phone for $20 and access to an internet connection, and you can make a living wage. These models need you even if you don't speak English or have any skills whatsoever. You can label self-driving car data and say, this is a stop sign, this is a baby, this is a car, and you can get paid a living wage for that. Our biggest users base right now is in Southeast Asia, in the Philippines, in places like this, where a lot of people don't have the luxury of being able to work from home, where they don't have the luxury of being able to walk to an office. So that's really our vision and mission is how can we empower everybody to make a living wage from their phone and have fun while doing it.
Amazing. Now just wrapping up here, where can people learn about Sapien? Do a shameless plug. Where can they find you on the internet?
Yeah, we're at Game on your mobile browser. It's very important it's mobile, and you don't have to download an app. Game.sapien.io. And we've made it very Web3 as well, so you're going to earn points. You can get paid on-chain through USDC. That's another big problem, is like remittances and stuff we don't have time to get into. And then the third thing is we're actually making it to do honest work and to do genuine work. We can detect that, and we can give you more rewards for that. That's actually a big problem, is making sure people are incentivized to do good work. And we prefer positive reinforcement rather than negative. And so, yeah, game.sapien.io is the best place to check it out.
Any socials, Twitter?
@PlaySapien on Twitter, and mine is just my name, @Trevor Koverko. So
amazing. We'll have to go give you a follow.
We should, and we got to get the Waterloo kids on there too.
Yeah, for sure, for sure. I'm sure they would love it.
Yes, ma'am.
Okay, well, I think that's it for today.
Cool, thanks
so
everybody.
much.
That is something we have to address. So that's a really big silo that you're mentioning here that we've named, which is the motivation, that we're not all coming with the same motivation. And with open source software, there wasn't the market as the big factor, right, in the early days. No. It was not determining. It was like money was not the main issue. There was easier value alignments or motivations.
Well, I mean, I think it's definitely true that people, it's very hard to get people over the biggest silo of all, which is like you and yours and someone else's. And there's both trade, right, where you exchange, and so hopefully your pile gets a little bit bigger. And then there's cooperation or pooling or creating a shared public good, right? And I think one of the things that helps make this equation a bit more acceptable to both people who want to win and people who don't have the resources to achieve everything they want on their own is that opportunity to pool resources collectively and get a collective benefit. And my hope, and I do think this is the question about agentic AI, right, is how does that play out? Like if we look at the actually, I'm going to pass to
Yeah, well,
I suddenly realize I'm running out of my area.
This is the perfect segue to talking to Chris, because we're talking about, we can like let's tab that conversation about tokenomic design and like, it's because it doesn't have to be just a zero-sum game, right?
Yeah.
But when we talk about, agents, like Chris, what are you seeing, being at the center of all this incredible research coming out of the Media Lab as a researcher there? Do you see silos happening in the industry from your point of view where you're not just enmeshed in the day-to-day?
Yeah, I think there are a lot of data silos, but I think one of the interesting things for me on the agentic piece is, we're not there yet, but when we have an agent, a bit like a personalized version of Siri, we'll have lots of fluid organizations, lots of fluid silos, and so you'll be able to have your agent say, yes, I'll opt into this temporary organizational structure, I'll volunteer my data for that good, and then you retract. So it's not kind of a lifetime permission, it's for this one particular use. And there was a case, a good few years ago now, there was a case where there was a train crash. There was one that struck me in the news, and essentially the safety authorities wanted to know, was the train going at abnormal speed? And that would be a scenario where you probably don't want to give your location data 24/7, but in that case, most of us, I would argue, would be more than happy to say, yes, I'll volunteer my location data if I travel on that train, so that there can be this crowdsourcing of that location data to see if the train's going at abnormal speed, but it's retracted afterwards. So there's this temporary organizational data silo that you can pull back from and benefit from collectively, and also know that you're giving that good as an individual.
Yeah.
So I think, as individuals and collectively, it's clear that cooperating is a rational thing to do, even for a very individualistic. In fact, it's better for individuals to cooperate because they can only benefit, right? They can only work together with other people to increase their capabilities. I think the challenge that you face in a centralized environment is that if someone has a lot of power or a lot of resources, there's a much smaller incentive for that institution to work with smaller ones. And this was the lesson with open source, right? Open source commodified a resource so that everyone could use it, and everybody equally benefited from that. And there was a period where the larger organizations, the Googles, the Facebooks, the Microsofts, cooperated to help build those public goods. But then once they get to a certain size, that institution internally changes because they're like, well, why should we help out all these people?
And I think we're at that inflection point now. We've reached it again where we invented these structures to de-risk the purchasing and use of open source, right?
Right.
Now it's like the power has solidified again.
So I think that there's a huge opportunity here with agents, right? Because I have started thinking, I try not to anthropomorphize AI, right? But I start thinking about, well, what are the intentions and the motivations, as you said, of the agents themselves? Do they have an incentive to cooperate, or do they have an incentive to defect?
Well, Lisa, I'm curious then, for what are you doing to actually make it easier to lower the risk of bridging the silo and scaling the kind of blockchain technology that you're developing around encryption, right, as this confidential compute layer? Let's move into, we've identified some of these silos. In the last part of this conversation, I think you've helped us segue into what do we need to do to scale this technology, which is we first have to address these silos. And so what are you doing with confidential computing as a service, as something you've talked a lot about?
Yeah, so I'm going to give you the answer you want, and then I'm going to give you a surprising answer.
Yes,
you didn't ask.
Surprises, yes. Nothing is
the standard answer is that confidential computing is something that there are several technologies, they're all building. With Secret Network, we've started the Decentralized Confidential Computing Alliance, and we're bringing together all the companies that are working on blockchain encryption in order to advance this as an industry. Our Masari report came out on Tuesday on the DECC space. It's all about how confidential computing is important, why it's the next big thing in blockchain for adoption. And the reason that we started that was to foster collaboration and growth together, to learn from each other and not work in silos. That's the whole point. And that's why we joined Decentralized AI Society as well, because we believe that that collaboration can yield a much better result over the long term. The surprising answer that I have is that this, I'm trying to word it very carefully because I don't want anyone to be
It's coming. I see your face. You're like just teasing the audience. What is it?
I'm really passionate about teaching, mentoring people who are on the fringes to get into the middle of industry. And the way that I mentor people is to say, don't go down the conventional career path. Go into something innovative, go into blockchain, go into AI, and this applies very often to women who are not in the industry already, because those groups, not just women, but other marginalized people, when those groups come in, there's a different vibe that comes.
Dynamic.
It's less competitive than the standard big tech vibe, which I come from, and I can tell you there's a lot of competition there. But if we bring in these less centralized groups, less central populations, we find that collaboration is a natural outcome of that. So I really mentor people on a one-on-one basis. You go to my website, lisaloud.com, and I have videos there helping people to advance their careers. But the reason that I do that from a larger perspective is to improve our collaboration as an innovative culture.
That's incredible. So in terms of what you've just talked about, is that really is we have to get more, to break a silo to scale, is that we need a greater range of people.
Welcome back. I'm Christine Lee, joined by my CoinDesk colleagues. We've got Ben Schiller, Aeon Ashraf, and Margot Nykirk joining us. We're welcoming you from the CoinDesk studio at Consensus 2025, sponsored by MoonPay, the global leader in crypto payments. Their acquisition of Iron now enables MoonPay to provide multi-currency treasury management for enterprises and marketplaces that plan to hold or enable crypto payments. All right, guys. We are on our third and final stretch of Consensus 2025. And you've been hearing some really interesting anecdotes on the conference room floor.
It's been really interesting. I've been asking people what they thought about this conference versus other crypto conferences. One of the most interesting one that I've heard, and this is the fun one, is that it's different because there are less clowns. Which leads me to the next one, where it said it seems more organized, institutional, and longer term. So that is the vibe we're getting, and I agree with them.
Is that what you're hearing, Ben? What are you hearing?
Yeah, hopefully we haven't completely lost the fun. There are some clowns here still, but definitely that's the vibe this year. This is a serious business conference, and I think a lot of the hopes and dreams of the first stage of crypto, followed by the kind of exuberance and failures of the 22 era, SBF era, have been replaced by this more serious business environment for growth and building actual products, actual systems that really work for businesses and individuals.
Yeah, and I wanted to add to that. Like, I think the seriousness of it all also sort of introduces the legitimacy of this industry now. It's no longer so nascent. I've noticed a lot more suits this year compared to other years. So I think it's a visual confirmation that this is really being taken seriously. Also, a lot less cowboy boots, compared to Austin.
Well, this is
it's
Toronto.
It's kind of sad. I was kind of hoping to bring my cowboy boots back, but maybe
tuxedo
Canadian
too,
tuxedo this year.
Marco, you're on some panels. Tell us about some of the discussions you've been having.
Yeah, so I just got off a panel on the main stage on the future of Ethereum, which was really exciting. It was with Paul Brody and with Josh Stark from the Ethereum Foundation. Paul Brody's from the EY, Ernst & Young. And it was an interesting moment because the ecosystem is really going through some identity changes and maturing in some ways, and so it was interesting to get the perspective from, I would say, like 2 ETH maxis who really believe in the industry and in the blockchain itself, and try to push back a little bit to get that perspective in. But it was cool to see what their take is on some of the issues that have been profound now.
Yeah, it's interesting with Ethereum. It's like there's this whole narrative around Ethereum is that the price of ETH is not reflective of what's going on in the kind of development ecosystem of ETH, and that's their point, right? Is that Ethereum is not Bitcoin, and it shouldn't be judged on the price alone. You should look at the actual sort of what's going on under the hood, and you shouldn't just look at the price as a kind of advertisement for the system.
Interesting. The other day, I had a chance to speak with Anthony Diorio, who's one of the co-founders of Ethereum, and he said, in early days, they didn't rule out the possibility of Ethereum matching Bitcoin in price. He wouldn't rule it out now. It may be, a low chance of happening, but
never say never.
Never.
But that was never the goal of Ethereum, to be Bitcoin and have that kind of price action.
It was to be a better Bitcoin, actually.
Yeah, but to be a better system for building software, not for just a price action network with decentralization, which is what Bitcoin...
The word
Go ahead.
The word he specifically used was not to be a competitor, but to be an alternative.
Right.
And so I think that's playing out the way it is.
Well, I guess we had Bitcoin and then Bitcoin Killer, then Ethereum, then Ethereum Killer, which is Solana, and then as we go along.
We'll have another
Speaking of all that, I want to bring in Bitcoin a little bit because my specialty is in mining, and I have done a few mining panels as well as other ones. USA versus Canada in terms of mining. The best part about that is no one wanted to talk about the mining part of it. Everyone wanted to talk about how we had Ethereum, how we had these big Canadian blockchain play, we lost them. And because of regulations in Canada versus everywhere else.
Lost opportunity for sure.
Exactly. So lost opportunities in not just in terms of talents or the innovation, but also dollar amounts. And that I found fascinating, that people came here to talk about that. We need to get that back.
Yep.
Right.
There needs to be regulatory clarity. And I think there was a sense in Canada that there would be some friendliness toward the crypto sector when US President Donald Trump started becoming friendly, started announcing a crypto Bitcoin strategic reserve, a crypto stockpile, relaxing rules around crypto, no more regulation by enforcement. But when he started putting those tariffs up, then there was a little chilling effect, I would say.
Yeah. Well, there's also the chilling effect from having his own boondoggle, meme coins and so on. That's hardly helped make the case for Trump as the crypto president either. So let's be honest about it.
You say about the mining, but we have been seeing a joining of forces with American Bitcoin. I think that's a good example of a Canadian miner, Hut 8, joining with a American entity, a U.S. entity, American Bitcoin, with Eric Trump, the second eldest son of President Donald Trump. And Griffin Mining,
also
which
Canadian,
also Canadian, doing a reverse merger there to get into the public market. So there is some collaboration going on there.
There is, I agree. But there are two sides to that conversation. Is that yes, that's happening because obviously regulations are better in the U.S. All the Canadian companies, they're trying to merge or do some sort of business. Also, the fact because of this trade risk that we see, a lot of people in the mining community is thinking that and hearing that a lot of miners that are in the US or everywhere else, because of this trade uncertainty and risk, they want to come to Canada. So there is also probably potentially new path for us to monetize on our being Canadian, being first in this industry. Maybe it's going to play out. Only we have to wait for the governments to do something about it.
Yep.
And And just another note on Canadians wanting to get into crypto. I mean, Berachain is a great example. There is so much buzz in the developer community about Berachain. They are a Canadian out of Windsor University made chain again, but you see Smokey Barra, one of the co-founders, wearing the mask because he does not want anyone to know who he is. He's afraid of not only the, I guess, being doxxed by people who might want to, I guess, kidnap him, but also regulators who may want to, bring that regulatory hammer down on him in Canada. So there certainly is caution in the air.
Yeah.
In terms of the programming that you've been involved in panels and such.
Yeah.
What have you seen, Ben?
Well, I mean, one question I think I'm not quite clear has been answered, and I was hoping it would be answered really, is that there was a lot of uncertainty around Canada's, orientation on policy and the way forward. And we haven't quite, even though we had an election, we had a new Prime Minister come in, there's still not we still don't really know the answer to that from this conference, I would say. We invited a lot of people from the new government, from the new party, from the Liberal Party, but they unfortunately didn't come.
They didn't show up.
So they're not ready yet to set out the course for Canada on crypto. But most people are pretty positive on that, and definitely Trump has had an impact, and there is going to be this kind of regulatory arms race between the United States and other jurisdictions whereby the United States is going to be more liberal in terms of regulation, so other jurisdictions will have to catch up. So Canada, Europe, places in Asia will look at the US and say, we better have a stablecoin bill too, we better have a market structure bill too, et cetera, et cetera. So it's going to be an interesting process.
It's interesting you say that. During the Canadian election with Pierre Poilievre, he was a Bitcoin advocate and touted to be the crypto candidate for Canada.
Yeah.
Of course, when Trump laid in those tariffs, it kind of had a chilling effect. The country was just concerned about the economy, how to address a global trade war. And so in terms of election issues during the last federal Canadian election, it was all about the economy, it was all about addressing Trump and how to handle those tariffs. So the crypto conversation really didn't
really happen. In fact, the lobbyists for crypto, deliberately avoided the conversation because they thought there might be a backlash against it if they brought it up, because it was identified as a kind of Trump issue, and that was obviously a lightning rod in that election.
And just following up with one of the points you made, that the Canadian politicians aren't here. Eric Trump is here from America at a Canadian crypto conference. So, I mean, that speaks volumes. And just to wrap things up, Consensus 2025, we've had a packed show floor with 135 sponsors and 300 startups. We had a chance to speak with Eric Trump earlier. Let's have a listen.
I'm Christine Lee here on the conference floor of Consensus 2025 in Toronto. We've had amazing speakers headlining today. We've got Eric Trump, who has a lot to say about Bitcoin, his dad's meme coin, and more. Eric, welcome to Canada.
It's good to be in Canada.
Is this your first time here?
I know it's not my first time. In fact, I spent a lot of time building a building in the city, so I know it awfully well. So great people in this country. It's a spectacular country. I've been everywhere in the country. I've been up in the Arctic. I've been in all the cities. It's an amazing place. So you should be very proud. I've spoken at a lot of the crypto conferences, and this is absolutely beautiful. And the welcome we've got here has been amazing. But listen, I believe in cryptocurrency. You know that. The crypto community has always had a little bit of a problem. It's never had a great spokesperson, right? You had the people who were coming on the engineering side. They were never great communicators. You had people who were the degenerate gamblers, and many of those are my best friends, right? We all know them. And they weren't the greatest people at conveying the message. And, you really needed, I think, somebody who had a little bit of a voice who could talk about the modern implications of cryptocurrencies, why they're going to better people's lives, why they're transformational, why they are, in fact, the future, without these factionated groups kind of, competing against each other. And the crypto community, we're in our infancy, and it's going to grow so much in the next 5 years, 10 years. And people are embracing it at light speed today, and that's a beautiful thing. And I think it's really important that this community has a good messenger, somebody who comes out from a different world who can be kind of credible to modern day finance. And I kind of hope to be that person. What Bitcoin's going to do is the store of value is incredible. What kind of DeFi is going to do, and CeFi in terms of revolutionizing modern day finance, what stable coins are going to do, bringing currencies from all over the world into the US, the financial freedom that's going to give people, especially in countries that don't have sophisticated systems. It actually gives them more ability to access capital, than ever before. And every single day I talk about this, right? I run hotels all over the world, residential buildings. I'm waiting for wire transfers to come in. I'm waiting for swift wire transfers to go out. I'm trying to beat a 4 o'clock deadline. And every single week you're missing it. And you're sitting there saying, how broken can modern finance be that we can't even send wire transfers, on a Saturday morning, on a Sunday? Why are banks operating 5 days a week? It doesn't make any sense, right? Why do mortgages take 90, 120 days to mature? It makes no sense. And so we want to be as the tip of the spear in everything we do in the United States of America. We have to be. We have to win the AI race. We have to win the robotics race. We have to win the power race. We have to win the crypto race. If we don't do that, we will no longer be the world superpower, and that'd be a devastating thing. Crypto is here to stay. It's in its infancy. It's definitely in the dial-up period of what cryptocurrency is, but I hope everybody will remember this in 5 years and 10 years. And I think financial markets are going to do things incredibly different. I think Bitcoin will be proven to be one of the greatest source of value, and hopefully will be leading the way in American Bitcoin.
Welcome back. Maple Finance is a decentralized finance platform offering under-collateralized lending and borrowing for institutional and retail crypto investors, serving over $2 billion in loans since inception. Let's learn more about the crypto lending market with Sidney Powell. He's the CEO of Maple Finance. Sidney, thanks for joining us.
Thanks for having me. Glad to be here.
Under-collateralized loans. Tell me how that works.
So when we started, we were doing a lot of under-collateralized lending, and this was loans to market makers so that they could provide trading activity on exchanges. From 2023, though, what we've done mostly is over-collateralized lending. So we really tried to step in and fill the void that was left by those players like Celsius, BlockFi, Genesis. And that's now grown to be the majority of our business, is lending over collateralized to institutional players. So think exchanges, prime brokers, large trading funds, and even nowadays some family offices and high net worths.
When I hear about lending, I think of back in the last cycle where
That's
we
right.
saw a lot of collapse in the crypto lending sector with Voyager, BlockFi, Celsius. So what are the lessons learned, and how do you hope to not repeat those mistakes?
Not go to prison?
Yeah. Definitely 2022 was obviously led to a lot of lessons being learned about lending and risk management in the space. And for us, the things that we took to heart were, one, we brought all of the underwriting in-house. Previously, we'd had more of a decentralized or platform model, so we started doing the underwriting ourselves, and really the emphasis is now on collateral. So on average, we're about 160 or 170% over collateralized. Usually it's Bitcoin, sometimes it's other things like Solana or ETH, but the importance of collateral. And then I think the other thing that's been hugely important for us is because we do this on chain, it can be very transparent for investors and for participants. You can always see the performance of the loans, you can see how many loans we have and what the collateralization is against them. But I think we've tried to step in and do this in a more transparent and kind of risk-focused or risk management-focused way than in 2022.
So does that imply that a blockchain-based lending system like that would be more compliant to regulators? It's helpful to regulators to see into the business if you can put it on a blockchain like that.
I think so.
Yeah.
If you look, most of our clientele tends to be accredited investors. They're looking from us. They're looking for a yield product, so they put money in, receive a US dollar yield. But the other thing we've done is we also hold a lot of the collateral now with qualified custodians. So we have a big partnership with Anchorage, with BitGo, with Copper. And I think from a regulatory perspective, you can take a little bit more comfort knowing that the assets backing the loans now are, for the most part, held in qualified custodians.
Right.
What regions are you serving? We did speak with a crypto lender yesterday, APX Lending. They serve the Canadian market specifically. What regions are you looking at, and are there regulatory challenges when you're going to different
Going to
jurisdictions?
new markets?
Yeah.
That's a really good question. I think for us, the major markets we serve are US, Cayman Islands, BVI, Europe. We actually have a few clients in and around Hong Kong, Singapore, so we're starting to do more in the Asia-Pacific region. But from a regulatory perspective, the type of lending that we focus on is institutional. So we're lending to sophisticated counterparties rather than retail customers. And because of that, there's not as much in the way of licensing requirements because our customers don't need the same kind of protections that a mom and a pop who are borrowing against their Bitcoin, let's say, need. And so...
Like a Celsius.
Yeah, exactly, exactly. So when we're lending, it's, it might be a $500 million trading firm. They're very sophisticated. They have their own counsel. It's not an individual kind of consumer product. And so we're not subject to consumer credit licensing in most jurisdictions. However, how we would participate with players like the folks that you're speaking to are we would lend to them. So we would lend to the lending company, and then they have the retail customers. So we would be more of a wholesale lender.
And I suppose, how do you ensure the credit worthiness of those that you lend to?
It's also a very good question.
I mean, and I'll just give you a great example. FTX.
Yeah. So, I mean, we had previously had loans in 2022 to Alameda, but we actually recalled all of those loans more than 4 months before they went bust, and that was on review of their balance sheet. But nowadays, with the type of lending we do, the emphasis is really on the collateral. So we're looking at what's the volatility of whether it's Bitcoin or Solana or XRP, and that determines how much collateral we ask them to post. And the key things for us are, at what level do we ask the borrower to post more collateral or to start to repay their loan? And then the second trigger level is at what level are we just selling and exiting the exposure? So we call those the margin call level and the liquidation level. However, with our clients, generally you don't want to be doing that a lot. It doesn't make the client happy, it doesn't make us happy. And fortunately, we've only had one partial liquidation in the last 18 months. So we do take a look at the borrower's balance sheet, and what we're trying to do there is just make sure that these guys will be able to post more collateral so that we're not forced to liquidate them. Nobody wants that.
Interesting.
That's interesting. So can you tell us who that was?
No, they definitely wouldn't want that made public. But what I will say is that the both exciting but unfortunate thing about the space is that all of these heavy kind of volatile days where the liquidations and the margin calls occur, it's always a Sunday night US time.
Right.
Because Asia comes online, there'll be some news like whether it was the tariffs or last year we had like the yen carry trade. And so our team will be online from 9 p.m. Sunday to 4 in the morning, and that's when we're having to do these margin calls and liquidations.
Wow.
And unfortunately, in that party's case, they were based in London, so it was about 2 in the morning for them.
So you're just putting the kids to bed, and you got to like.
And then the phone starts beeping, and it's all hands on deck.
In terms of the demand, the addressable market here, what kind of opportunity potential do you see in the crypto lending market?
I think that we are nowhere near. We're still nowhere near the size we were in 2022. So that was about 50 billion. I would say we're still less than 15 to 20 billion. So we've got more than 2 to 3x growth from here just to catch up. But if I look at the overall size of the market, the math I work backwards from is, okay, Bitcoin's north of 1.7 trillion. Even if 10% of that, let's say 170 million wanted to borrow against their Bitcoin, 170 billion, that'd still be a $100 billion market. So I think the market size here is measured in the hundreds of billions, and that's still only a fraction of what happens in traditional finance. Whereas today, we're still less than 1/10 of the way there. So a lot of runway to grow.
And in terms of clients, are you increasingly seeing folks that they do not want to spend Bitcoin, they just want to park it somewhere, and that's what they're getting a lender for? That's the prime use?
Yeah, for the trading firms that we work with, it's mostly trading and settlement finance. They need it in their business operations. But for the high net worths and the family offices, you're absolutely right, Christine. It's more for they want to hold their Bitcoin, they want to have continued exposure to the upside, and very often they don't want to incur taxable gains by selling from a position of profit. So they might borrow from us and purchase real estate or fund lifestyle expenses, but we offer them a tax-efficient way to do that, and where they can retain the upside of the Bitcoin. I think one of the more larger, more recent loans we did was 40 to 50 million for real estate investments, and that was a real, OG crypto holder there.
It kind of reminds me of what Michael Saylor says about Bitcoin. It's going to be property. People are just going to park it and loan it out, and
the generation before us had property. They had a period of protracted declining interest rates, and so a lot of their wealth was held in property and real estate. I think for the younger generations, it's very different. Most of them are priced out of the market, and so they're looking at things like Bitcoin and crypto as a vehicle for effectively a long-term savings plan, as a house used to be. And so they're naturally going to be an expanding addressable market who wants to borrow against those assets.
Fascinating. Sydney, thank you so much for your insights.
Thank you so much for having me.
That was Maple Finance CEO Sydney Powell. Coming up, we'll be back to the future with Delorean Labs. Welcome back. Delorean Labs has taken a household name and infused it with the power of Web3, pioneering the intersection of automotive and blockchain, with plans to introduce the world's first tokenized electric vehicle utilizing the Flux protocol. Joining us now to discuss is Evan Kuhn. He's the president of Delorean Labs. Evan, so great to see you.
Thank you for having me.
Okay.
Pleasure to be here.
Loved having you here. All right, so the DeLorean is coming back to the future.
Yes, it is.
If you will.
Yep, we're back.
We don't see many DeLoreans on the roads these days. We've seen them in Back to the Future. We have one on the conference floor. But you're making a new line of them. So tell me a bit about that.
Yeah, so the company announced a couple years ago a new electric vehicle, bringing back the DeLorean. And of course, to do that, we're very future thinking as a company. And we figured, that has to be on-chain. So this is going to be a new electric vehicle. The whole process from ordering the vehicle, getting your build slot, happens on-chain. We've pre-sold a bunch of the build slots already. We have a marketplace coming out at marketplace.delorean.com, where these deposits will be tradable on-chain. And then when the vehicle's ready, that deposit will essentially become your certificate of authenticity, where all your driving data, service records will be uploaded on chain. So we'll create a very transparent secondary market, and then the buyers will know exactly what they're getting.
And this is an industry first in the automotive industry, no? I mean, I'm sure there are some car brands that have released NFTs, but this seems to have real utility. And I guess are car owners going to get some yields from these tokens?
Yep, so we're coming out with the DMC token as well. That's an RWA utility token. So we'll effectively be able to pay somewhat, you could call it interest on your deposit through this token. And then in exchange for selling your driving data back to the company, we'll also be able to give DMC token for that as well. And that's just the tip of the iceberg on what we have planned for the DMC token. We're really looking to utilize this in all parts of the DeLorean ecosystem.
Interesting. And what we're seeing often, I mean, we're seeing old brands like Enron, Delorean being reinvigorated into Web3. And so tell me a bit about that journey. And John Delorean himself was such a controversial figure.
Yep.
And so taking that legacy and infusing it into the next iteration in Web3.
Yeah, so first of all, on the John Delorean piece, if you guys are curious, I invite everyone to check out the Netflix documentary on John Delorean. It's fascinating. It's incredible. It's actually one of the things that got me really into the brand and excited about it. And I think what we're seeing, you know, as you mentioned to Enron and with this, you know, the age of probably the average person in crypto right now grew up with Back to the Future and all these great Web2 legacy brands. So there's, you know, such a recognition of the brand in the space, and it just became a natural fit.
So just the car itself, and this isn't a non-crypto sort of question, what is it about the car that makes it so special? Because it was so iconic and original at the time, wasn't it? People thought he was really crazy to be doing these funny wing doors and that sort of whole thing. Just talk about that, its sort of place in car history.
Yeah, almost look at the car. It's a work of art.
Yeah.
You know, so John Delorean was such a visionary in the automotive industry. You know, really one of the pioneers of the muscle car. Had such a great legacy in run, and then at the pinnacle of his career, he decided to take a huge risk and create his own automotive company. And he really put his heart and soul into designing this vehicle. You know, it's got the beautiful boxy design language, that brushed steel, and you know, it's so iconic that, you know, we're looking to bring that design language into a whole bunch of other products that we're going to be releasing as Delorean.
So is it going to look like one of those DeLoreans? I mean, how much are you going to incorporate that design into the new design?
Yeah, so we have the Alpha 5, which has been released. It's a bit more modernized, still has the gull wing doors that people love about the brand. But we have some other vehicles in the works in the planning phase right now that, you know, takes a bit more from the classic DeLorean that we all know and love.
Do you have an idea of how much these new cars will go for?
It'll be at the upper end of the luxury vehicle market. You know, these are going to be collector's items. They're very limited run. You know, we even anticipate that a lot of people may decide to keep them in free ports, as there will be an NFT associated with each car. So it'll be, you know, very easy to trade it. And so we anticipate a very robust speculator collectors market for these as well.
And how did you convince the Delorean family that you would be the ones suitable to carry on the legacy?
Well, so for myself, I was hired, you know, into this role, but you know, I think my background, you know, in Web3 in crypto, I've been in the industry for 8
well, I mean,
years
Delorean
at this
Labs,
point. And,
like, how did you guys get in there and try to convince them that you could carry on the legacy?
So I mean, it's the new vehicles coming out. I think this is where the industry is going. Like, you know, all industry is moving, you know, towards this tokenization, blockchain, you know, that transparency, and also the community aspect that comes with crypto and Web3. You know, it is so important. Like DeLorean has so many fan clubs around the world, and you know, these beloved communities, and you know, which is one of the reasons we actually started with something called the Time Capsule, which is, you know, an NFT project that was all about community, bringing the Delorean community together and getting them excited and energized for what we're doing.
And it was released on Sui, correct?
Yes. Yep.
Tell me why you decided to choose Sui as a
yeah,
protocol.
so you know, huge fans of the Sui blockchain. I think it's the very user-friendly tech. So setting up a wallet, you can link it to a Twitch account, Gmail, Apple ID, Facebook. So it's a seamless process to someone that's very Web 2 native will be able to do. They won't have to, you know, worry about the seed phrase stuff because that's stored in the account. So that's very helpful. Also, the great team behind it. They have roots in Facebook and you know, really strong corporate structure to them. So we have belief in the team and their vision. You know, they're digging the gaming side of things too. They have this bold vision to bring in a lot of gamers. They're investing in a lot of IP and entertainment verticals. So it was just a really good fit.
Are you pretty bullish on Sui right now? It's now at about $3, and
yeah, of course.
had a recent surge.
Yep. So
I
mean, part of it, I was just in Dubai at the Sui base camp. So that's where all the converted meet once a year,
right.
And get to see what's coming up in the ecosystem. It was an incredible experience. Got to hang out with the co-founders and all the builders in the space.
Fascinating. Nice. And just taking a look at the designs of the Delorean, it really reminds me of the Teslas that we're seeing on the roads, with the wings as well as kind of a boxy design we see on these cyber trucks on the road ever more and more. Is that coming back on style, or what's going on there?
Yeah, I think, it's, as I mentioned, it's a classic design language that is very beloved, and there's always a segment of people that want something different. They want something that's going to stand out. You'd be surprised when you drive the classic DeLorean down the road, the amount of people you see with their phones out the window, taking videos, and getting stopped all the time with people wanting to take photos. It's quite amazing.
So as CEO, do you get to drive one around then?
Yeah, a little bit when I have the time.
That's nice.
It's a nice perk.
Yeah.
All right, fascinating. Well, thank you so much, Evan. We're very excited to see more of the DeLorean when it comes out.
Great, thank you for having me.
All right.
Thanks for coming.
That was Delorean Labs president, Evan Kuhn. Meanwhile, Consensus 2025 has a packed show floor with 135 sponsors, 300 startups. Let's see what's happening on the ground.
Boy Logic coming live from Consensus 2025. We're live in Toronto. I am with Phil and Dom Kwok, and we're going to get in with the EZA Hackathon. Now, as we dive in, what is the most exciting things you have seen today at the Hackathon?
First of all, just the number of people. I mean, we have 1,000 hackers in this hackathon, which is the biggest one we've ever hosted, the biggest blockchain hackathon ever in North America.
What do you think the signal is? Why do you think it's more this time than it was before?
Well, I think key thing is EZA has grown so much.
Yeah.
We have this brand, people just know that it's exciting. We have amazing partners as well. So partners who are out here, partners behind me, like Captos, like Stella, for example.
Amazing.
We know right across the show floor, we have a lot of partners like Ripple as well. And so all this comes together, and it's everybody's super excited.
I think it's really the infrastructure has gotten so sophisticated in the past 5 or 10 years. So what is the thing, what are the trends you're seeing within this hackathon?
Yeah, so we're seeing a lot of AI, of course. Over the last couple of years, so many people have started to integrate AI into their projects. We see a lot of people here even who maybe come from Web 2, looking to explore Web 3. They can just use AI basically to code a lot of their projects, and so whole new wave of people can actually come into blockchain and Web 3, which is really cool to see, and that wasn't possible a year or two ago.
No, it was not. No, it was not. How do you two, as brothers, come together for a successful event?
There's a lot. I mean, we've been actually preparing for this for months now. So we actually really just kickstarted this properly up after Hong Kong in February. So that was a couple of months ago. Okay, yeah. And just the whole team essence of working together with CoinDesk on this, working together with our partners, EZA team as well, F40 flying. I mean, we've been out here for over a week now at Bonk.
Oh, shoot. Yeah. I'm just super excited. I'm just look out for them on the stage at Consensus. It's your boy Logic live from Consensus. I am the founder of Whatever.xyz and creative director of Wild Mavens. Thank you, Consensus. Thank you, Block Brothers, for hosting an amazing hackathon with EZA. We're out.
Welcome back. Sapien is building a decentralized data foundry using blockchain to enable enterprises and AI agents to source human expertise at scale while rewarding contributors for their knowledge. Joining us now with more is Sapien co-founder Trevor Koverko. Trevor, great to see you here.
Thanks for having me.
All right, but before we get into the crypto part, you're a former professional hockey player with the New York Rangers. What's going on with the Leafs?
This is a touchy subject. Okay.
It was tragic what happened the other day.
The trauma healing is going on right now. It's very sad, but it's not over yet.
It's not over yet.
You have to have the faith. Leafs Nation.
So do we've got go Leafs go? What do we've got? Do the Leafs have a chance here?
It's never the playoffs. Anything can happen, and we have consensus in Toronto. That's a sign. You know,
Yes.
this is a rare thing, and
Consensus
the boys
bump.
have to appreciate
it's
the
a thing.
magnitude of this to step up tonight.
All right. Well, okay. So you were formerly a founder with Polymath, which you dealt with security tokens there, and now you've moved into data and artificial intelligence. Tell me about that pivot and what you hope to bring into this new venture.
Yeah, you know, I've been very proud to be in the industry for a long time. I got involved in 2012. I bought my first Bitcoin on eBay of all places. I think they emailed you the private key. And that was like my, you know, what do they say, the point of no return. I never left. I got really lucky to be around Ethereum when it was getting started in Toronto. And that's what Toronto here plays a big role in the evolution of crypto, because this is where, you know, Vitalik was releasing the white paper when he was working at Bitcoin Magazine in 2014. And so yeah, that was kind of my journey from just a curious, interested technologist to eventually becoming a founder. My first crypto company was called Polymath. We were an early RWA network, which is now on the path of going public, so that's kind of gone full circle as well. But I got really excited about AI, and funny enough, AI is very popular here in Toronto because a lot of the infrastructure and researchers that propelled AI to what it is today came out of the University of Toronto. And so we're kind of riding on their coattails a little bit too. But I'm excited about AI, and I'm excited about how crypto can make AI better.
Yeah, OpenAI came out of Toronto. And so tell me a bit about your mission and goal and what need you see in terms of how to solve decentralized data with artificial intelligence.
We have kind of a little secret, which is we know that behind the curtains of these magical, autonomous AI agents is a lot of humans. Millions and millions and millions of humans that don't get any credit are actually working full-time in AI for the big foundational labs or for third-party kind of like BPOs, and they are creating and structuring data quietly and behind the scenes. These people do this all over the world in places like the Philippines, and they have huge, giant facilities where these people work. And there's nothing wrong with that. It's a new job opportunity. Companies like Scale AI that we're inspired by were one of the first people to realize that humans making data sets better by labeling data, by structuring data, and by producing data make these AI models work. In fact, OpenAI was the first one that learned this and was the first one to do industrial scale human feedback in these data sets. So that's a little insight that we had. And we thought, hey, isn't that awesome? AI needs us. It's not the other way around. For these models to get better, we need even more humans involved in the production of AI data, and we need it to be as diverse as possible. That's another insight we had. If you only have a certain amount of socioeconomic people or gender or backgrounds in one room doing data production, you get slanted and biased results. And we want diversity of opinions. It makes more high quality data. So there's a bit of a network effect there. The more people we have producing data, the higher quality data they produce and the better the models will be.
So it's interesting. I mean, it seems like there's a big kind of resurgence for decentralized AI as a kind of idea. You know, a year ago, people were so kind of hooked on the idea of ChatGPT and OpenAI and fascinated with it. And now people are talking much more about decentralizing it, giving data back to individuals, allowing them to own it. And actually, it seems to be more performative in some ways. You talk about diversity, having that more specific data. You need that plurality of people offering up the data for these systems.
Yeah.
Yeah.
Well, let me give you some examples. So one of our first customers was a researcher doing pancreatic cancer research. And he was trying to build a model that could literally detect cancer. But to do that, you got to move up the data supply chain. You need lots of image data that has what a tumor is, what a cancer cell is. And so we actually had to bootstrap a network of radiologists, and they're not cheap, right? So we pay them their fair wage.
Right.
But on their free time, when they're not at the hospital, they would just open up the app and start labeling, this is a cancer cell, this is a tumor cell, and we're teaching the machines how to detect cancer. So that's an example of like how high quality data is produced from humans. Another one we could say recently was a customer in China. It's one of the largest education companies in China, and they needed to build a model for automated math tutoring. And so to do that, they needed to bootstrap Mandarin-speaking mathematicians. That's what we helped them with. And they were doing mathematics for the model to learn itself. So every single vertical, I just gave you a few, is going through this paradigm shift where it needs human data to make these models better, and we don't have nearly enough of it. One last comment on the scale problem in data is you can think of it like an iceberg. All of these models are training on the same open internet data, which sounds endless, like, oh, all the YouTube videos every day getting uploaded, but it's actually not. We've completely run out of data. It's called the data wall in academic circles. So everybody's trying to get an edge to make their models better. He or she who has better quality data has a better model. So everybody's trying to find, can we produce new data? Can we get access to other people's private data set? That's kind of the ice under the water.
Right.
The tip of the iceberg is like Reddit. Underneath that are private company data that isn't available. So everybody's trying to build a strategy there.
So you're a facilitator between those foundational models and these new forms of data, more specific forms of data.
And our secret is we use real humans, specialized humans, not just general humans. They might have a skill in a certain area, and they're providing their special knowledge to these AI models for rewards. And the interesting thing about this is it's a new form of gig work that's emerging. And it couldn't happen at a better time. If you look at Uber, I don't know if you've seen the robo-taxis, they're starting to look pretty good.
Right.
If you look at the Door Dashers, they're starting to look at the drone deliveries pretty good. So the gig working in the traditional sense looks a little precarious, but that's okay because there's a new window opening up, which is these AI gig workers, which is people that use Sapien to earn money, which is, in my opinion, a lot better. It's fun, it's gamified, you can work wherever you want, you don't need to buy a car first to drive an Uber, and we could potentially eliminate poverty in this world, because if you can have an Android phone and an internet connection, you can now make a living wage selling your knowledge to AI models, and I think that's an exciting future.
When you say rewards, what are we talking here? And you say it's enough for a living wage?
Yeah, exactly.
Oh, okay.
Rewards is cash.
Okay.
And by cash, I mean stable coins, because that's another key component of this, is the blockchain enables payments, because that's actually a huge problem for a lot of workers now doing these small jobs in the Philippines. It's hard to get paid with remittances and transfer pricing and things like this. So that's another key point of how Web3 makes this better. But it's real money that these models have a lot of, and now they're distributing it out to get better humans to do their data.
Interesting. Okay,
Yeah.
I understand the Sapien in the model now. Okay.
yeah, that human,
Yes.
Sapien, exactly.
Okay.
So the revenge of the humans, that's what we say. And we just over 700,000 humans in the network in all walks of life in 110 countries, and we're really hoping that this is going to become the next major form of fun and flexible gig work for people.
Trevor, thank you so much. Sounds awesome.
Thank you,
Appreciate
guys.
your insights.
Thanks, Susan.
That was Sapien co-founder Trevor Koverko. More after the break. Optimum aims to solve the most pressing scalability and cost challenges in blockchain ecosystems by optimizing decentralized latency and bandwidth. Here with more is Muriel Medard. She's the co-founder of Optimum. Muriel, thanks for joining us.
Thank you very much for having me.
You're joining us from fresh off your keynote.
That's right.
So I guess talk to us about Optimum. High performance memory infrastructure for any blockchain. Maybe you could give us some simple use cases. Explain it like to a 15-year-old.
Yeah, no, thank you. So whenever you're using a computer, for instance, like the computer you have in front of you right now, there's a whole infrastructure there, not just to do the compute. That's what we think of when you think of computer, you compute. But you have, of course, the memory and the bus. You have all of the infrastructure that's sending around all the data that you're working on while you're computing. So what we work on is that sending around and maintaining of the data just like it's your computer. So we leave the compute to the people who are doing compute. Many people here are doing an amazing job on that. And we're really concentrating on making a very low latency, very reliable, decentralized memory. So data both when it's traveling, so in movement and at rest.
This is
So go ahead.
This is based on RLNC technology that's behind Optimum. And that was spun up over 2 years, or 2 decades rather, of MIT research that you did.
Yes.
So tell me a bit about that underlying it.
Yes, this is a very long haul. So I'm on leave from MIT. At MIT, I hold the NEC Chair in Software Science and Engineering, and I've been leading the Network Coding and Reliable Communications group for about 20 years. Basically just figuring out how do you run in an efficient, reliable fashion, a completely decentralized system. Now, when we started working on this, I like to joke that my colleagues were doing wellness checks on me because the question is like, why are you doing everything decentralized, right? Like, why? Like, because it's the only way to go in the end. You know, in the end, if you really want networks to become scalable, they have to be decentralized. So I didn't know when it was going to happen. But I figured it had to happen. You could have told me it was in 5 years. You could have told me it was in 50 years. I would have believed either of them. What coding is making equations. So basically creating equations out of the data you have. And you would say, well, why do I need equations? I have the data. It's because it allows you to give a much more robust and flexible representation of the data. And that's what allows the speed up. So today I was presenting some details from our testnet. We're in testnet right now with large node validators that are running Ethereum. And they're seeing multi-x improvements in the latency for their propagation of data.
I'm really fascinated by your story because, as you say, I mean, you came up through the elite levels of academia. MIT is a very competitive environment for building a career. And after all that work and getting to this top level of engineering at a top university, you're now going into the wild world of startups. I mean, how is that going from academia to a conference like this with all these crazy tech bros?
So I ask myself that every day. And every day I think, I'm happy to be doing this. I was very happy where I was. I've been ridiculously fortunate, frankly, in my academic career. I don't know another word to describe it. But I really, really wanted this to happen and to take shape. And again, it wasn't to go and do a startup. It was to do tech transfer from basically a career, of really seeing something that I've worked on for so long with so much passion, obduracy, you might say, and to really have it come to a decentralized world. It's amazing to be having that that ability, that opportunity.
And you're really saying that if we're going to have a truly decentralized economy, we need this decentralized memory layer. It's not just enough to have this transactional blockchain layer.
Yes, and we already do to some extent have it. So a lot of the L1s, for instance, have it, but it's kind of sluggish.
That's what I was going to say. Because when it's decentralized, okay, you have the scale, but when it's centralized, you have control, and so that's why a lot of folks use centralized exchanges because the UX is easier. It's just it's faster, it's reliable, and whereas the DEXs it may be a little laggy. So I'm wondering, what.
So that's a fascinating point you bring up. We have this almost inherent notion that control has to be better, right? How could it not be better if I had some sort of omniscient controller that saw everything in the network? Surely that would be better. And the really remarkable thing, let's go to the propagation of blocks, that's in particular our first product, Optimum P2P. You can actually show that by doing these equations, you do as well as if you had a centralized controller that actually saw everything, but you don't. So even if I did have this eye in the sky that saw everything, noticed every single block and was able to control where they went, I would still not do any better than this completely decentralized random mixing of equations into new equations, which is really hard to get your head around at the beginning, right? Because you're like, this is not serious, right? I mean, if you go and your boss says, so how did you do it? Randomly. What do you mean randomly? Yeah, just like, did you try something? No, that's the best I can do. You think, you should be looking for a different job. But, this is probably the best thing to do, as long as you do it right. I mean, obviously the subtleties there. So yeah, it's so inherent to us to think that surely if you gave me control, I should be able to do better. But the decentralization is actually not a downside. It's not the usual trade-off that we're thinking of. It's not a downside.
All right, we got to wrap, but quickly, when do you hope to go on mainnet?
So we're looking to go on mainnet towards the end of the year. So as I said, we're a first level testnet, and we're doing different types of testnets within the testnet, the different sub-testnets. And yeah, so that's what we're looking to do. But one of our engineers is there, and and sometimes they go, I think we can go faster, but I'm always afraid of saying we're going to go faster. So I'd rather say end of the year and go faster than the other way around.
All right. What is it? No, never mind. I was going to say overpromise, under-deliver, but no, you want to overperform and under-promise.
That's right. Under-promise, over-deliver. Yeah, better than the other way around.
Okay. Thank you, Muriel, for joining us.
Thank you so much.
That was Optimum co-founder Muriel Médard. All right, we're coming to you from the CoinDesk studio at Consensus 2025, sponsored by MoonPay, the global leader in crypto payments. Ben? It's the final day of Consensus. What are some of your favorite moments so far?
My favorite moments? Well, I mean, the Trumps were a big highlight. Dave Portnoy was a big highlight. I enjoyed some of the Ethereum programming. We had an AI summit. We had a brand and creator summit. We had a mining summit. But I think the biggest highlight is always for me, like seeing this industry grow up, all the interesting people that we have here. We just had a brilliant MIT engineers, scientists here. Everyone from Muriel to, degens to crazy bankers to anarchists. This industry always brings everyone together. I think it's really that diversity of people, of geniuses and interesting people that really is fun to see every year.
We have over 15,000 attendees from over 100 countries, over 450 speakers, and over 200 side events. And what I love about each Consensus going to a different city is you get to experience a different flavor of each city. Each city brings its own atmosphere, exuberance, dynamic. And when you go to the side events as well, you really live that up. So that's
it's definitely a different vibe here in Toronto versus Austin last year.
Well, we were saying Austin with the cowboy boots. We had the mechanical bull. And
but it's a really fun city. It was my first time in Toronto here, and I've really enjoyed it. So it's been great.
You tried the poutine.
I have. We had poutine and
there we go. The
Korean karaoke as well. That was great. And we had a really fun time here, and maybe tonight we'll have some more fun.
Okay, very, very good, excellent. And in Miami?
That's a whole other ball game. That's a different city again, so that'll be fun too.
All right, we're looking forward to it. All right, we're going to take a quick break, but thank you for joining us. More soon.
Welcome back to the show. I'm Jen Sanasi, joined by my co-host Zach Seward, whose birthday it was yesterday, and no one celebrated it on air. And so, happy birthday, Zach! Yes, everybody clap for Zach. It was his birthday, another year on this planet.
Thanks, guys.
Yeah. Okay. Good. Now that we got that out of the way, Bitfarm CEO Ben Gagnon joins us at the desk. Ben, how's your consensus been?
It's gone really well. I think this has been a great conference, and first I'm really excited to see all the Bitcoin stuff happening on here. It seems to be really dominating the conversation up on stage, and a lot of people's conversations out in the hallways.
You said you were surprised by the dominance of the Bitcoin conversation here at Consensus in Toronto. Why? What were you thinking was going to lead the conversation before you got here?
Well, I think, when you think about consensus, my first thought is Ethereum. And I come here and all of the panels that I've seen and all the conversations I've seen were about Bitcoin. I think maybe it's showing a little bit of the sentiment towards Bitcoin versus Ethereum right now. Obviously Bitcoin's outperformed Ethereum quite a bit over the last, year or two. And I think you're seeing it reflected here in everyone's kind of conversations and thoughts that they're having out on stage.
We'll go deep on mining in a bit, but big picture, Bitcoin, we're talking about the institutional embrace of Bitcoin. We're talking about even like sort of Bitcoin DeFi and other interesting experiments there to bring productive assets to the Bitcoin blockchain. Big picture from where you sit, what's most exciting about Bitcoin here in 2025?
So I think the industry is constantly evolving. And, over the last couple of years, you've seen this corporatization happening with Bitcoin companies where they're getting publicly listed and they're starting to be a lot more professional in their organizations. To think that you have Big Four auditing companies, doing audits of crypto companies back in 2016 would have been like a crazy idea. And now it's really standard course. So I think it's showing the quickly evolving nature of the whole industry. And that's what's really, I think, enabling all this institutional interest. The Bitcoin treasuries, when we first started putting Bitcoin on our balance sheet, I think we were one of maybe 10 companies that have Bitcoin on our balance sheet. Now it's 100, and I think it's going to be 200 by the end of the year. So really, really changing quite quickly.
We know you're expanding into HPC and AI. Like you said, you've historically been known as the Bitcoin miner, the Bitcoin miner. Talk to me about what the future looks like for you on your trajectory as you get into the AI space.
Yeah, I think it's one of the real interesting things in the Bitcoin mining space right now is the huge demand that we have on HPC. You look around at how data centers have been built for traditional businesses, and you're, usually really small data centers, maybe right on Bay Street or right on Wall Street or in downtown LA or Chicago, and they're small, they're 1 to 2 megawatts, right? But they're there because they need to be close to the businesses or close to the banks. But what Bitcoin miners have been doing in the last couple of years has been focusing on scale, taking over former aluminum smelting factories and plants and building hundreds of megawatts of infrastructure for Bitcoin mining. And now with the demands of HPC and AI, where, power and scale is the name of the game. Really, it's the Bitcoin miners who have been investing in all this infrastructure for the last couple of years that have actually a leg up on a lot of these other companies who've been investing in really small data centers.
It's pretty crazy. I think it's kind of lost on the general audience just how Bitcoin mining, the infrastructure around Bitcoin mining, has just really accelerated the bandwidth, the capacity for AI compute, right? And I wonder if you had any thoughts on that evolution or that dynamic between these two industries and whether or not sort of you see them kind of converging in some, not so distant future.
So, the big thing for any compute market is actually not the chips or the hardware itself, it's the power. It's always the power is the limitation on growth. And so with Bitcoin miners, what you've seen is how can you be a little bit more scrappy? How can you be a little bit more cost effective in your build out? And how do you build things at a massive scale? When you're looking at the new HPC data centers that are being built, they're starting to learn lessons from the Bitcoin miners. They're starting to do containers, which they never did before Bitcoin miners did it. They're starting to do modular data centers. And actually the technology is actually converging here. So you see this technology, it's called liquid cooling. And this is the same sort of technology that's now powering a lot of, or running a lot of the cooling for the Bitcoin mining. It's doing the same sort of technology in HPC servers. And it's because the demands on the energy are so great, the heat consumption is, or heat production is so great that you need to work on this new technology. So, back in the day, even 2-3 years ago, a Bitcoin miner would have looked nothing like a server in a traditional data center. Now it's hard to tell them apart.
Interesting. And you mentioned sort of like, where people are scaling. And I think the history of Bitcoin mining has always been out sort of the migration of hash rate to different regions around the world. largely dictated by cheap energy prices. So I'm very curious to know where you guys are scaling in terms of where your hash rate lives and what's determining those decisions, whether it's energy mix or other considerations.
Yeah, I think the really cool dynamic here is that, over the last maybe 30, 40 years, the West has really been exporting all of their manufacturing off to other countries, China and Southeast Asia especially. And when they did that, the power infrastructure was still there. The hydro plants that used to power the aluminum smelters or the manufacturing sites are all still there. They still produce the power. The rain still falls out of the sky. All that infrastructure is there, and it just wasn't being utilized. Now the pendulum's swinging back to the West, and all of this infrastructure, which has been underutilized for decades, is now being repurposed for Bitcoin mining and now for HPC and AI. And so we used to manufacture things like widgets or what have you back 30, 40 years ago. Now you're manufacturing digital commodities in AI factories. But it is really, really swinging back to the West in an interesting way.
So you're mostly situated in the West. What are your core geographies right now?
We're about one-third Canada, US, and LATAM.
Interesting.
But most of our growth right now is on the United States. That's where there's the most energy infrastructure, it's the most cost-effective, and that's where there's the most demand for this kind of compute.
Ben, that's all the time we have. Thanks so much for joining us at the desk. It was a pleasure chatting with you, and we'll see you around for the last few hours of the conference.
Thank you so much.
Good stuff.
That was Bitfarm CEO Ben Gagnon. We're going to take a quick break. We'll be right back. Welcome back. You're watching CoinDesk Live from Consensus 2025. I'm Jen Sanasi here with my co-host, Ben Schiller. Ben, what's going on?
It's all going on. We're closing down the conference. It's still pretty buzzy here for a Friday afternoon. It's pretty impressive.
It really is still buzzy here for a Friday afternoon. That's a really good note. Usually on a Friday afternoon, everyone has gone home, everyone is in bed, we're getting on planes.
I mean, when we're programming stuff, people never want like the Friday afternoon slot. They say, oh, it's a graveyard, but actually it's not a graveyard at all. There's plenty of people here, there's a lot of buzz. I think that's partly down to the Trumps being here and some other big names, so that's definitely helped retain the people here.
I know you've been at the desk with multiple different hosts over the past 3 days.
You're the best, obviously.
Oh, thanks, Ben. Yeah. I know you've been at the desk with so many different hosts, and they probably asked you what your favorite moment is, or what you're looking forward to. What if they not asked you? What can I ask you to extract that Ben Schiller je ne sais quoi?
I don't know. That's asking a negative, I guess.
Well, let's look beyond the conference then, Ben. Consensus 2025 is winding down. We're going into the summer months. A lot happening in the news when it comes to legislation in the United States.
Yeah.
I mean, what events are you watching? What events are important to you to signify that this space is moving forward?
Well, I mean, the stablecoin bill going through Congress, there's a reason why they started off with stablecoins. It's a foundational technology for crypto. It's very important for lots and lots of reasons. And I think, you can get bored with the kind of legislative process, but once that passes, it is really going to provide the plumbing for the next stage of crypto. It's going to allow multiple issuers, all kinds of companies, companies in Silicon Valley, big banks, tech companies everywhere to have their own forms of payment that is going to be trusted and available to mainstream consumers. It's going to take crypto to the next level. So I think when that happens, that's going to be a big moment for this industry.
We've talked a lot about legislation here at this desk. A lot of people bringing conversations they've had on the conference floor to the desk, and a lot of optimism about stablecoin legislation passing before August recess, despite that failed vote a few days ago. CoinDesk's Nick Day was at the desk with us this morning. He said that there is going to be another vote on Monday. There is updated language on that bill. So things seem to be moving forward, and folks seem to be optimistic. Is that what you're hearing?
Well, the thinking is, I mean, at least the consensus is that you don't bring a second vote to the floor if you don't have the votes. So presumably the votes are there, but it's become very super political because obviously Trump's personal crypto dealings, the meme coins, etc., have definitely complicated the narrative that that Trump is the trusted champion of crypto. So it's given a kind of an opening for the Democrats to attack Trump and therefore attack the bill. So it's become kind of collateral in this conversation. But most people think it still will pass. They need at least 59 votes in the Senate, and it seems like there are 53 Republicans and at least 6 or 7 Democrats enough to pass it. So most people think it will pass.
You know, I didn't watch Eric Trump on the stage yesterday, but I could hear the audio coming from the feed over at our desk, and I believe that he was asked about this conflict of interest topic that was brought up by the Democrats, and he said, people wouldn't be upset if they were getting into real estate or any other sort of business. Did you hear what he said? Do you remember?
Yeah, I mean, it's a classic thing you do when you're doing something dodgy. You say, well, what about this other thing? So, but it's not about the other thing. It's about this thing. It's about the crypto thing. And I think most of us can agree that some of the stuff that's going on is it's either unlawful, but it's definitely unhelpful for the industry. I don't think that the politicians like Trump should have personal dealings in the thing they're trying to regulate or legislate about personally. So I think that's something, as an industry, as much as we're benefiting from this, we should agree that these personal dealings are unhelpful and possibly illegal.
I'm sure that these conversations are going to continue. I don't think this is the last that we're going to hear about this. I think it's going to continue to be debated within government and on shows like that. And I think that it's important that we have these conversations so people can stay informed and understand what's going on while they're making their own investments and their own financial choices.
Yep.
I want to turn now to the Pitchfest because we are going to take a look at who won the Pitchfest.
I love Pitchfest.
In just a few minutes. I know you were really involved in the Hong Kong Pitchfest.
Yeah.
We have about 1 minute until we hear that announcement. Were you involved in planning the Pitchfest here?
Yeah, a little bit with the judges and some of the applicants. So that's always good because you always kind of get this sense of what the future is. So I mean, in Hong Kong, we interviewed some cool people. There was a guy there with a new form of credentialing for replacing university degrees. That was really interesting. He was the winner. So I'm kind of interested to see what the winner's going to be this time and some of the other ideas that are coming out of it. It's always a big kind of ideas fest as much as a pitch fest. Yeah.
I wonder if there's going to be an AI component. That is...
You would think so, right? Yeah.
That is the name of the game these days.
That's true, yeah. Yeah.
Have you been down to the Pitchfest? I know I spoke to Jake Bruckman yesterday, and he said there were 2 really good pitches. He's one of the judges.
Yeah.
Did you see any of the
I
pitches?
haven't had any time today to go over there, but I'm interested to hear more about it. Yeah.
All right. We are going to take a look at the winner now. I just want to remind folks that over the past 3 days, 40 teams competed in our Pitchfest with 5 finalists. Let's take a look at who the winner is right now.
Investor protection and market integrity. And in my mind, a bright future for Canadians here is where they feel confident and engaged and informed investing for their futures. Whatever that may be in, whether it's crypto assets or traditional investments, that's my vision.
Okay, great, good answer. Thank you so much to you and my panelists, and thank you everyone.
Thank you.
All right, this is the moment. So, okay. So this is the welcome to the finals. This is we're just going to announce who's won this entire week of pitching and the CoinDesk Pitchfest. We had, as you know, 38 companies participating from 7 different countries through 5 heats and a great wildcard selection. These are the best of the best. So these are the companies that won through all the categories, and they pitched here on the final stages. I want to call them out here actually right now. So please bring the companies out. Whoops. Bring the companies out. This is Conto, Nifmint, Chain Patrol, Pi3, Heidenberg, and R&D, which is Randomu. So first of all, thank you so much for coming. It's great to have such a cross-border and international event. Just remind me where you traveled to come to Toronto from. What city?
Seattle, Washington.
Seattle.
I'm from Toronto.
Toronto, but I think Montreal. Didn't you travel from Montreal? Okay. Your co-founder, North York. All right.
London.
London.
Philadelphia.
Philadelphia.
Seattle, Washington.
Seattle, Washington.
Blue Jays way in front.
You live across the street. All right, I know that. All right, let's do this. I'm going to open this envelope. This is the runner-up. I'm seeing this for myself for the very first time. The runner-up is Edwin Hanshu, 1 Conto. All right, brother. All right. Too many things here. Okay. I just opened up the envelope about who won this thing. I'm going to hit the button. Chain Patrol, Vito Giovanetti. Nicely done, Gino. Oh, wow, trophy here for you. From literally across the street, you can, oh, wow, okay, all right, yeah, you can come up on stage. Let me just say, I want to congratulate all the finalists, all the judges. We had incredible judges here from like so many different funds, 18 judges. Yeah, we're basically, oh, I don't know, these slides are a mess. We're basically done. We will see you in Hong Kong and, of course, in Miami. I'm pretty sad that this event is leaving Toronto, our loss, but you never know. We come back one day. Congrats to everyone. Well done.
Welcome back to CoinDesk Live from Consensus 2022. It's not 2022, it's 2025.
It's 2025 now. You're 3 years behind, Jen.
That's how long I've been sitting at this desk. We are bringing this programming to you from MoonPay, the global leader in crypto payments. All right, we are going to take a look at what some of you have been saying about Consensus 2025 on social media. All right, Dan Leach says current mood, and he's looking real excited.
He looks pretty happy there.
He has the thumbs up in front of the FastX sign, and he's doing a little dance.
Yeah, it's pretty good.
All right, let's take a look at the next one. Ben, I'm going to need you to help me read this.
He says, listening to Trump's son's speech, the hall is packed. Eric is bullish about Bitcoin, saying that digital money greatly simplifies money management and large transactions, and he promises that the US will become the crypto capital of the world.
All right.
Yeah.
Well, folks sharing some.
Easy A, this is our hackathon brothers. Gigabrains, and more Gigabrains. Calm before the storm as we get ready to announce the finalists of our Easy A Consensus 2025 hackathon.
Of course, we're going to hear who the winners of the hackathon are soon. And Ben, I won't put you on the spot for that one. I do want to say, though, I said I think the winner of the Pitchfest might have an AI component to it, and the winners did have
Well,
an
I mean,
AI
considering that
component to
AI is like a foundational technological breakthrough of our time, that was
I
pretty
know
brilliant of you.
Yeah, it was very brilliant of me. I only make brilliant predictions. I like to always put 2 and 2 together while sitting here at the desk. All right, let's get to our next interview now. Bonk has been right at the center of the action in the Solana ecosystem. It started as a meme coin and has grown into a token with utility across wallets, games, and even payments platforms. Joining the show now is Bonk core contributor Nam. Hello.
Hi, thank you for having me. It's wonderful to be here, and I appreciate the opportunity to speak here at CoinDesk Live.
Thanks for being here. Now, okay, there was a time when you would come to Consensus and everyone was talking about meme coins. There were dogs everywhere. That seems to have really changed over the last few years. It's feeling a lot more mature. Talk to me about how you're experiencing Consensus as a core contributor of Bonk.
So there is still one Shiba who is hanging out with a kimono just off stage, which has been fantastic. But yeah, it's been great to see, obviously, the maturity of the ecosystem. I think you're seeing a lot of the interest in what's referred to like the TradFi sectors of the ecosystem. A lot of institutional adoption, which we've been talking about. The bankers are finally coming for your Bitcoin. It's awesome to hear. But it's been good to see a lot of the companies that were focused around just like pure speculation or utilization are now moving into how they can build consumer-based products, what they can look forward to, and how the attention economy exists on chain, which I think is the basis of all memes.
What does the evolution of that attention economy look like to you? I know you were on stage talking about the evolution for NFTs and meme coins, but talk to me about that future you see as you build.
Yeah, the interesting thing that you see coming out of like profile picture kind of like NFTs, right? The initial areas of Bored Apes, of the Solana Monkey business NFTs, all these sorts of things turns into, well, what does your data look like if it's represented by that same area? Each one of us is still non-fungible by design. That's part of the reason why all these different platforms are enjoying selling your data, that they're learning about you as a customer, as a consumer. And it's easy to take a look at your Spotify profile or your Twitter profile, look at those as like, okay, what does that actually mean for your traits, your habits, your interests, your opportunities? These are all things that are being sold as advertising data. And you can take the understanding of that as like, each of these individual consumers is realistically going to look at this a few years down the line and be like, okay, well, my data obviously has value. It's being continuously bought, sold, traded. What does that actually mean for me and myself? And then you can apply that to, okay, well, what do the things that I'm watching look like? If I'm using certain emojis in text conversations, are these things more valuable than others? What does that look like? What does usage equate to as more and more things move into like on-chain messaging? You see that with like Telegram starting to monetize like their sticker packs, right? It's coming in very, very interesting ways right now where I think the memes and the funny things that we talked about, over the course of the past couple of years have now started to turn into a little bit of the financialization that I think we've talked about previously in crypto.
Bonk, I remember when it launched on Solana, it was interesting kind of context at the time because Solana was obviously identified with SBF and it had some problems coming out of that, and some people were down on Solana. It was like SBF's chain, and it seemed like Bonk came out and really revitalized the story around Solana, and then we've had this kind of meme coin explosion. Just talk about that and how you played a role in the kind of revitalization of Solana.
Yeah, one of the core theses of Bonk was that the problem that, well, one of the problems that came out of FTX and all of the things associated with that was that there was a ton of great products, but liquidity on Solana dried up, right? Nobody wanted to be associated with it. There were all these different issues where you couldn't trade or execute things on chain, and there were still really cool things being created, and there were a ton of devs who were pushing stuff out. They just didn't have the user base that really wanted to start putting more money at risk. Some of this was based around, liquid staking tokens were depegging. There were issues around borrow-lend platforms. All these fundamentals that you see exist across a lot of different L1s were running into some problems. And what Bonk did a good job of was bringing that attention and that capital back into the market to the point where people were interested and excited about it. And all these things that still existed that we didn't create, really got to get highlighted. And now Solana as a chain is able to be utilized for a ton of different DePIN projects, is able to be, a financial center. It's, continuously seeing record numbers of not only like individual developer efforts, but also in terms of the amount of transactional volume and the individual transactions that it's processing. And all these things were still there without Bonk. We were just really good at getting people to pay attention to it, to trust a little bit more inside of their offerings and their capital, and really keep rewarding all the people who were participating on Solana at that time.
Recently, the Solana ecosystem has really become known for meme coins and platforms like Pump.fun. What do you think that means for the perception of Solana? You just mentioned a whole slew of projects that have nothing to do with meme coins that are building on Solana, but Solana has really become the place known for memes and sometimes rugs. What does that mean for those projects and for you?
Yeah, 2021 was the year of BSC as the chain for all these different areas. Then it became, you were foolish if you weren't launching something on Ethereum because that's where all the liquidity was, that's where all the interest is. And I think the chain is more so just a function of what's the smoothest, easiest, best experience for launching any of these different financial products. Pump has done an incredible job of very much simplifying the process in terms of what it means to deploy a token and to get it in front of various different eyes. And then you've seen all these different products that have grown up around the trading, the speculation, whether it's spot, perpetuals, it could even be something as simple as like dashboarding infrastructure or data feeds or these aggregators right now that are making it easier to trade these assets. And there's all this secondary infra that gets built on top of what is essentially pure speculation. But the market loves speculation. That's why you have every NHL sportscaster right now who's talking about their 4-leg parlay bets, in terms of how the Leafs were going to do, unfortunately.
Are they going to win the next one? You're Canadian.
I am Canadian.
I'm Canadian too.
I am a long-suffering Calgary Flames fan, so
okay.
I don't enjoy the playoffs. I watch other teams enjoy themselves.
Okay, all right.
But the interesting thing is always getting to see what gets built on top of these speculative markets. Right now, internet capital markets is the meme that's sweeping, everybody's opportunities. Is what does it mean to take as many of these things and put them into on-chain permissionless markets to get easier access to capital, to be able to take a loan regardless of your credit score, and just to have the opportunity in order to invest, wherever you are. And that will go to wherever there's the least amount of friction, wherever there's the most amount of support possible. And right now that's Solana. I think there's a lot of other chains that are doing this as well. I'm not meaning that as a maxi by any way, but I think we're seeing it that there is a significant allocation right now that's going towards how can people be active on Sol.
That's all the time we have at the desk. Thank you so much for joining us. It was a pleasure, and we hope you enjoyed your time at Consensus.
I am always happy to be here. Thank you again for having me. It's wonderful.
Thanks for coming.
That was Bonk core contributor Nam. All right, will Drake be at Consensus? We've been asking this for the past 3 days. We are coming to an end. There's still been no sign of Drake. We're in his hometown,
you haven't seen
though.
him?
I haven't seen him yet. Have you seen him?
He was just here. He was just around here somewhere.
Oh, well,
You didn't see him?
I mean, we better get on Myriad
You might have
Markets.
just missed him. I don't know.
All right. Let's take a look at what people on Myriad Markets think. It looks like the majority of folks think that Drake is not going to be at Consensus. I mean, it's already 4:20 p.m. We haven't seen him, but there are still some minutes left. So if you want to make a bet on Myriad Markets, go to myriad.markets. You can bet some points. This is just for fun. And make a prediction on if Drake will be here. All right, let's get to our next conversation now. 3iQ was among the first asset managers in North America to be to bring regulated crypto products to the public markets, launching publicly traded Bitcoin and Ether funds right here in Canada. Joining us now is 3iQ CEO Pascal St. Jean. Pascal, welcome.
Thank you so much for having me.
Thank you for being here, and thank you for staying. So late on a Friday, it doesn't always happen, but it looks like we still have a pretty big crowd here at Consensus. Talk to us about some of the highlights from the past 3 days.
I mean, we were so excited last year when we got the sneak peek that it was coming to our hometown of Toronto here. We were getting ready. And I think a lot of people were surprised to see the outcome here in Toronto. It is a global city, it's a global hub. Crypto lives and breathes here in Canada, and I think we're seeing it in the crowd. So for us, the highlights has really been, I think, the breakthroughs that we're seeing this year with, of course, the US opening up, Clarity coming to Canada as well. So of course, yes, we were one of the first, but things were a little bit on ice for a while in terms of like, yes, Bitcoin and Ethereum launched. We got staking launched a few years ago, but after that, we were like really working hard on what's coming up next. And all of a sudden, 2025 comes along, and it's gangbusters in North America. So we're busy, losing my voice, but we're excited.
Yeah, well, just like that intro I just stumbled through, I mentioned that 3IQ launched one of the earliest publicly traded Bitcoin funds. You were alluding a little bit there to the evolution since then, but talk to us a little bit more about that, right? Canada used to be ahead of the United States when it came to a lot of these products, and now we're seeing a little bit of a shift there. Talk to me about what that means for you and how you're looking at the evolving regulatory landscape.
Yeah. So for us, really, again, 3IQ is the pioneer in pushing for that regulation. And it was always against exemptive relief. So basically, it's taking one asset at a time and working with the regulators to launch those. It's not a sustainable long-term plan, right? So you need to have a framework, which we've been working on with the regulators in Canada for several years. And we finally got that clarity a few months ago. I think we're getting ready as well in Canada because we're seeing what's happening in the US. So we're excited. The reality for 3IQ is our mission is to grow the space. It's not about just growing Canada and hoping that no one else opens up. So we knew that at some point the US market was going to open up the way we foresee it happening this year. We're excited for that. It just means other jurisdictions are going to come in, which means more institutional adoption, which is good for business for everyone. What it means for us, though, is focusing on innovation, focusing on working with the large institutions here in Canada, because all of a sudden now the big players are starting to call us to say, how do we enter this space, which is exciting. But it also means that we continue our mission of helping to bring innovation and to help grow the space through different things beyond ETFs. So 3IQ is involved in many more things now on a global scale because our mission is to bring sort of that institutional flair.
Can you give some examples of the products you're working on?
Yeah, so it's products, but it's also 3 divisions. So ETFs is still a big part of that. And so now we have Clarity. We launched SOLQ, our Solana staked ETF, which has been a huge success in the first month of trading. With that being said, we're also moving into institutional sub-advisory. And so you're going to start hearing 3IQ's name associated with some of the largest players in Canada, in the US, and globally, where we're going to be powering other people's products with our expertise around regulatory sort of frameworks, operational excellence, and innovation. So we're quite excited about that. It's been years in the making, educating and working with these counterparties, and they're all coming active this year. And the third is helping to grow the DeFi ecosystem. So we're working with a lot of the protocols to say, how can an asset manager work with these protocols to bring more liquidity and more products and more ideas of institutional caliber to, again, bring more individuals into DeFi? Because in the end, the whole game is to try to bring things on chain. If not, what's the point of this industry?
Talk to us a little bit about SOLQ. What kind of demand are you seeing? You said it's been launched for just a month. Talk to us about the demand.
Yeah, so the demand's been great. So right now we've surpassed about 170 million Canadian, so just about 120 million US. Now, we compare that to the competition and what's happened around the world. We're right now the largest in Canada by far, 10x size beyond anyone else, and one of the largest globally. So there's only an initial ETP in Europe that's larger than us, and this is within less than a month of trading. The reason being is ETF wrappers have been known as an institutional caliber wrapper. You bring that with the fees that we have and the staking providers that we partner with, like Figment and others, and all of a sudden you have a high impact retail product and a product that's ready for institutions. So right now we're seeing 50-50 the assets coming in institutions and retail.
So where does this ETF trend in crypto go? I mean, is there going to be an ETF for everything?
Is there going to
every
be?
asset, every major asset?
So look, we're seeing all these filings in the US, okay? We are the belief that the game for us is not continuing down the chain of single asset ETFs that's happened in Europe. It's not the style we want to go. For us, we believe in creating products that support the adoption. And when we talk to advisors, when we talk to the banks, and we talk to others, they're looking for diversification, which is why last year we partnered with CoinDesk, right, with the CoinDesk 20. We're working hard with the team at CoinDesk as well as the regulators to try to bring more liquid access to that vehicle in Canada. So can't reveal where it's going, But as you can
But
imagine,
not
we're
like
working
single asset after single
hard.
asset,
Yeah,
different things.
at some point,
Yeah.
going down, there may be a bit of demand, but it's not necessarily the long-term play.
What kind of conversations are you having with institutions? I want to bring the conversation back to SolQ for just a second. We just had Nam, core contributor of Bonk, at the desk. We were talking about meme coins. Do institutions look at what's going on in an ecosystem like Solana when it comes to maybe meme coins or a pumped out fund and have questions or reservations about it?
So, of course, right? So that's always a thing that you have to demystify, and you have to talk about the long-term sort of vision of these chains, right? And so when we talk, there's two types of institutions: there's allocators, and then there's the institutions who are looking to get into the space, so call it other asset managers, banks, etc. So the allocators who are already trying to deploy in the space see ETFs as a vehicle that eliminates the need for legal and compliance risk. So for example, Mubadala that came into Bitcoin recently, they've been looking at Bitcoin forever, and it used to be an investment decision and a compliance and risk decision. And compliance was like, how are we going to custody? How are we going to insure this? So once the IBIT ETF came out, it was just an investment decision. The same thing for Solana. A lot of mid-tier institutions, fund of funds, et cetera, were looking at ways to gain access to Solana. And indeed, our ETF is just a great vehicle for that. Now, in terms of this next leg of institutions, like I was saying, the banks and the other asset managers, those are questions they're asking. So 3IQ spends a lot of time educating them on the basics of the vision of each chain, as well as where things are going, including what is a validator. We assume here that everyone knows what it is. Most people still don't. So we explain the technology, we explain the ecosystem, we explain the vision, and then they get super bullish on the space.
Great. Explain to us what a validator is.
So
here we go.
That's a great question. So the way I simplify things is I first ask, let's put the sort of the on-chain sort of discussion aside. I talk about, are you bullish on cloud computing? Most people say yes. Are you bullish on AI? They're like, yes. Are you bullish on data centers? Yes. Well, a validator is just a computer in a data center that's helping to secure the protocols on chain. And they're like, oh, that makes a lot of sense. And then I got the next question is basically I say, when you buy Microsoft stock, do you diligence the whole team that manages their data centers, or you just trust that they have SOC 2 Type 2 compliance, and do you trust that they have amazing engineers that lead those cloud? They're like, yeah, we just kind of look at the business itself. Well, it's the same thing here. If we work with the best of the best cloud computing providers and validator providers, then that's the security you need to know that the chains are being built on. And when you simplify it that way, it demystifies the space so much, and you link it to things that they already understand, and the conversation moves forward.
What's the next major unlock for 3IQ as you think about your roadmap?
Yes, so there's going to be another ETF launching soon. I can't say which one.
Well, why say that?
It's a bit of a tease, isn't it?
People can read, people go to our website and see the prospectus filings. I just can't say it live, but I think people could assume what it is. That will create a fourth leg to a basket that we're trying to work with, of course, with CoinDesk. And you're going to see us coming out with some big names on the Canadian institutional side.
He's teasing us again.
I know. I need to come back.
Pascal.
I'll come back and I'll tell you what the news is when it's live.
All right, we'll definitely have you back when
Thank
that
you.
news drops. Pascal, thanks so much for joining us at the desk.
Amazing. Thank you.
Thanks for coming.
That was 3IQ CEO and President Pascal St. Jean. WOW sees a future where intelligent agents revolutionize how businesses and consumers interact in the digital space. CEO Rick Latona joins the show now for more. Hello, welcome to the desk.
Thank you. Happy to be here.
Amazing. Well, let's start with the foundation. Talk to us about WOW. How does it work?
So, I guess let me first tell you about our just core philosophy. What we're not trying to do, what a lot of these people are trying to do, we're not trying to onboard 1 billion users to Web3. I don't think they want it. I think only 2 or 3% of crypto owners have ever downloaded MetaMask or Phantom or interacted with the dApp. So instead, what we're doing is we're using AI efficiency and blockchain efficiency. We're selling Web2 products to regular companies and running that revenue through to our network of nodes and on-chain. And we're also buying Web2 companies, making them more efficient, making them more tax efficient, and lowering their expenses by using the network of nodes and blockchain and running the revenue to the nodes. So we're trying to bring 1 billion people's money into this room, not another 1 billion people.
Now, you said, and correct me if I'm misquoting you here, you said you're trying to sell Web3 products to Web2 companies or Web2 products?
Web2 products.
Web2 products.
So for example, let's take an automated social media manager, okay? A tool that will suggest posts and replies on different social media platforms. Any dentist or lawyer in any country speaking any language might want something like that, right? So our network of nodes will serve that technology, and the customer will get a message to their WhatsApp or Telegram, and they can approve the post going live or the reply going live, or they can set it to automatic. But the point is, we have a competitive advantage because if another company is selling the same type of service, let's say they have the same price point and the same features, they would have the same lifetime revenue of that customer. But if we're driving that revenue towards our nodes, which helps us sell more nodes and it helps us support our token price, we can actually afford to spend more money acquiring customers than our competitor can. And the same thing goes with like buying a small SaaS company. If we can lower their expenses, drive the revenue to the nodes, sell more nodes, drive value to the token, we have a competitive advantage. So we're using the economics of Web3 to conquer Web2.
I want to go back to what you just said. You don't think that 1 billion users want to come on chain. If you walk around the conference, most of the folks here are saying that's what they're trying to do. Why do you think that's not possible? And do you think it will ever happen?
Well, it's going to happen without them knowing it. So, like we're gonna fulfill services on chain without the users knowing that the chain is evolved. But there's not going to be 1 billion people downloading wallets and interacting with dApps. It's not ever going to happen. Sorry if I'm a little pessimistic, but I got in the internet business in 1993. I'm one of those guys that registered 1 million .com domain names when it first came out.
1 million?
Yeah. And,
you still have those?
I have some of them, but I have a lot of new ones. So I never stopped. But my point is that in the first 13 years of the web, we really had changed the world. We really did get 1 billion people using products and services. There's I think a few 100,000 people a day that interact with dApps.
What do you think's different between that time and this time? So many people like to compare them and say, we're in a time that resembles that time, but it sounds like you're saying it's much different and much smaller.
It is much different. It is much smaller. I mean, people see the numbers. The numbers look huge because the numbers are money. I mean, when you look at a market cap of a project and that project's token is money, of course the market cap is big. I mean, the actual product is money. But there's a difference between that and people actually using the services. So look, I'm not knocking what people are doing. A lot of amazing things have been built and a lot of amazing things are coming, and we want to be part of it. So like another part of my core thesis is that I can't compete with OpenAI, I can't compete with Meta and Alphabet and these big Chinese monolithic companies, right? But what I can get really good at is my team can get really good at utilizing their technologies, utilizing blockchain technologies. Like we're setting up our own Optimism superchain. It'll be permissioned. It's just going to be for running our own apps. And we'll be able to connect with Circle and be able to have payouts to and from in dollars, because there are banking on and off ramps that connect to Optimism. So we'll be running these services on chain. It just needs to be invisible to the user.
What is the advantage of decentralized AI over centralized AI? Where can it compete? Which aspects of delivery is it better?
Well, so the nodes deliver the agentic workflow, and the people who run the nodes get rewarded in WOW token, and the WOW token is supported by the revenue from the services that are performed, which means that I can essentially outsource the hosting expense and the processing expense of providing that service. So that's one huge benefit of decentralization.
It's economic scale. And
well, I mean, if you think about it, there's nothing on blockchain that's not a node. I mean, a Bitcoin miner's a node, an Ethereum validator's a node. When you connect your Web3 wallet and do a transaction, you're going through an RPC node. Someone's earning from every time that happens.
Yep.
Chainlink uses nodes to get real-world data online. Blockchain is just a bundle of nodes, and each node operator gets paid for doing what they do. So we're paying node operators for running the agentic AI stuff, for storing the data and things like that.
All right, Rick, we got to wrap, but I'm just going to ask you one question before we go. When you look at your roadmap, what's the next big unlock for you?
Well, we are almost finished with our pre-sale of the nodes. I think we only have like 600 left, and then we go to the retail phase, and 40% of every node that we sell goes directly towards acquisitions of companies. 30% goes directly towards supporting the token liquidity, both pre-TGE and post-TGE, and 30% goes to our company's growth. So I'm in the node selling business.
Rick, thanks so much for joining us. We hope you enjoyed the event.
It was great. And thank you, Sarah, the CEO of CoinDesk. You're awesome if you happen to see this.
Sarah is awesome. All right. That was WOW CEO Rick Latona. Drake is here, everyone. The moment we've all been waiting for, the moment that we have been betting points on for the last 3 days has come. Please, change the camera and let's reveal Drake, Drizzy Drake.
He's here.
Sixth God.
Of Drake.
They said he
has
wouldn't
arrived.
come, and he came. It's amazing.
Is there a proof of Drake protocol? That
I
you
think
know about,
there is.
Dan?
I think
Yeah.
there is, and it's right here. And it's
I
proof.
will say for the prediction market, guys, that we are not honoring cardboard Drake. It had to be physical human Drake to win the prediction market. So the fact is, any of you who bet no, that he wasn't showing up, you just won.
You won. I didn't know that we were getting so specific with that, but I guess
It
we
was
thought of
important for us
everything.
to make sure we were doing
I
this.
guess
yes.
we thought of everything.
We did.
All right, and now we have proof of Christine.
Christine's here.
Christine has arrived to take Drake's seat.
Does this mean that the proof of Drake, does it mean that he actually came to consensus? Does this close the prediction
Sam
market?
just explained that
We
to
just
us.
explained we failed the proof test here. There is no proof of Drake. There is proof of cardboard.
There was another prediction market, the only one that you could bet USDC against, and that was, would Bitcoin hit $110,000 by the end of consensus, and it did not.
Okay,
So
so
we're
hopefully you bet correctly if you're watching.
Yeah, we're at
Did we
103,000.
what about the other two? I think we can reveal the answers there.
No consensus bump.
Yeah.
Keith Grossman, I didn't count his exclamation
Oh,
points.
he far exceeded 20 exclamation points. I will tell you, last night he sent a tweet asking if an interrobang counted, which is the upside down exclamation point. I said no, and then he said protest with about 400 exclamation points after it. So that is a successful, yes, he did exceed.
And our last prediction market was
whether Eric Trump on stage would talk about his father and either mention my dad, my father, President Trump, or Donald Trump more than 3 times. I believe the answer was no, he did not. He focused on his work with American Bitcoin, and so that's the results of our prediction markets.
I just want to say I predicted that. We did a pre-video. Sam said that it was a bad prediction. And I said, I think he's not.
Did you take the contract?
I did not take the contract. I did not.
He did say his family was impacted in the sense that because there was so much anti-crypto sentiment, he identified with that because his family was receiving, I guess, so much vitriol from the Democrats. And so he related to crypto in that sense. So, but rather adjacent, rather indirect.
That's not dad.
Okay.
That's not dad.
That's not dad.
That's not dad. Ben, I'm just wondering, between Hotline Bling and started from the bottom, now we're here, which side of the Drake spectrum are you on? The early Drake or later Drake?
I'm definitely more like an early guy, I think.
Okay.
When he was like his most vital. Yeah.
Well, I feel like he's from Canada, you're from London. It's like a similar upbringing.
He's not like my most favorite artist, I have to say. But if I had to name a period, probably the early one.
I already put Ben on the spot one time at this desk today. And
Yeah,
Sam's
it's
done
been
it
a
again.
tough run here.
Ben's never coming back to the CoinDesk Live desk again.
But he sings some good Bowie, I hear.
I did at karaoke tonight, but
Wait,
I'm
Drake
not doing
does
it now,
or
though.
Ben does.
Ben does.
Really? What song were you doing, Ben?
Starman, I think.
Oh.
Yeah.
Give us a preview.
Starman waiting in the sky.
It's
He'd
like-
like to come and meet us, but he thinks he'd blow our minds.
Folks, that's when you know consensus is coming to an end.
Yeah,
it's just
When all you can do is sing
This is
David
when
Bowie.
the fatigue really hits, I
Yeah.
think.
Christine.
Yes. Yes.
I already said it was the year 2022,
I know.
so there we
in the year 2022, what were your favorite moments from consensus?
The year 2022.
I meant now, 2025.
Okay.
Yes,
Favorite moments from consensus. I thought the Delorean was cool. I had a chance to have at least get into the car and experience it and hear the story of how they are trying to reinvigorate the brand. Of course, Eric Trump was a favorite. I mean, he was flanked by security. We had huge security at the doors in anticipation of him coming here. It is a testament, we were saying earlier, that we didn't have any Canadian politicians at consensus.
I
but
think
we
they were
had,
invited, though.
They were
They
certainly
were invited.
Yeah.
But we had Eric Trump come in from the United States to Canada to champion crypto and American Bitcoin, his project, which is a Canadian-American collaboration.
That's true.
So that was interesting, and he made his pitch for why Canada should be the 51st state, which I thought was
He really did.
was
I wonder how that went over.
Yeah, I was backstage at Summit Stage, and Eric was speaking there, and his entourage came in. It was like a tractor of like hundreds of people, his Secret Service and all his people and his people. It was quite a sight. So that was a highlight.
It was quite an experience in person, right?
Yeah.
I mean, look, I think we can't deny their impact on this industry. And for everyone who are naysayers, I think Eric coming in at least is attempting to really learn and to be a part of the movement in ways that people probably agree with.
Absolutely.
What was your top moment?
My top moment.
I don't know if I had a top moment. I thought the show floor was vibrant. I just love seeing all the newer companies that are popping around in crypto. There's always so much interesting innovation. Spacecoin was kind of wild. I really didn't understand enough about that project, but the idea of DeepIn going to space is like a fascinating one. So I love that.
Go DeepIn.
Yeah, go DeepIn. Ben is the biggest DeepIn champion at CoinDesk, I would say. I thought our conversation with Dave Portnoy was fantastic and really interesting. I think he converted a lot of people to like him that may not have. Well,
he's rather a charming fellow.
But he's also like honest about how he does it, and I think people respect that.
Yeah.
Yeah.
I want to stick on the DeepIn thing for just a second, Ben. I spoke to Frank Mong, CEO of Helium, on stage and here at the desk.
COO of Helium, just so you know.
COO. I think I said COO, but I'm
I
blurring my letters.
It's Friday
here.
afternoon. Who cares?
COO.
We had shots
Helium.
earlier.
Yeah, things are just happening here. And they really have been able to kind of break that barrier into, I'll call it the mainstream, with some of their partnerships and their user adoption. But we haven't really seen that with any other DeepIn project at that scale, right?
No, I mean, like telecom companies are now contacting Helium to make up for their lack of capacity.
Exactly.
So that doesn't get much more mainstream like that than that. You know, when you're making a phone call from a building, a high building, where they don't have proper connectivity, they call on this network, this decentralized broadband network or mobile phone network to fill in the gaps. So that's like real adoption.
But Jen, I'm going to ask you something.
Yeah.
Did you own a real player at one point?
No.
Okay. Not surprised.
Okay.
But the real player, which was one of the first MP3 players, could hold 10 songs. It was not a very advanced device. And for a couple of years, that was the way you had digital music in your pocket. It was clunky. It was hard to charge. It didn't hold much capacity.
I had like a Walkman.
A Walkman was a different version. But, but what I'm saying is it took us a while to go from the real player to the iPod.
Yep.
And I think in DeepIn, I mean, Ben, I think you probably agree, we are still at that early, almost hobbyist layer of DeepIn other than Helium. I can't imagine we're not getting there.
I think we're definitely getting one interesting data point, maybe a bit insidery, but there's a conference called DeepIn Summit, which for the last couple of years has been in New York City. And I found out this week that they're actually going to Kenya, to Mombasa, Kenya, for their next generation of event. And they're doing it because, you know, Africa, Kenya, they actually need some of this infrastructure in a way that maybe we don't here in the relatively developed West. So I think that's interesting. And I think, you know, like a lot of big technologies of the past, you might see some of the biggest developments in something like that in a place like Mombasa more than you do in downtown Toronto, you know.
I was talking to an executive in the DeepIn space at a dinner the other night, and I asked just that, you know, why are you not focusing more on developing areas? Because that's where infrastructure like this is needed. That's where the big companies are not going to build the infrastructure. These people are kind of forgotten. They're off the grid. They don't have Wi-Fi. They don't have cellular service. And so it feels like those are the places where maybe you can get your MVP set up, where you can kind of test these things.
Exactly.
But this executive said the barrier is that it's almost difficult to enter those spaces not knowing governments, not knowing the big internet companies, the big telecom companies, not having those kinds of connections. It's really hard to do business. And so the barriers are, I guess the barriers are there and even more elevated.
Yeah, I mean, it's hard to change the world, right? It's hard to build real products that people actually use. And I think that is something that the industry has actually learned over the last few years, because there's been a lot of launches, a lot of hype, a lot of tokens floating around. But when it comes to actually, you know, onboarding customers, treating them well, making sure they stay and actually give you money recurringly, it's quite a hard thing to do, and it always has been. And, you know, there's been an element of like getting rich quick, and you can't really, you know, short circuit real adoption.
I want to throw in though, and I think if we sit at this desk in 5 years, we're going to be in a world where no one ever has to think about whether they can get connectivity, for example, right? Bezos is putting satellites in space to wire the world. Starlink is already up in the skies. Both Google and Facebook are doing the same thing. They all recognize that if there is global connectivity, then they can sell more, but also then it drives down the barriers of what makes these businesses really hard. And so a place like Africa, it's not like Bezos or Elon Musk are going to worry about whether they have Wi-Fi in a village, but it allows the other companies to build on top of the network that then can say, what are the services you need? So I do think that in the same way that crypto couldn't exist without the internet being here, we're still in that moment where it's going to look very different in a few years.
I agree, and I hope that people don't get forgotten. I say so often, we have these big lofty dreams of solving the world's problems in this space, and sometimes we run the risk of just recreating those problems with a different technology. And so I hope that these areas we're talking about don't get forgotten as we get more connectivity, as these big companies look to innovate and bring new technologies in to solve the problems that have been existing for eons.
Do we think Canada is being one of the homes of blockchain? I mean,
I've been saying, I said that we're the home of Ethereum, and if you believe that Peter Todd, as HBO believes, is Satoshi Nakamoto, then this is the home of Bitcoin.
Nobody believes that, though.
Christine does, so don't ruin the dream. Yeah.
All right.
Even Peter Todd doesn't believe that.
We're all Satoshi, Ben,
That's
except
true.
Craig Wright.
That's true.
Drake is Satoshi.
The alleged home of Bitcoin, the home of Drake, the home of Ethereum. Thank you to everyone for joining us from Consensus 2025 in Toronto, Canada. It has been an absolute blast. This is the most influential event in crypto, and we will be going to Hong Kong next and then to Miami in 2026. So if you missed out this time and you followed along on the live stream and you had FOMO, please join us next year. You can go over to CoinDesk.com to get more information on where Consensus will be in 2026. Thank you to my wonderful co-hosts, Ben Schiller, Sam Ewan, Christine Lee, who also anchored the desk throughout the 3 days. We had an absolute blast. Thank you to our sponsor, MoonPay, who made this program possible. We will see you next year, everyone. Have a great weekend.
Thanks to our friends at Consensus. They do an amazing job, and hopefully we'll be back very often.
Hey, Mr. Wonderful here at Consensus 2025, and I've got to tell you, the energy is palatable. It's amazing.